we speak this morning. But again, I mean, this has been a stock that's really gone nowhere this year, and you add the losses today, it takes it down to about a 6% loss for the year, or 6% down for the year for shares, and you know, even more if you look on a year-over-year basis, Nicole.
And also at the same time, I just wanted to add in Stephen Myron's talking at Columbia University, and I wanted to just add this in because he's out pushing for steeper rate cuts, even though you know, some may disagree. But he's at Columbia saying that the data that we're seeing is understating underlying price pressures and reflecting outdated or distorted measures rather than the current economic conditions. Last but not least, let's take a look at Intel making a deal, maybe?
Yes, possibly. So this is according to a Bloomberg report. So Intel on our radar today. Those shares actually moving higher, despite the reports that they are in advanced talks to acquire this AI chip startup, Samba Nova. Because often when we see, as you know, Nicole, you've covered enough acquisitions to know that when it's the acquirer, there's often pressure on the shares, but that doesn't seem to be not the case to today. The deal reportedly could close as soon as next month, though this could be a shifting timeline. Now, Samba Nova has also reportedly signed term sheets with other potential investors, so it's got options open. But overall, the view is that Intel is getting a discount here, and that this is a much-needed AI platform for them. Samba Nova is a younger company. They were founded in 2017. They specialize in custom AI chips that compete directly with NVIDIA's accelerators. So Intel could possibly get more strength in terms of its competitive positioning as it relates to the heavyweight in the game.
All right, Diane King Hall, great to see you. Thank you so much.
You got it.
Coming up, we're going to focus on the bond market, looking at the jobs report, CPI data, Bank of Japan meeting. Plenty on the schedule this week. We have a lot to talk about. Right now, Dow's up 104. The S&P's up 23. We'll be right back here on Opening Bell.
Are you falling on me? Yeah, you are. You wanna follow me? Why you wanna fall on me? Bro, look at Pio. Oh my god.
While others recap the news, I help you read between the lines, from what's moving markets to what's next, with sharp takes and market know-how. Follow me on all social media platforms at Diane King Hall, and connect with me on LinkedIn for more.
Hey Bob. Hey Andrew. Last year, my dad had a stroke. Big shock to see this person that I've always seen as a force in our family be vulnerable.
Wait, had a stroke?
Yes. Now we're in the car together almost daily. I started to realize, what can I pick up from my dad? He's been with Schwab for a long time.
Jim, my financial consultant, I programmed that 20 years ago.
Jim's really been there to answer any questions I ever have. Makes a huge difference when you have someone that actually cares.
Live insights, actionable data, and market-moving analysis. Schwab Network connects the headlines to the why in real time.
Well, all that stuff they did in pre-market, they're trying to pull us back.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
Actually, I'm seeing something from Schwab.
Uh-oh.
Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties.
See. I do got Lulu.
Schwab, a modern
See if
approach to
Lulu
wealth
can
management.
find Lulu find some support somewhere. If not, I believe everything was gonna pull back anyway.
Here on this Monday, last full
And get
trading
cheaper.
week of this year. Frank Ross is with us, Managing Director, Senior Market Strategist at Angel Oak Capital Advisors. Thank you for being with us. Maybe a big picture here, Frank.
So you're seeing rates come down, which is always something that you want when the Fed is cutting. We do have some big news coming out this week, whether it be November CPI, November jobs report. But you also are on the tail end of the Fed cut. And globally, you've seen yield curve steepening. Just for a couple of examples here, the Japanese 20-year bond is up about 30 basis points over the last 35, 40 days. You've seen the same thing with the Aussie 20-year. It's up about 50 basis points. So this global yield steepening that we're seeing take place right now, it's leading into a 20-year Treasury auction this week that we are excited to see. They're going to reopen around 4.7, which is where they closed in November for the 20-year bond, and we're waiting to see what they execute at.
And as we see, we were just talking about the yield curve overall. You expect rates to come down or no for the 10-year? Because there's folks who think that maybe it comes down and then goes back up. And then they'll look further out for more, duration rather than saying short term. Your thoughts?
So we're buying here right now around 416, 417, coming off 420. You had a bottom less than a month ago at 399. We think it's going to stay volatile and trade within this, call it 395 to 4.5% range. But when you get these nice little upticks, we see that as a buying opportunity.
Right, and the financial spreads, does that make you want certain kinds of stocks or bonds in particular?
So for the last 2 years, we've been pounding the table on mortgage-backed securities. 2024 was a phenomenal year for the asset class, but 2025 has actually been the best return year for agency MBS since 2008. You came into this year with very wide spreads. We weren't surprised this happened, but what's great news is spreads are still wide, and so we're setting up for what could be a very positive 2026 in that asset class.
I was hearing a lot about Japan over the weekend. The yen carry trade was something that we always talked about, but it was also how that may be changing and how there may be repatriation of money back to Japan. What does the Bank of Japan meeting really mean right now? Why is this important, and what does it mean for treasuries too?
So today there's about a 90% probability that they're going to take their rate from 50 to 75
Just had to
basis
get settled
points.
in a little bit.
They went on pause during the last meeting. That was to coincide with the U.S. election and allow them to get a
Walmart is
handle
always
on
going.
what the picture is globally.
Let's see, what's
right
this?
now there's a 90% probability that they do raise interest rates, and you're right, Nicole, we do anticipate that affecting that U.S. yen carry trade somewhat.
Okay. And then when we think about just bonds overall, do bonds still belong in a portfolio? It's interesting because I actually had a guest who just didn't think they belonged, particularly treasuries, but got out and just started buying Bitcoin and gold instead. Why are bonds still such a great play?
So this has actually been 2026 resurgence of the 60-40 portfolio, 70-30, whatever it may be, but bonds absolutely still have their place in an overall well-balanced portfolio, and this year has proven that. We would just advocate that investors look outside the treasury market and find things like securitized or investment-grade corporates where there's still spread opportunity available for investors, and they're getting compensated handsomely for taking on that risk.
What do you think the range is in the 10-year bond yield in the next 6 weeks?
You know exactly what I'm talking about. And then go back into your business.
So I'm not going to put too much emphasis.
We already want to go from 398
so
to
that's why she
20
was
or
always
something,
like, don't.
What do you think is the range in the next couple of months?
I was like, why she
next
keep
couple
saying that?
of
Of
months,
course, you gotta
let's
understand,
take out the
my
remaining 2
grandmama
weeks
raised
in
me, so.
December. I don't think there's going to be as much
Her
action as
sexual
we're a week ahead of
conversation
Christmas
was
right
keep
now.
my
Most
skirt
people
down.
starting to go home and go on
And I was
vacation.
12 and I had
But
on
I do think
pants.
you're going to
So
start
yeah,
off very
yeah. It was,
strong
I had to
in
figure shit out,
January,
like
so let's
literally.
just say that
But
here's
when
the
I'm talking
best
about this,
level
I'm not saying
on
you're not
Jan
doing
1st,
anything.
2026.
That's not what I'm saying.
I think
I'm
the
saying
4 or
just
5
don't
months after
stay
that, you'll probably
where
see
you
a
are
15
in that
basis
lane.
point decrease.
You should
and then
always
you'll
be
run up around the 4 to 4 or 5.
He's talking to, girl.
Actually good intel.
Especially with your business.
You don't know who you talking to.
Frank Ross, Angel Oak Capital Advisors. Thank you.
You don't know I'm the coldest, girl. Somebody tell this woman I'm the coldest.
With us, what you need to know, because look,
There's always been some pressure, some adversity, something. Teammates just made us lose in 2K. I ain't gonna lie, we was supposed to win that game. It was so like, boy, I felt like Bobby Knight. Boy, I would have threw a chair. I would probably broke a clipboard over somebody's face.
Sometimes you know.
Look, they don't even know who Bobby Knight is, boy.
I'm Jenny Horn. We go beyond the headlines, tracking the trends, sector moves, and fundamentals shaping the market in real time. This is Schwab Network. Subscribe at schwabnetwork.com. Live from Chicago, this is Trading 360. I'm Marley Caden. We track macro forces, market trends, and company news that shape investor decisions, all with expert analysis and actionable context. From inflation data to sector rotations, earnings to policy, it's a comprehensive view of the market every trading day. Trading 360, in-depth market coverage straight from Chicago. Weekdays at 11 a.m. Eastern on Schwab Network.
Welcome back to Opening Bell. We take a look at the key levels to watch just after. We've been trading here for a few minutes, about 15 minutes, and our lead market technician, Richard Cat, is with us. And most of the sectors are higher today. We're not too far off the records, too. Your thoughts on the S&P 500 today?
Yes, Nicole, a lot to think about in these markets as our year is drawing to a close here. What we're going to be focusing on today is the S&P 500 ETF, the SPY, versus gold, the GLD ETF here. And I also threw in Bitcoin just for this comparison chart, for some food for thought here. You can see gold is approaching its high points here. Bitcoin is once again approaching its low points here. So we have our
I wanted to see if PL was going to try to catch a bounce right here.
Traditionally think of these things, the safety play is getting stronger, the risk on play keeps getting weaker here. So not really the most encouraging setup here.
But the market, as far as the market, they pulling it back after they ran up in pre-market.
More specifically, this is a 1 hour chart since
I
our
don't see
all-time
nothing
highs
green.
on October 28th. Initially, we did have some
They even liquidating data vote. They should have been leaving data vote alone.
Market session, I believe, but they quickly came back down.
I think Lulu was finna go though.
Normal trading day here, 682 to the downside on a short-term level.
I think Lulu's about to go.
That seems to be where price often solidified during our downward swings
I
here.
want to see if they're gonna break
an
out.
important area to watch out for as we go forward here. Our short-term volume profile point of control, pretty close to where price is now. 682.82 is where that one lines up here. So a break below that level could trigger a speedier move to the downside potentially. So now, if we were to look at our yearly chart here of the SPY, we can see that the trajectory has somewhat moderated here. We had this white trend line going upwards. It was a bit more steep here. Now we've kind of given back some of those gains here. The thing that we see now is more of a range-bound pattern here between the 650 level or so, 655 or so, and 690 to the highs here. We also see
I don't know how
notes
people
of
just
volume profile
don't
study
text
shows,
me.
Once again, our ranges, our trading spikes.
And then here he is now on text me.
This one is quite large. It's almost the size of our yearly point of control. That one comes in near 665 to the upside, once, right about where we are now, rather, above the previous note we mentioned. This one comes in near about 680, so some important levels to watch out
back down for this
you can also
retest.
see our short-term
Everything is pulling back today.
exponential moving average in yellow there lines up with the lower end of that.
They might make a higher high though, because they ran up a lot in pre-market.
So it seems like
and
a critical point.
they actually
want to see it break out above those old highs. things have gotten kind of stretched thin here. It seems like it could be the consolidative phase before the next leg up. We'll have to wait and see.
You know, if they can get a bounce.
All right. Well, thank you for that. Appreciate it, because as you said, a lot of folks are looking for a Santa Claus rally. They'll have to wait and see.
Like
How
around
about gold, which is near all-time highs?
So if we were to look once again with
we
our
can kind of consolidate
chart
right here and
we
get
can
a
see in this
bounce.
case, the point of control came in
And
here near
they might be able to
386
break
on our
through.
short-term basis. This was from our previous all-time highs on October 17th. We had a triangular type shape here between our two blue dashed lines. Now we have pushed to the upside here. So look for a strong break above that 400 level for further gains here. We have a very narrow, very tight upward sloping channel here in the shorter term. So when we do assess our longer term chart here, our yearly chart, it's a different picture. So in this case, our range looks more like it was right about here on the lower end between 362 and about perhaps 390, 394, around this area to the upside here. That was a gap that we had before. Price took a rather swift retreat to the downside here, but now we're holding on above that gap level. The gap has been filled. Price made a close above it. We still are not really making a big push to the upside just yet. In fact, price on pace for a Harami type candle today, where our small green candle is completely within the previous day's larger red, or previous session, excuse me, larger red candle here. The day's still quite young. That could change significantly here. Just pointing out what I see. That would often be regarded as a sign of slowing momentum, of indecision in the market here.
Market's
if we were
pulling
to
back.
move lower, our volume node here lines up with our 21-day EMA in yellow and our trend line near about 385, 386 or so. So that would be the first downside area to watch out for.
All right. Well, thank you for all of that.
And then I can't type. I can't spell.
Really appreciate it. The book there. Now it's the end of the show almost, but this is our time for our market meetup panel. We put our brains together. Alex Coffey, Kevin Hanks. And your thoughts this morning. Good morning to you both. Alex, you started off.
Yeah, I think it's going to be a very, very
all that
important
stuff on
week
Trading
to set
View.
the tone for the end of the year. It's the final full trading week of the year, Nicole. I would expect next week we would start to, thin out in terms of liquidity. So I think ultimately this week will determine what the tone is into the new year. That said, it's more of the same, Nicole, and more of the same I think is relatively positive. It's a broad-based rally today. We're bouncing back a little bit in terms of the equity market above the unchanged line. Yeah, volatility's a little bit higher, but if you look at VIX futures, they're lower, so I'm not concerned there. And if you were going to have to resolve the kind of over-concentration of these AI, NASDAQ, mega-cap names, the best way for equity markets for that to resolve was for money to come out of those names and find a new home within stocks. And it's largely what's happening, and it explains why we've seen the S&P equal weight outperform the cap weighted for quite some time now.
But they all just breaking down. I ain't gonna lie.
1.4%, Micron up 2%. We've talked about some of these names. Tesla up 4.5% with some positive comments from Dan Ives. Kevin, good morning to you again. Your thoughts on this early trade thus far?
Just breaking down.
I agree with Alex Coffey completely. This is a S&P 500, still 80 points off its all-time high, yet the S&P equal weight continues to make a new all-time high every day. And this S&P is rallying without information technology and without communication services. Also, energy lower today with lower crude oil prices. But those two key sectors of the S&P 500 being lower, yet the S&P 500 is still hanging on to positive to positive gains, but the equal weight is still powering to new all-time highs. It's literally, we're watching kind of a rotation into the other 493. And even though some of those names like Tesla is higher this morning, Nicole, this is a fascinating turn of events at the end of the trading year.
They pulling every single thing back. Well, not everything, but PL's coming back, Rigetti's coming back, Max Evans is coming back.
I'll note also that Goldman Sachs Sachs had a double downgrade of a name like TXN and
Just
put
hit
it to
my
a
finger.
sell from a buy. On the other hand, they upgraded a name like Marriott and now put a high target of $345 up from
I'm about to look at
$288. It's at $304. It's already been up 20% in the last few months.
No volume.
You know, does this sort of show what people are doing, how they're spending? So that's something that I thought was worth noting from Goldman Sachs. Final thoughts, Alex?
Yeah, one thing I think is important too, we're talking about this rotation out of tech, but don't be surprised if those names continue to put up a fight throughout that process. We know from our own Charles Schwab Stacks data that retail clients, particularly those at Schwab, are buying into those tech names when there is weakness, whether that's the NVIDIAs, the Broadcoms, the Palantirs, the Oracles. So I wouldn't be surprised that as you see a little bit of weakness in those names like we've seen in recent weeks, you actually see buyers step in and try to add exposure to those names. And so what you'll see is, you know, that might put a little bit of a floor into what these pricing pressures would be. And what would be the best way to end this year? Equal weight outperformance alongside a bounce back in big tech. That'd be a recipe for new all-time highs.
Okay. Kevin Hayes, you get the final word. Quickly.
I just think with the dollar lower, with yields lower, with crude oil lower, setting up for the great macro end of the year.
Pretty unbelievable, right? Across the board. I'm just peeking if there's anything else that I didn't mention. You know, okay, I'm going to leave it there. Alex,
what are they doing to AMD, boy?
Thank you, and thank you, friends, for being with us. Look, it looks like the Dow and S&P are having the 8th winning month in a row. We'll have to wait and see. Could we hit records between now, the end of the week, end of the year? I'm Nicole Pestalidi. Thanks for being here on the opening bell. I'll hand you 2 o'clock.
I want to see AMD breakout.
Keep it right here. Morning Trade Box.
They're going to come down lower first.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach.
Oh, sorry about that, y'all. I just like to be precise. I don't want to miss anything.
Schwab.com/coaching and start learning today.
Yeah, this is right. This area.
Welcome to Schwab Network, where real-time market coverage is expert strategy.
Good bounce right here.
With a closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on WDS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
Yeah, I think they're going to bounce right there, really.
Action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data,
Damn, Tesla.
trusted financial journalists, streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
2025 kept investors on their toes. Now, get ready for the road ahead. Join Schwab's panel of experts on December 11th for 2026 Market Outlook, your guide to the forces shaping stocks, global markets, inflation, rates, and more. Hear from experts on where the markets may be headed, spot opportunities, and see what could drive your portfolio next year. Tune in on December 11th at 7 p.m. Eastern on Schwab Network.
Morning Movers brings traders the biggest headlines to start the day, from volatile overnight swings to the earliest analyst calls. Get your watch list ready. 8 a.m. Eastern, Morning Movers, only on Schwab Network.
the New York Stock Exchange. We have plenty to hit on both here and abroad over the next hour. It's going to be a very busy week, so here is a look at what is coming up on today's show. This is the last full trading week of 2025. Are the pieces in place for another Santa Claus rally? We'll discuss that. And over the next hour, we'll have example trades for Tesla and Netflix. Netflix has been agreeing to buy Warner Brothers, but Paramount is not going away quietly. And Dan Ives believes Tesla will hit a $2 trillion market cap next year. Those stories and plenty more coming up your way today. But let's take a look at where things stand just over half an hour into trading for this fresh trading week, because we have seen some gains across the board this morning, but we are looking a little bit flat across the major indices right now. So we've got the S&P 500 just on the line to the upside at 68.32. The Nasdaq
all my favorite stocks back
one of the
right
sectors
now.
underwater today, so we're just on the line to the upside there as well. The Dow Jones are just on the unchanged line as well at 48.457 right now for the benchmark, and also the Russell 2000 is our underperformer on the day, down 0.2% off the back of the nice gains that we'd seen last week. So it feels like a very quiet
SPY was just up like 4%
what we're
though.
seeing as far as the price action today, ahead of what is going to be a very consequential, very busy week when it comes to the macro data, some central bank moves around the world as well. Let's take a look at where foreign markets stand, how they were trading over the course of the session to kickstart the week. So a split picture across Asia and Europe. We continue to see the rotation out of value in Asia, away from technology names like SoftBank into more value type stocks. So the Nikkei 225 coming off 1.3%, and the Hang Seng Index doing a similar thing off the back of some downbeat data from China. We'll get into that throughout the course of the program as to why we're seeing the internals under pressure there. The FTSE 100 though sitting up at 1%. Of course, all eyes on the Bank of England this week, and the DAX is holding up a comfortable 0.3% right now. So we are looking at a mixed picture. This is your positioning, as we mentioned, the full final trading week of the year. Let's look at the futures products, because we still have the 10-year yield coming off, but elevated there at 4.16. We've got a lot of central bank type Fed speakers this week as well. Of course, we're going to be hearing from Myron and Williams today. The US dollar index is off at 97. Obviously, we're looking at the euro. We're looking at the yen this week, given their central bank moves. Gold is catching a bit, of course, off the back of the greenback coming down. We're at 43.51 on the precious metal right now. In fact, if you look across the metal space, it is a nice rally that we're seeing in commodities today. However, crude oil is down $56 a barrel. We are continuing to track all the geopolitical tensions, and Bitcoin as a slip is below that 90 level. That's really been key. It's been sort of stuck around that level. We are down around 2.5% for cryptocurrency at levels of 88,000 and change. So this quick snapshot of what we're seeing this morning as we get up and running for trade. What's going to be a very busy week, as I mentioned. We've got the jobs data, we've got the retail sales, we've got the CPI as well. Let's get to Alex Coffey now, who joins me this morning. Very happy Monday to you, Alex. And we do have also some housing market data hitting the tape right now. What are you seeing there?
Yeah, the housing market data comes in line for December. This is the NAHB Housing Market Index. It came in at 39. This is a slight uptick from the November reading of 38, and it's in line with the estimates that Street had at 39. If you look at the last several months, really going back to September, it has been a steady uptick off of what was roughly 5-year lows. So still a long ways to go to get anywhere near multi-year highs. This would have to show significant improvement, but what you are seeing is perhaps a bottoming process for this particular indicator of the National Association of Home Builders regarding the housing market.
Okay, so coming in line there for the NAHB Housing Market Index this morning. Obviously, it's going to be a big week, a consequential one, as I mentioned, with the jobs data, the delayed jobs data. We'll get some retail sales, we'll get some inflation. So we're going to get lots of different economic updates and information that no doubt will
Well, they can't
be
do it,
factored
boy.
into the Fed's decision making, and also how the markets are, pricing in what comes next. But interestingly, I saw Jim Bianco out over the weekend saying that, with the jobs data, maybe it's about, justifying at least what they have done rather than what's going to come next, which I think is interesting to think about. But what will you be paying attention to the most this week?
Yeah, I think tomorrow morning will be really, really critical, just because you get both the retail sales and the jobs data at that same, 8:30 Eastern time, 7:30 here in Chicago, 1 hour before the open time frame. So that'll be a pretty consequential moment in time in these last 3 weeks of trade. But we were just talking about this on the opening bell with Nicole Petalides, Kevin Hinks, and I think largely as this week goes, it will set the tone into the end of the year, as you're going to have holiday disruption both next week and the final trading week of the year. Liquidity may start to dry up, and also it may just be one of those situations where, given it's been a stronger year, some of that buttoning up and maybe, taking gains or, harvesting losses, whatever it may be that, individuals and firms do, they'll try to do that this week or early next week just to get ahead of some of that. But you mentioned CPI as well. While I don't know that the inflation data is driving the narrative maybe the way it was in 2022, it's still going to be important, especially when you look at the Federal Reserve really focusing more on kind of this idea of productivity gains, less so sort of a reinflation or reflation type of a trade. So what you'll want to do is monitor some of those figures, even though we're looking back in time, to see if they're on the right track. And then I think the University of Michigan sentiment alongside the S&P Global PMI, the more soft data, will be critical as well, because where the K-shaped economy is most prevalent is soft data is really the lower half of that K, and the hard data continues to say a different story. So we'll see if that divergence continues in the sort of last week of big-time data for the year.
An interesting point, and over the last couple of months we certainly have been giving a lot more sort of credence to the soft data as well in the absence of some of the hard data. And to your point, we're going to be dealing with a huge deluge of sort of backwards looking backlog of economic data this week. But I suppose that's goes to Jim Bianco's point that it's more about justifying what the Fed has done rather than what they're going to do next, as far as the overall trend is concerned with the jobs and with the inflation. But just switching gears, as far as other potential catalysts this week, we've had a couple of names up on the screen, sort of as we get to the tail end of this earnings season too. You talked about the positioning, obviously that's key this week as we head into 2026, because you're probably not likely to do much of it as you sit and eat your turkey next week. But I'm just wondering, what else stands out to you? We're going to be hearing from some of the home builders, we're going to be hearing from Nike, FedEx, which is such a good barometer of the economy as well.
Yeah, Micron and Nike, to me, always kind of bookend the end of an earnings season. It's kind of fitting that it's falling on this week, the kind of final full trading week of the year. Micron's important because of the role it plays within this AI build-out. I think Nike is important as well. We've seen a lot of apparel retailers really outperform. I think that was a surprise of this earnings season. Now, it's typically been more value-oriented names, but we have had examples. Lulu just recently as well, with some of the leadership shakeup, had a nice performance after its report. We'll see if Nike can follow that up. As far as catalysts that haven't been discussed, maybe you get a ruling on the tariff stuff. I don't know if that would happen this week or even by the end of the year, but that's looming, so something to monitor on that front. That'll just be a headline that drops more than likely, and it will have an effect on the market one way or the other. And then another thing I'm watching that we haven't discussed yet, Sam, and I think this is best represented by the dispersion index, which is the ticker DSPX. We've really seen dispersion in the market come down. Some of this is because we're in the later parts of an earnings season, and so some of that earnings volatility has come out of individual equities. But essentially what this is measuring is the difference between the average stock in the S&P 500's volatility on its own versus the broad-based index. And so as you start to see this come down, it starts to tell you that you have a more in-sync marketplace. And so the interesting thing about this is it's kind of showing up. It's just you've lost the big tech names in many ways. And so what I'm really looking for is if the Mag 7 do bounce back this week, do you lose the other 490, the other 493? That's going to be the critical question that this market needs to ask.
Yeah, look, we've certainly been watching the markets responding with a degree of rotation, as you say, and some have been saying here that, the next story is going to be the 493, and particularly as we move into 2026, we've seen the air coming out of some of these high-flying tech names over the last week. We continue to see that rotation in some of the price action today, although we do have NVIDIA and Tesla up, individual stories moving price actions there, but and we've seen it in global equities. I think it's fair to point out, too, this rotation out of value, into value, I should say, out of some of the more growthy momentum type names too. So It's certainly an interesting trend to keep an eye on. What stands out to you outside of equities, though, right now? Obviously, we've been watching these elevated yields, too. It's a nice rally across the metal space as well. Just wondering, what stands out to you on that front, too?
Yeah, I mean, the metals moves stand out, no doubt. Hard to ignore that. But to me, it's a treasury yield story, Sam. And the reason being is that was the story of last week. You got your cut, and then you got the Fed pushback that's typical, almost sort of shaping the narrative after Jerome Powell, especially when the market interprets it one way, and maybe they want it to be interpreted another way. But what I was looking for was follow-through this week, and so far we have not gotten that. To me, this is more of the same. We're at the high end of the recent range, but until you see a significant breakout higher, to me, it's just more of the same. So I'm looking for confirmation of that, and maybe that isn't what I'm expecting. I almost expect a moderation in yields like we're getting today.
Okay, yeah, we're keeping an eye on that 10-year, and obviously it has been moving off the back of some of the Fed speak we've been getting trickling in, particularly off the back of what Goolsbee had to say. We saw the 10-year picking back up to levels that we saw just the morning before that rate cutting decision. So interesting moves. Thanks so much for getting us across what's happening in the space and some of that data as well. Things to think about as we head into this busy week, Alex. Coming up, stocks are just 1% off of the all-time high, so it's still within arm's length. Are we set for a Santa Claus rally to finish 2025? We'll discuss that and more when Morning Trade Live comes back. I'm Nicole Petalese at the New York Stock Exchange. Live interviews, market movers, and real-time coverage right from the floor. Subscribe now at sheldronfrost.com.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
Actually, I'm seeing something from Schwab.
Uh-oh. Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists with taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties. Carl.
Schwab, a modern approach to wealth management.
No politics, no spin, just the market from open to close and beyond. Streaming 24/7, any screen, anywhere at schwabnetwork.com.
We're back on Morning Trade Live. So now is down in early trading. Our 6% downgraded shares underway. The firm has a $775 price target on the stock and has a preference for small and mid-cap software names over large caps heading into next year. ServiceNow will be executing a 5-for-1 stock split after the close on Friday. It's down right now about 8% or so, 9%. So let's take a look at the winners and the losers on the session thus far. All right, we've got a couple of names here. Tesla is among the bunch, of course, off the back of Dan Ives talking about how it's going to be a big year ahead for Musk and Tesla, particularly along the autonomous lines, particularly as they do look to see that chapter beginning, according to Dan Ives. We're going to be talking about that throughout the course of the program, but the winners are in the vicinity of around 3% right now. We do have Akamai leading the pack there, up at 3.9%. ServiceNow is one of our biggest losers, as we mentioned, off the back of that story, that downgrade there, down 10% as we speak. We've also got Coinbase lower by about 5%, and Uber is down almost 4% in the trading session right now. So that's a quick look at your winners and your losers on the session so far as we kickstart this pretty busy week here. The final sort of big full trading week for 2025. So let's get to our next guest now to talk about just that. Mike Block, market strategist at Third Seven Capital. Very good morning to you, Mike. Happy Monday. Hope you're doing well. It's nice to speak to you. Look, what sets us up now into year end?
Yeah, well, now it's all about the liquidity on the tape, but there is a lot happening this week, as we've pointed out earlier. We have these jobs numbers from October and November tomorrow. We've got the CPI on Thursday. So a lot of ammunition here. A lot of people try to talk about, hey, maybe the Fed's going to be higher for longer. We have to really take a look at that unemotionally and say, what's really going to happen? Because, for better or worse, we're dealing with a lot of emotions, including what I'm calling the Trump put. We're in a situation where we are 1% off these highs, but we also have a president in the White House who wants to keep markets higher and is willing and able, it seems, to do things to make that happen, including influencing central bank policy, trade policy, regulatory policy. You can love or hate Trump, and that's not what it's about. It's about recognizing what's going to happen into year end and then beyond in 2026 and beyond that.
Okay, so obviously positioning is key this week as it's the final full trading week of the year, and you're probably not likely to do it in the next couple of weeks if you haven't done it already. So, what's the playbook here then? As we think about what the Fed's done, we think about some of the backlog of economic data that's going to be hitting the tape this week, and as we sort of look into the potential, as you say, for a bit of re-acceleration in growth come next year.
Yeah, just realize that, again, we're dealing with an administration here that's going to do everything to push asset prices higher. We can make the argument, this data point says that the Fed should stand pat and it should only cut once, and the dot plot says cut once. That's all well and good, but again, remember, there's a lot of talk who's coming next. Is it Kevin Hassett? Is it Kevin Warsh? What we do know is that the Fed is going to be more influenced by President Trump than it's been. Again, you can love that, you can hate that, but just accept that it's the reality in markets, barring a revolution of some sorts. What does that mean? On Friday, when he was interviewed by Wall Street Journal in the Oval Office, Trump was asked, where do you think rates should be? And rather than saying, well, let's step to the Fed, he said, I think they should be down near 1% or lower. Full stop. This is the environment we're dealing with. You have to ask yourself, a president saying that to the Wall Street Journal, what does that mean for asset prices? Don't fight that. Don't fight the Fed. Don't fight Trump. You want to fight Trump? Do it at the ballot boxes. Do it in the streets. I don't know. It has nothing to do with how you manage your money or the markets, and that's it.
Okay, putting Trump and the Fed aside, the other thing that the market does take cues from is this earnings growth. I mean, it's looked pretty solid throughout the course of the season. We have a couple of names that's going to be reporting this week as we sort of tail out the year and the season, hearing from some big names, Micron obviously in the memory space, as his memories rally today off the back of a lot of bullish analyst commentary, Nike, FedEx, Lennar, of course. Can markets, with all the uncertainty on the other stuff, take some cues from the earnings growth and continue to rally into year end?
Yeah, our earnings growth revisions have continued higher. Like I said, that could be because of a supportive, monetary fiscal policy. It could be that growth is really there. I'm going to say, it's the latter, especially for some of these stories like Micron. Demand for memory, demand for chips just continues, and then it becomes a matter of time and price for how these stocks are going to do. Nike has been, largely painted as a non-U.S. as a China story, as we saw last night. The Chinese economic data wasn't very good last night. So we can say to ourselves, is there decoupling from what's going on in the U.S. for a stock like Nike? It's hard to say that. Question becomes, is that price in expectations for Nike? I've been hearing about China being a drag on Nike for almost 2 years now. Okay. When you look at something like FedEx, again, a lot of Band-Aids have been ripped off there, and there's been a lot of pain felt in a stock like FedEx. You have to ask yourselves, what does this mean? Was there some uptick? We can argue that Black Friday into Cyber Monday may not have been as bad as the boo birds would have feared. So does that bode well for a company like that? One thing that I'm looking at is to say, hey, let's look at non-U.S., let's look at some of these laggards. If all asset prices are going up, then the natural thing is to buy beta, buy gold, silver's making highs. But we have to ask ourselves, is this time for everything to play catch up? And that's something that I'm thinking a lot about this week and into next year.
Right, yeah, as you say, a lot of China-exposed kind of names are going to be reporting this week from the likes of FedEx and Nike, so important to keep a tabs on, particularly as the internals look weak with inside China. Mike, we'll leave it there. We'll pick your brains in the new year. Thanks so much for that. Mike Block, strategist, Thursday at 7 at Capital. All right, well, coming up, we will get a closer look at the big picture with the team over at Charles Schwab Morning Trade Live. We'll be right back.
I'm Diane King Hall on the floor of the New York Stock Exchange. When markets react, we are live with analysis that matters. Watch now, only on SchwabNetwork.com.
How's it going?
First day, so...
Sometimes, you know...
Next. Try it again.
You could have done better.
Please.
Same goes for where you invest. Level up and invest smarter with Schwab.
Whether you're a bull or a bear, you'll want to catch the latest market action on Morning Movers with me, Diane King Hall, live from the floor of the New York Stock Exchange, only on Schwab Network.
Trading at Schwab is powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade worthy with Schwab.
The final 90 minutes of the trading day, that's when markets make fights and traders make decisions.
From earnings shocks to sector rotations, we're tracking the catalysts that move markets right into the close.
Here on the floor, I bring you real-time sentiment from traders driving the action.
And in Chicago, we break down the data, technicals, and trades you need to see before the bell rings.
Live coverage of the close every single day. This is Market on Close, live weekdays 3 p.m. Eastern, only on Schwab Network.
Back in Morning Trade Live, JP Morgan has upgraded Dollar General to overweight with a $166 price target. The firm made the upgrade after meeting with management and says the company is, quote, back on offense. Shares are up more than 75% this year. Right now, we are trading just fractionally lower. Dollar General, let's take a look across the discount retail space. It's a mixed picture, actually, a mixed bag. Five Below is down 0.7%. Dollar Tree, though, is looking perky, up over 1%. And TJX right now just fractionally higher on session. So, as I said, a little bit of a mixed split picture across discount retail this morning. Welcome back to Morning Trade Live. It's time now for the big picture. So let's welcome in the team from Charles Schwab, Cooper Howard, Director of Fixed Income Research and Strategy, Schwab Center for Financial Research, and Michelle Gibley, the Director of International Equity Research and Strategy, Schwab Center for Financial Research. Michelle, I suppose we better start with you, just because, of course, we got this data out of China overnight showing that while it does continue to operate at over a $1 trillion trade surplus, its internals look pretty weak right now. How are you and the team looking at that?
Yeah, China's economy is unbalanced. It's been the case for several years now. They've added a lot of supply in excess of demand. Consumer confidence is low and precautionary savings are high. In the reading last night, the one that really stood out to me was retail sales. It rose just 1.3% in December, the lowest ever besides during the COVID pandemic. You know, and China's government, though, as you mentioned, exports remain really strong, and government the GDP is likely to come in at 5% this year. So they're really not making any major changes to stimulus, and they're still focused on advanced manufacturing and innovation rather than making any kind of reforms to social welfare that could reduce that tendency to save. They have put in some reforms to reduce excess price competition, particularly for automobiles, but you know, Chinese stocks gains this year were really kind of disconnected from the economy, more on AI innovation. Earnings for Chinese companies are still being cut, so Chinese stocks might need a stabilization in earnings for future gains.
Okay, obviously something to watch as we move into 2026, and particularly with the big meeting at the start of the year where they sort of hammer out some of their objectives for the year. But Coop, let's just get to you, because from China to the US, obviously the two world's biggest economies with a lot of data out this week, and consequential, obviously. We've got the jobs report out tomorrow, as well as the US retail sales and then inflation down the road on Thursday. What are your expectations?
Yeah, so you know how you wake up some mornings and you say, what day is today, or it feels like Friday? That's really going to be tomorrow, because normally we get the jobs data on a Friday. Tomorrow it's going to be we get it on a Tuesday. So a little bit of a different change-up, a little bit of a unique environment. Obviously, it's all because of the government shutdown. But the expectation is that we're going to see further weakness in the labor market. So the expectation from the streets is only a gain of an additional 50,000 jobs. I think what's also going to be interesting is that we're going to get a combination of some November data as well as some October data. So really parsing through the data and looking at what's important is going to be very important. I think it's going to be a little bit of a mixed picture. The unemployment rate is expected to tick up to 4.5%. So if we do see further weakness in the labor market below that ticking down to 4.5%, or maybe fewer than the 50,000 jobs being added, I would expect that there might be a little bit of weakness in terms of yields moving lower tomorrow.
Yeah, happy Friday jobs day on Tuesday, not to mention the added confusion of which month are we talking about, because obviously we're dealing with a backlog of economic data as well, so plenty to keep tabs on this week. Hey Michelle, we've got a week packed full of central bank action as well, from the ECB to the BOJ, the BOE, throw in a few PMI reports into the mix too. What are you going to be watching out for? I mean, how consequential will all this be for global markets?
Yeah, there is a flurry of central bank meetings. It's likely to highlight the divergence between the Fed and central banks elsewhere. The Bank of England is likely to cut, but they might be close to the end of the easing cycle. The ECB is likely done cutting. The Bank of Japan is expected to hike rates. And so the Fed might be an outlier in terms of the large developed central banks and continuing to cut rates next year. So that could keep downward pressure on the dollar and boost international stock returns. In terms of the PMIs, we get the preliminary December PMIs later this week, and it could show growth remaining resilient, particularly in the Eurozone. The Eurozone composite PMI rose to the highest level in 2.5 years in November. So credit growth in Europe is also rebounding, and we could see a rebound in economic growth in Europe next year.
And Coop, just everything in mind with regards to what Michelle just laid out there, with where all these global central banks are up to with regards to their rate cycles. I mean, you've got the BOJ that's hiking. You've got now talk, at least of some speculation in the market, that the ECB could potentially even have a rate hike on the cards next year as well. I'm just wondering how you're looking at sort of global fixed income in that context, particularly when you look at the bond market here.
Yeah, so if you look at the global fixed income market, I mean, obviously 2025 was a pretty good year for most fixed income returns, but that especially applies to international as well as EM. A large part of that was because of the decline in the dollar. So if you look at total returns, they tend to be a combination of the income you receive, the price you receive, and then also on the international front, changes in the currency. So given that there was some downside on the dollar this year, that really was a positive for 2025 fixed income returns on the international front. Now, I would not be too surprised if we continue to see a positive returns for international bonds going forward, given that there is potentially more downside on the dollar. So we do think that they can be an area to focus or to pay attention to in 2026. Overall, Sam, we do have a positive view on what's happening in the fixed income markets next year. I don't necessarily think that it'll be as good as what we saw this year, but there is still some return to squeak out into 2026.
For opportunities in fixed income and potentially international as well, with, of course, that weaker dollar. And, Michelle, you've spoken at length about some of the opportunities internationally for for stocks too. So obviously something to look out for. Thanks so much for that, guys, this morning. Cooper Howard, Director of Fixed Income Research and Strategy, Schwab Center for Financial Research, and Michelle Gibley, Director of International Equity Research and Strategy, Schwab Center for Financial Research. Appreciate your time. Coming up, it's time for the morning trade, and we'll take a closer look at Tesla today. Morning trade line will be right back.
Trading at Schwab is powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more, all crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals, you can spend less time searching and more time learning. Trade brilliantly with Schwab.
Schwab Network delivers real-time market insights, live from the NYSE, NASDAQ, SIBO, and beyond. From earnings to economic data, we cover what matters as it happens. Streaming 24/7, anytime, anywhere, free on schwabnetwork.com.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth, value, income, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
You be like, is that a cigarette? Is that a cigarette? Is that a cigarette? Yeah. What kind of influence is that, bro? Is that a cigarette? Is that a cigarette? What?
From the most iconic trading floor in the world, this is Opening Bell with Nicole Petalides, live on the floor of the New York Stock Exchange. The countdown, the setups, the stories that make markets move. Minute-by-minute breakdown of the biggest headlines, earnings, global movers, just the trades that matter. As the bell hits and the markets react in real time, Opening Bell, live at the NYSE, right when it counts.
We're back on Morning Trade Line. Let's focus on Tesla. The stock is up more than 15% this year and up 120% since April. Tesla stock hitting its all-time high on December 18th last year. Shares are 3% off that mark in Monday trading. So we are on 3% right now.
I know that shit ain't real.
Oh yeah, that. Yeah. Yeah. Yeah.
Yeah, nigga, I'm pretty too.
Yeah. Yeah. Yeah, that's what I'm talking about. Yeah. We getting crazy.
You niggas got one more year. Yeah, bro, I'm not fucking with 100% with, you know, I'm not fucking with that.
Oh, Cole's talking. Oh, my bad, Cole. You okay? How's Cole doing? No, I'm not good. You know I'm not good. You know how I'm doing. Yeah. Yeah, I unblocked him. I don't know how he got blocked. That's my friend. I'm not gonna let y'all talk about Cole like that. I'm glad everybody had a good weekend and stuff.
game changer here for the company. I do want to note, though, that Morgan Stanley has different view and actually downgraded Tesla to overweight, to equal weight from overweight, saying that the high expectations around Tesla's AI narrative brought the valuation. They did raise the price target to 425, so still bullish, but a little bit more neutral than what we're
They well, Tesla had bad numbers, but Tesla still like was pulling back. Let me see what it's doing now. It was going crazy. Are they doing alright? They finna break a new high. They coming back up to retest some stuff. The market trying to bounce right here. I hate that. That's like the worst feeling in the world, bro. You get your finger slammed in the door or some shit. Especially like the car or some shit too. I ain't never broke a bone. That's some of the worst pain. Checo mute me so I can say hi to him.
Yeah, that nigga, Frost said I'm beating him, bro. He didn't turn over a new leaf. He said you got him blocked, bro.
I know, I just unblocked him.
I'm talking about,
I don't know how
he said you got him blocked, bro.
That's that. I don't know how he was blocked, but I just unblocked him.
Yeah. That's why you don't block him.
Oh, he had to come in though, probably. He said that's why you don't block. Yo, some people, I had blocked Tucky again. I just unblocked him. Sometimes people gotta get blocked. I be getting blocked too sometimes. I just told y'all my mama just blocked me. We done made content off my mama blocking me. If I could, my baby mama probably unblocked me. She would have blocked me too if she could. Why is everything?
It'll make the niggas drive all for nothing. Any excuse.
Yeah, a few of our guests have been talking about that. They've been sort of dipping their toes in, taking advantage of some of the pullback in some of these big names, your Qualcomms, etc. But we continue to see that rotation into other parts of the market. Appreciate your thoughts today, Charles. Thanks so much for that. As always, Charles Boone there, stock strategist across the trading academy. Coming up, we'll take a closer look at UK markets ahead of that expected rate cut by the Bank of England later this week. We'll give you the latest you need to know from other global markets as well.
Nah, they wanna supervise niggas. They wanna supervise niggas. They wanna supervise niggas. You know how people was abusing that shit saying my computer died all day?
I think they finna Balancing police stuff back. Follow.
You probably had some people abusing it too. Like talking about, oh, my internet out. I can't work every day. You know what I'm saying? Fix that shit. Yeah, we.
Find out what's shaping in early market action. Tech Check, Options Corner, Futures Focus, Technical Analysis, Morning News covers it all. Grab your coffee and tune in every trading day at 8 a.m. Eastern on Schwab Network.
Stay connected to a booming market. Download the Schwab Network app and stream anytime wherever you are. Chicago, this is Trading 360.
Talking about the one
I'm Marley Kane. We
Rocket
track
was talking
macro
about,
forces,
the Amazon.
market trends, and company news that shape investor decisions, all with expert analysis and actionable context. From inflation data to sector rotations, earnings to policy, it's a comprehensive view of the market every trading day. Trading 360, in-depth market coverage, straight from Chicago. Weekdays at 11 a.m. Eastern on Schwab Network.
Welcome back to Morning Trade Live. I'm Sam Berners, coming to you live from the New York Stock Exchange. So joining us now is Richard Flynn, Managing Director at Charles Schwab UK. Thanks so much for joining us today, Richard. So, the Bank of England is expected to cut rates this week. Talk us through the expectations there.
Yeah, morning, Sam. It's highly priced in. I think analysts around a 90% likelihood of rate cut this week on December the 18th is the meeting of the Bank of England. But it's by no means unanimous. I think the 9-person member committee, we're expecting a 5-4 split, as was seen last month at the last meeting of the Bank of England NEC. But it's likely to see a 25 basis point cut, which will be welcomed by the market, but possibly just as important will be tomorrow's inflation read. So you dropped from 4% to 3.75, again following the direction of the Fed took last week, showing again the kind of commonalities of the UK and the US to monetary policy.
Yeah, I was going to say, I mean, so what data
It's nice right there. Showing some life.
Later in the week, because obviously we've seen that GDP came off, that has obviously been dragged down by some of the services, construction I was looking at too. And then we have the inflation print coming out just before that decision. Is that likely to sort of move the needle in any way, or I mean, expectations, hoping for that to sort of move the trend into that meeting?
Yeah, I think the main driver is the GDP numbers from last week. Obviously, the economy contracted 0.1% in the last quarter, which was a bit of, sorry, last month, which was a bit of a surprise. I think people were expecting / hoping for a bit more growth, and that's probably moved the needle in terms of the expectations. In terms of the inflation numbers coming out tomorrow, I think it's generally food and services which people will be paying close attention to within those CPI numbers. Certainly it's Christmas party season here in London, and when you're paying more than £8 for a pint, the practical implications of these food inflation prices can be significant in the pockets of people. But definitely the FPC will be looking closely at those CPI numbers tomorrow, which will factor into their thinking, and you can expect to see some commentary around that. But generally, I would imagine that the key driver behind this potential cut will be the lack of growth, which we're all trying to find a solve for.
Richard, the price of a pint in London is always a key barometer for how things are going right now. But I'm just wondering,
Consumer sentiment in general, Sam.
Absolutely. IPOs. What's been going on in 2024 for
Not much on that one. There were 12 IPOs in the UK over the course of 2025, and the government has recognised that this has been a major issue for a while, attracting companies to the UK, but also attracting successful UK companies to move away from being private and to become public. Those 12 listings in 2025 had mixed results and didn't raise a huge amount of investment. I think in the first half of the year there was only about £180 million from 9 listings. So there has been listing reform. The government
trying, boy.
trying to put in some regulatory reform around the rules of listing.
Through
direct share ownership, particularly founder ownership. So there have been some changes. One interesting change which was announced in the budget a couple of weeks ago was a stamp duty holiday for the first 3 years for IPOs. Over here in the UK,
They might be reversing this though. This is a lot of power.
0.5%.
Especially if they push up and push out.
Of course, US is 0, and most other major markets don't charge tax to acquire shares. So I think that may have an impact. Certainly on retail investors, more retail engagement with IPOs.
Let me see if Lulu's moving with the SPY today. Oh, it ain't. It might though. Give Lulu some time. PL's undefeated. PL is undefeated, boy.
It's an uphill task for sure, but a very important one for the UK.
Overall market is down, and we are waiting to see if we're in a recession. You want to take advantage of the recession?
No, we don't. Oh no, this is looking so weak right here. This area right here is looking so weak. They're trying though, they're pushing up. There's a lot of volume right here. I just got on me.
It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Real-time access, data-driven analysis from U.S. equities to global macro matters. Schwab Network connects the dots. Watch live. Subscribe free at schwabnetwork.com.
Back on Morning Trade Live, it's a battle for Warner Brothers in the streaming space. 10 days ago, Netflix announced that it had reached a deal to acquire the Warner studio and streaming business in a $72 billion deal. But after President Trump weighed in with some antitrust concerns, Paramount launched its own $30 per share tender offer for all of Warner Brothers Discovery, totaling more than $105 billion. Now, Warner Brothers Discovery stock is up more than 20% this month as the bidding war has been playing out and heating up. So let's go inside out on this name. Joining us now is James Janowski. Thanks so much for joining us, head of Emerging Tech Consumer Choice Center. So what do you make of all of this sort of soap opera and drama that's been playing out in the media world?
Yeah, thank you for
for having me. I think that it's a fascinating development watching the battle unfold over the last week now between Netflix and now Paramount, looking to go and acquire Warner Brother Films and the broader company in the case of Paramount. This is a company in Netflix that is looking to go and continue to grow opportunity. We've seen it go and do this in live sports and gaming over the last several years, and certainly improve on its ad tech platform. And on the content creation side, Netflix has always been doing this, but really if they were to get access into some of the IP that Warner Brothers does have, I think that opens up a whole new avenue of opportunity for them. And that's why they were looking to acquire the company. Paramount saw an opportunity here to go and I think consolidate further and offer to buy the whole enchilada, if you will, and get all of Warner Brothers plus CNN and everything else. A concern that was certainly shared by the president in any sale. He wanted to see CNN go down. So very fascinating battle that we're seeing unfold here.
You know, on the Friday that we heard that Netflix could be a sort of front runner here, or at least was in the lead in this bidding war and sort of managed to get across the line, it was sort of, you felt like you were hard pressed to kind of find someone out there in the market who actually liked the sound of this, because you had the market selling off. I mean, Netflix shares were down. You had Hollywood sort of coming up with these statements that they were worried about what it would mean for their industry. And then you also had the Trump administration who had come out, and I believe the line that morning was something to the effect of, there was some speculation coming out of the White House, skepticism, I should say, getting my S words mixed up, but the skepticism coming out of the White House as well. But it sounds like there could be some opportunity here as far as what you're saying.
Yeah, absolutely. I mean, at the end of the day, like, the concerns that are there potentially on an antitrust level could be resolved through a myriad of remedies that are out there. That's something that we have yet to go and see play out. Obviously, first things first, we have to go and see which bid ultimately wins out here between the two titans kind of clashing of Netflix and Paramount. And then once we get past that, then it gets into the regulatory scrutiny of whether or not you can satisfy the concerns from the Department of Justice domestically. And really, I don't think that they're my primary concern, at least when it comes to the regulatory scrutiny. I think that you also do have to consider international regulators, certainly from like the EU, for example, that might also go and have a hand in what this outcome might look like here. So that's what I'm also keeping an eye on.
It's interesting because they haven't been going down without a fight. That is Paramount, and CEO David Ellison was here at the New York Stock Exchange about a week ago, sort of laying out his case for why this is a superior offer here. I mean, talking about $17.6 billion more cash to shareholders, saying it's bad for Hollywood, bad for consumers, and particularly when you combine the two, big streamers here. He could potentially the death of the movie business. I mean, there was a lot of reasons, and I mean, it's detailed in the letter that he sent also. How do you see this actually playing out now? I mean, what do you think the outcome of this battle is going to look like?
Yeah, it'll be a fascinating one to go and watch unfold. It's not going to go and have any resolution for at least the next 12 to 18 months, and then after the deal gets consummated, we'll still go and this is a multi-year kind of thing I think that we're going to see play out. So lots of ebbs and flows that we're going to see kind of play out in this conversation. But at the end of the day, I'm not necessarily as concerned about the threat to consumers, if you will, that Mr. Ellison was highlighting. I think that really there's an opportunity and an inflection point in the entertainment industry that Netflix is trying to kind of capitalize on, and I think that at the end of the day, that's what I'm most excited about. I do think that producers and actors and consumers alike will benefit from having a more flexible kind of environment. We've only seen Hollywood do certain types of things over recent years, and I think that if it's underneath Netflix, you can certainly go and see some more creativity get unlocked there, and even underneath Paramount as well. There's just a lot of opportunity out there if the right people are in charge for this product when it gets sold.
Okay, now I suppose the next sort of installment of this story, or this drama that's been playing out is going to be obviously the valuation when it comes to Netflix, but we just have to see how things play out over the next coming months. Thanks so much for your time, James Janowski, the head of Emerging Tech Consumer Choice Center. Appreciate your time. So let's trade it now with Tom White, host of Fast Market. So Netflix, of course, under pressure today. This battle continues for this bidding war between Paramount now for Warner Brothers. What's your example trade for Netflix this morning, Tom?
Yeah, I think on this nearly 30% pullback that we've seen from those all-time highs this summer, there's been a lot of people trying to catch this falling knife. So I looked at a strategy that takes advantage of maybe getting into the stock at a lower price point, and if it doesn't go any lower and kind of stabilizes here, you can still be profitable on this one. So I looked at a cash secured put. I went out to the January 2nd weekly cycle, so just about 18 days to expiration. And this is one of those strategies you can pick a strike or pick a level that you think the stock's going to remain above and continue to do this over and over on a weekly or monthly basis. Here, this cash secured put. So going out to that January 2nd weekly options, we're going to sell the out of the money 93 strike put. You're going to collect roughly a credit of about $2.10. Now, if the stock stays above 93 over the next 2.5 weeks, you just get to keep that $210 per put that you sold on this. Now, it does take your break even to the downside just below the 91 level, $90.90. If you collect the 210 credit, that would be, if the stock falls below 93, that would be where you'll be buying the actual shares at a discount of over 3.5% below the current share price. So you've got that cushion to the downside. It is capital intensive because if the stock does fall, you stay short that put, you're going to have to buy the shares if it's below 93 at expiration over the next 18 days. But at the same time, if you put a $90 or 90-cent bid in on the shares, you might not ever get filled on Netflix if it doesn't fall. This way, this type of strategy allows you to actually still profit if the stock stabilizes, goes higher, or even goes a little bit lower but remains above that break even of $90.90.
Okay, Netflix shares under pressure to the tune of about 1% right now, trading it at 94 and change. Thanks so much for the example trade for us today, Tom White. Really appreciate your time. And of course, that'll do it for us here on Morning Trade Live as well. I'm Sam Buzz. We've got Trading 360 coming up next with Marley Hayden. Have a great rest of your trading day.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial services. Streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
2025 kept investors on their toes. Now, get ready for the road ahead. Join Schwab's panel of experts on December 11th for 2026 Market Outlook, your guide to the forces shaping stocks, global markets, inflation, rates, and more. Hear from experts on where the markets may be headed, spot opportunities, and see what could drive your portfolio next year. Tune in on December 11th at 7 p.m. Eastern on Schwab Network.
I'm Sam Barnes, live from the New York Stock Exchange. When the market moves, we're on it, getting the reaction, the strategy, and sentiment in real time. Stream Schwab Network at schwabnetwork.com.
Good morning. We're 90 minutes into the trading day, and welcome to Trading 360. I'm Marley Caden, coming to you live from our Chicago headquarters. Here's what we have coming up for you in today's show. In our 360 Spotlight, we're going to talk to the team from Calamos to discuss the state of the market and get some bold calls they're making going into 2026. Today's disruptor is Akamai after KeyBank double upgraded shares and admitted it was wrong about the cloud stock. And then in our 360 round, we will recap the year that was for Tesla and what we should be watching for in 2026. Before we get to that and more, let's take a look at where the markets are as we're into the trading day now. The S&P trading down about 0.1% at 68.20. The Nasdaq trading about 0.25% lower, 25,134.73. On the Dow, we're trading about 0.1% lower there as well, 48,405. And the Russell 2000 down about 0.5% so far this morning, 2539.27. Taking a look at the 10-year, we are lower on the day, 10th lower, fast of 4.17. The dollar is at 97.85. Gold trading higher, up 0.5%. This will be the highest level we've seen in weeks here, 43.48.10. Crude oil is lower, more than 1% lower, 56.81 a barrel. And Bitcoin has fallen below that eventually important $90,000 threshold, down more than 3%, 3.75% this morning, 87,070. Now, I do want to get to our first story of the day, bring in our first guest, Alex Coffey, of course, co-host of Next Gen Investing, joining us here in studio to talk about a double downgrade that we're seeing this morning for Texas Instruments.
Yeah, Goldman's been putting out their 2026 outlooks, and as part of James Schneider's semiconductor outlook for 2026, Texas Instruments being double downgraded, as you mentioned, Marley, going from buy all the way to sell, so flipping the cards over, going from a price target that was once at 200 down to 156. So, as I mentioned, this is part of the 2026 outlook adjustments. They do still really like the hyperscaler artificial intelligence spending. They see that continuing to move higher. They think that drives tailwinds to digital, memory, and storage next year. And they also see a gradual industrial and automotive recovery driving cyclical tailwinds in analog. So you start reading that, it sounds pretty bullish. However, they do cite that Texas Instruments has a lackluster execution throughout this cycle, and they see the less leverage than the peers in the upcycle as its primary reasoning for the double downgrade. A little bit of pressure today, about 8.9% for the stock. You look at it compared to some of its some of their peers though that cover this name, Marley. It's pretty mixed. About a third of the analysts in the buy camp, just under a half in a hold equivalent camp, and now close to 20% in the sell equivalent rating. So when you look at that compared to some of its peers in semiconductors, I would say probably about as mixed of any name.
And it's very interesting because Texas Instruments holds an almost even larger market share in what it does than NVIDIA does. It's the largest maker of analog chips. I think when I was taking a look, it's like they have 95% of its revenue coming from semiconductors.
Yeah, of all the names, this is about as simple of a name as you'll find within this space that is seen like as a hyper-growth sector, but it has so many ties to sort of legacy technology businesses, automotive, etc. But ironically, you see a gradual industrial and automotive recovery being cited as a tailwind for analog in this note, but it's just the execution hurdles and mishaps from Texas Instruments being what they see as the setback. So maybe if they outperform on some of those things, there is the opportunity, and you can see this is a stock that's under a little bit of pressure today, but quickly recovering after the open.
Yeah, seems to be bouncing off of the initial on this, but still down about 0.7. Alex, appreciate you breaking that down for us. That's Alex Coffey, our senior equities contributor here on the network. I do want to welcome in our next guest for a more broad look at the markets. Joining us this morning, Ted Thatcher, president of Bright Lake Wealth Management. Ted, great to have you with us as always. Love to get your thoughts on how we're starting off the week. I was hoping to say either a mixed picture or a lot of green on the board, but unfortunately, I'm looking at the big board and seeing a lot of red.
Absolutely, Marley. I think the markets are just digesting more of what we saw last week. The AI trade selling off, the constant question still kind of perpetuating about whether or not these mega cap companies are going to be able to monetize in the way that keeps being discussed around this trade specifically. It's actually sort of in contrast to what we saw last week, a lot of actual positive economic data points for the consumer. The last several months, we've gotten real choppy data for the consumer. And last week we saw more job openings than expected. We saw the continuing unemployment claims tick down further. We got, of course, that relief with the Fed lowering rates. We got updated GDP expectations increased for 2026 and lower inflation expectations for 2026. And despite all that positivity, here we are looking at red this morning.
Yeah, and how much of that, you mentioned the Fed, how much of the red
I'm
that
ready
we're
for breakfast
seeing
and
and some of
lunch.
the
My
really
stomach
choppy
hurts
action
like
we
a
saw
mug.
last week as well is tied to the Fed's rate cut decision, and even more importantly, some of the other information that we got out of that meeting, both the division and the tone that we got from Powell.
Yeah, it's a real good point. The truth is the Fed has been really divided here. And it's hard to point the finger too far here. We've been flying blind when it comes to economic data because of the government shutdown. The truth is we're still working our way through that data. This week is chock full of data. We're going to get CPI updates. We're going to get retail sales for October. We're going to get retail sales for November. We're going to get updated PCE, GDP expectations, all kinds of data, consumer sentiments coming out on Friday. And so I think that it's a lack of clarity that the Fed members are constantly dealing with. They don't want to commit to a certain direction too quickly because the truth is they are right to say that it is still a little bit fuzzy despite this series of real positive points we did see last week.
Yeah, and you mentioned, the data blackout affecting the data that we're getting. This is going to be a big week for data, albeit some of it delayed data still because of the shutdown. But as far as the labor signals that we're getting a bit of a mixed picture in the labor market. We've got initial jobless claims jumping, continuing claims fell, we had job openings tick higher. What does that tell you about the true health of the consumer right now?
It's a really good question. I think when I look at the labor data that we're seeing, it is choppy. I mean, we saw 3 continuous weeks going into Thanksgiving of those initial claims sliding down. It was a real exciting thing. And then, of course, they spiked back up last week. And then, again, those continuing claims actually dropped off much more than expected. I think that the truth is, at least this data specifically, I chalk it up more to the holiday volatility. We see, of course, around the holidays, extra job openings for that holiday season, and we see, of course, at times, some of those, job releases at that point, too. So, is it going to give us a clear picture of the job market for the consumer? I don't think so. Of course, we are going to get the updated unemployment rate. I expect that to be still at 4.4%. My real hope for the consumer is really what we're going to see in terms of sentiment later this week in retail sales. What I've really had my eye on with the retail sales as it pertains to the consumer is really diving under the hood. This week we're going to get, again, more of that data, and hopefully it can inform some of that K-shaped economy discussion. Are things still as broad as they have been, or are they narrowing at all?
All right, let's talk about some of your picks that you sent over for 2026. You call Alphabet the value play of the Magnificent Seven. What do you think makes Google uniquely positioned for the next phase of the AI cycle compared to its peers?
Great question. What Google is such an interesting story this year. Everyone wanted to write off Google halfway through the year. ChatGPT, OpenAI was going to take their lunch. And of course, the opposite has been true the second half of this year. Google has been on an absolute tear. And it's because their performance of their Gemini models, of course, has taken front row seat. Their performance is outstanding. But really, the growth story for Google in 2026 centers around its entire stack. They control the stack from A to Z. They aren't entirely beholden to NVIDIA's chips like everyone else. They have GPUs, their own silicon on the lower end. They have a fantastic model in Gemini that we've already discussed. And most importantly, Marley, they have distribution. There are 230 million paid subscribers to Google One services. And of course, pretty quickly when you talk about business distribution, that marketing, that ability to get users is ultra important, and Google is absolutely primed to be able to take advantage of its user base in 2026.
And Ted, you've got another pick that I would say maybe some people want to or try to write off here as well. In Meta, you've got them as your applied AI leader pick for 2026. Why do you think that monetization and not model superiority ultimately decides who the AI winner is going to be, and how does that play into Meta being your pick?
Another good question. You know, so much of the discussion Friday and this morning is just around AI and the monetization of it. And I think Meta fits into that storyline really well. You know, of course, maybe they don't have the premier performance model. Their Llama model, of course, is open source. It's kept them competitive on the model front. But where I love Facebook in 2026 is how quickly they're going to be able to actually monetize their AI. Of course, if you think about ad targeting with their ability to monetize on that front, you've already seen higher CPMs, you've already seen better targeting. They've overcome a lot of the barriers that Apple put in place this year because of their improved targeting, because of AI. And in 2026, what I'm really excited about is actually what they're doing on their ad platform for small businesses, for large advertisers, not only to be able to target well, but to actually be able to create content and create ads within the Meta platform itself.
All right, your last pick here is Costco. You describe it as the ultimate hedge against the K-shaped economy. Tell me a bit about that thesis.
Well, of course, this K-shaped economy story has been widely publicized. You see the headlines everywhere, and it comes back to the kind of consumer that Costco serves. So, first of all, they have increased their membership pricing, which we are actually going to finally see take full effect in 2026. So we see a lot of tailwinds from the revenue there. And again, you know, obviously you think about the AI story, you think about how much upside there is. But of course, for investors, not only are we looking for upside, but we're also looking for downside protection. And because average Costco member families are dual income, they make over $125,000 a year, and because of the pricing changes that Costco has made, I think they're really poised to serve the upper end of that K-shaped economy in a much more strategic way than maybe some of the other retail names that you see in the space.
Well, Ted, we appreciate you joining us this morning to walk us through some of your picks for 2026. That's Ted Thatcher, president of Bright Lake Wealth Management. And we've got plenty more coming for you today on Trading 360. Next, we've got the big three stocks, 3 charts, and 3 trades. Rick Ducat will walk us through the technicals. Scott Bauer will take us through the trades for Boeing, ServiceNow, and Uber. That's next on Trading 360 on Schwab Network.
Iconic trading floor in the world. This is Opening Bell with Nicole Petalides, live on the floor of the New York Stock Exchange. The countdown, the setups, the stories that make markets move. Minute-by-minute breakdown of the biggest headlines, earnings, and global movers. Just the trades that matter. As the bell hits and the markets react in real time, Opening Bell, live at the NYSE, right when it counts.
Believe me, when it comes to investing, you'll love Carl's Way. Take a left here, please. But there's a... Carl's Way is the best way.
Is it? At Schwab, how I choose to invest is up to me.
Exactly. I can invest and trade on my own.
Yes, and I let them manage some investments for me, too.
Let's move on, shall we? No can do.
I'll get out here.
Where are you going?
Schwab. Schwab, a modern approach to wealth management.
Welcome back to Trading 360. I'm Marley Caden. It's time now for the big three. 3 stocks, 3 charts, and 3 trades. Rick Ducat will take us through the charts, and here to take us through the trades is Scott Bauer, the CEO of Prosper Trading Academy. Great to have you both with us. Scott, I'd love to start with a big picture thought on this market action that we're seeing to start the week. As I'm checking the board, we are still entirely in the red.
Yeah, you guys were just discussing all of the eco data coming out, and there's still so much more. And I think there's just a very cautionary kind of overhang on the market right now that, the data is not going to be very good, that the Fed is lowering rates even though there's that dissension, because maybe under the hood things aren't so great. So I think that's why we're seeing that caution. We are finally seeing a little bit of a VIX pop today, which we didn't see last week really at all. So we'll have to see what plays out here.
All right, then let's move to your first pick for the big three here. We're talking about Boeing. They're having a good year so far. Did just see some headlines about a delay of Air Force One again, but doesn't seem to be weighing on the stock too much today. Walk us through your pick on Boeing, and is this a long-term or short-term play?
This is more short-term. And if you look at the charts technically, we're up to kind of that 50 and the 200-day moving average area, and at an area where the 50 is coming down to cross over the 200, which typically is a very bearish type of sentiment. So if the stock rallies another $1 or so, we're going to be right there. So I'm looking at that as some serious resistance, at least short-term. Now, option implied volatility is very, very inexpensive. So I want to buy some time with that. So what I am doing is I am buying a calendar put spread. So I'm selling next week's 195 put. I'm just going out to the end of January, buying that 195 put, paying $2 for that.
All right, Rick, so as you look at the charts and the technicals here, are you also seeing the bearish signals or potentially bearish sentiment here for Boeing?
Well, for a while it seemed like Boeing just couldn't stay out of the headlines in the wrong way. It does seem like things have improved here, but we have had a bit of a decline. If we were to look more closely at that area 195, I have the same area highlighted right here, 195.51 to be very specific. That's because that was the low point that we had after our recent gap to the upside that we saw right here. So now we have our short-term trend line in blue that has been broken. Our medium-term, I guess you could say longer-term, relatively speaking, trend line is still in play here, kind of going across the highs as best we can, like a line of best fit or so. We are on the verge of breaking out to the upside from that line. Haven't really done so just yet, but once we do start getting a little bit higher, the 212 level really stands out. This was a repeated low point that we saw here pretty consistently. That was also the low point before we had our gap down. That was the start of our more severe decline here. We also have a matching ceiling right about here near 226, pretty far away, not tested as many times, but that would be another upside area to be on the lookout for if things do start to improve. So if we were to look at our moving averages that we follow, everything's kind of clustered together right here between 198 to 205 or so, 204. Sideways moving averages that are grouped together suggest either directionless trading because it's range bound, or because things have been chopping around in a way that the moving averages can't really find a direction. Kind of a mix of these two situations here coming in. But regardless, price is starting to move above all three of them at this point, but we haven't really seen a strong breakout, especially today. We're kind of just rather listless trading. Notice as well that RSI was rejected at our longer-term trend line here. Green trend line broken above the 50 midline, but not making a strong breakout like you might hope if you were bullish. Finally, volume profile. We can see that our volume nodes that we have to the upside, our point of control comes in right there near about 215 or so, our thick red line. That would be the potential congestion area to be on the lookout for to the upside. Notice as well things really start to drop off here when we get below our moving averages and below that 200 level once again.
Yeah, right now trading at 204.90, and on the year so far in the last 12 months, Boeing shares up about 20%. Your next pick here is ServiceNow. Now they are under quite a bit of pressure today. They have their stock split that's happening. They're down about almost 11% so far this morning. Walk us through ServiceNow.
First off, ServiceNow is an amazing company. It's a company that I want to own for the long term. So this is a little bit of a trade, and if it winds up being this way, I don't mind owning it for the long term. So it's down on the news that they may be buying a cybersecurity company for about $7 billion. And I love these types of speculative events when they happen in the marketplace here. When we see some news come out, a stock drops for one reason or another. In this case, you know, the street is obviously not liking this potential transaction. I love it. So I am selling a put spread here. I'm just selling a simple put spread going out to next week. I'm selling the 780, 770 put spread, $10 wide. I'm going to collect about $5, maybe even get a little bit more than that right now because the stock dropped a little bit further. At worst case, I own NOW at 765 at the end of next week if this thing goes down lower. If not, it's a pretty hefty premium that I'm collecting here.
All right, Rick, so as we take a look at ServiceNow, you know, we've got obviously some big gaps up here in this April area around Tariff Day and the recovery there, and now we're seeing a downward sloping channel. You know, walk us through some of the technical observations you're making.
Right, so the trade in question, we'd be looking for price to stay above this general area here. That's the same level, once again, that I had highlighted because we had another gap back here. That was the high point before we had our gap up on earnings. And it also, you could group it together with our worst close that we saw from back here near 721. That gives you this supportive zone to consider. It's a pretty big zone here at this point, but that would be some areas of interest to the downside. But for now, 776.63 is where that gap came in that I mentioned earlier at our dark green line here. So that would be a point that the bulls would be probably pretty interested in holding on to. If we were to keep moving to the upside, another gap here, 857.91, was where things kind of ended here for our small uptrend. That's where we had our gap form here. So now you could also say we have a downward sloping trend line. You could put it across the lows and extrapolate that to give some idea where you might find further support. Certainly not a guarantee it's going to work out, but one tool you can use to try to project potential support here. Now, when we look at our moving averages in this case here, we were seeing them clustered together in this phase, but now you can see that they're starting to diverge a little bit farther apart from each other, prices below all three. So look for price, if you had a more bullish outlook, to start crossing back above those and starting to drag the trajectory of the slope of those lines from negative to positive once more. One thing as well, even though we did break through our trend line, our green trend line, we are not in the oversold area just yet either. So that would be something kind of interesting if we did manage to remain above this gap area and not slip into that oversold area. That would be more of a positive sign for the bulls as well. Finally, we can look at our volume profile study to identify some important trading areas. We have slipped below the closest one to current price right here near about 820. So that would be the point where the bulls would want to recapture and move back above that line. Notice here as well, -1 standard deviation channel, 1 standard deviation below our teal linear regression line there. That's about where we've stabilized so far today. So even more emphasis on that level near 776, 777, as a potential support area.
Yeah, and ServiceNow year-to-date trading down about 27%, of course more than 10% coming off of that news of the potential acquisition dragging them down today. Let's move to your last pick here. We're talking about a company everybody knows because most of us use it on a near daily basis, at least if you live in a major city. We're talking about Uber here. Scott, are you bullish or bearish on Uber?
I'm moderately bullish. I am moderately bullish. The stock just dropped below its 200-day moving average, which has been support in the past. So moderately bullish here. Option implied volatility, just like in Boeing, is really inexpensive. It is very, very cheap. So I am buying some time. I'm buying a diagonal call spread. So I am selling next week's expiration 85 strike call. I'm going to go out to just regular January expiration and buy the 82.5 strike call. So moderately bullish diagonal call spread, buying me some time. I can pay just over $2 for that. And I'm just looking for a bit of a recovery in Uber here. I know it dipped below that 200, but I think it's going to grab it pretty quickly and then bounce up from there.
All right, Rick, so as we look at the technicals for Uber, and Uber also entering this robo-taxi space now in Dubai, so another potential driver for them in terms of growth possibilities. But I do see some crossing lines here, so walk us through the technicals on that, because this is not something we've seen on a chart so far.
Right, recent deal with Lucid to supply those autonomous driving vehicles here. But 82, our green line, that's about, we've bottomed out twice recently here. If you were to backtrack, this was once again an important area because we had this high point here. So we've tested this level many times since then. We've held on so far. If we were to move lower, the 77 level, our lighter green line here, that was around where we topped out repeatedly here, and then retested it after the breakout to the upside. So again, a bit of a wider span between these 2 points here, but those are what sticks out in terms of horizontal levels to consider. Our trend, our blue line here, has kind of progressed into a steeper trend line with our white line here. So we have the acceleration of the move to the downside, but we have stabilized, as I said, for now near that 82 level. So remains to be seen if we can recover and get our act together and surge here to the upside. Moving averages, our purple 252-day near 85.41 is our closest. That's our longest term moving average and thus our most significant. To break back above if we were to move beyond it here, the longer term the moving average, the more significant it is in terms of crossovers. RSI still moving lower, below the 50 midline, downward trend line still in play, but perhaps a bit of a bullish divergence here. Notice price is making a lower close, RSI is actually above that level, so perhaps not quite as bad as it seems here. Could be some steam building up in this nail. Volume profile shows we are on the verge of slipping below our node that we are nearest to. That's kind of centered around the 84 level. If we were to move further, the point of control, this heavy area, around 90.65, that's the mark that breaks up.
And we're hovering right here, that bottom you highlighted a couple times at 82.81 right now for this one. Now, Scott, just as we were walking through your big three, the markets did a bit of a turn. The NASDAQ and the S&P higher, the Dow basically at the unchanged line. You know, I'd love to know with all the data that we've got coming out this week, what you think has the biggest potential to be a catalyst.
Boy, we get the big jobs number tomorrow, and I do think unless it's a massive outlier, we'll probably just take it and say, okay, this is a little piece of the puzzle that's been missing, but we've got to move on from there. We do have some earnings left. There's some AI overhang, especially last week, big tech with Oracle and AVGO, and I think the market's looking for anything it can to kind of hang its hat on to maybe put some of that at ease. One of the good things that came out of last week and the last several weeks is a little bit of the broadening of some of the rally that's been going on. We'll see if that can continue. But I think these data points, we have to be able to just say, hey, there's a lot of catch-up here, not to get ahead of our skis here. So I would actually like over this week here to see things calm down a little bit and then set the stage, set a nice floor up for the last week or two of the year to maybe get that Santa Claus rally.
Scott, we appreciate you being with us this morning. For the big three, that's Scott Bowers, CEO of Prosper Trading Academy, and of course, Rick Ducat, our lead market technician, here for breaking down the technicals for us. Coming up next, we're going to spotlight the current state of the market and get some bold calls for 2026. Trading 360 will be right back.
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Morning movers, be the first to find out what's shaping early market action. Tech Check, Options Corner, Futures Focus, Technical Analysis. Morning movers covers it all. Grab your coffee and tune in every trading day at 8 a.m. Eastern, only on Schwab Network.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Kick off the morning with the data and the decisions moving markets. Morning Trade Live breaks down the macro moves driving the price action, from Fed policy to global growth to inflation prints and geopolitical risk. Smart, fast and always live from Wall Street to your screen. Morning Trade Live, where the markets meet the macro, weekdays at 10 a.m. Eastern on Schwab Network. Stay connected to what moves the market. Download the Schwab Network app and stream anytime wherever you are.
Welcome back to Trading 360. I'm Marley Caden, live at our Chicago headquarters. It's time to spotlight the state of the market and look ahead to 2026. Joining us now in studio is Michael Grant, the head of Long Short Strategies, PM at Calamos Phineas, and the Long Short Mutual Fund. They have their CPLFX at Calamos. Michael, thank you for being in studio with us. We love having guests in here with us. Now, I was walking through your recent note about 2026, and you framed the year as less mania and more maturity. What specifically tells you that the market is moving away from this hype phase that we've been in and into something that focuses more on fundamentals?
So I think the word mania is very important. There's a tendency to use the word bubble in speaking about AI today, and I think that's wrong because bubbles have a boom-bust connotation with the economy. The economy looks like it's still going to be resilient this year. But the mania is going to unfold very slowly, and we think the AI infrastructure theme will be very gradually but surely derated next year. And that's going to allow an opportunity for investors to broaden into other parts of the economy that will benefit from or other parts of the stock market to benefit from a resilient economy.
And what do you think is the clearest signal right now that we've moved past this speculative excess, for lack of a better word, and into what could be a more disciplined market?
Well, first of all, several of the key leaders like NVIDIA and Microsoft are not going up, even though a business like NVIDIA dramatically increased its fundamental outlook. So that's an important data point. And then, of course, the reaction to Oracle is very intriguing because investors are beginning to realize that this spending cycle could be open-ended. And as the market shifts towards funding this with more debt and less cash, that is a real constraint. And not all businesses will be able to spend at this pace. And I think you're seeing this theme emerge in the stock action.
So if this is a maturity phase, does this mean that we're going to see lower returns overall, or is this just now a different or new playbook for generating alpha?
I think it's a new playbook. And our investment lives have been dominated by this outperformance of a small group of mega cap stocks. And increasingly, it's looking like those businesses are changing their color. They're becoming more capital intensive, less cash flow generative, and historically, that is a problem for equity investors. So I think there's a very good argument to say, even if AI unfolds according to the optimists, the stock prices will no longer win like they've won in the last 50 years. And that implies investors need to shift their attention elsewhere.
So if investors are shifting, and as you mentioned, you think AI is moving into this infrastructure space, that's going to be the focus. Where do you think investors are underestimating any of this infrastructure play? Is it the length or how expensive the build-out really is?
Well, unfortunately, the answer is very obvious. We still have no mass market product to fund any of this. What the companies have is not defensible. There's no moat around it. And therefore the ROI is very much unknown. If we take the hyperscaler infrastructure spending that has happened and is planned, it implies $600 billion of amortization expense just by these hyperscalers. That's larger than what those companies earn today. so we have to go back to the fundamental question, how will this be used, and how profitable will it be? And it's not that this technology is not transformative, but the key qualities of it, it is generic and it's non-proprietary. And historically, to scale a commercial opportunity, you start with something that's complex and proprietary, and that's not what we're seeing in the core technology.
So when we see this shift into infrastructure, who pays that bill first? Is it the hyperscalers? Are governments paying? Is it enterprises?
So far it's the hyperscalers. And these hyperscalers are the most profitable cash-generative corporate entities on the planet. And this is why the step up in spending this year was possible, and why it could happen so fast, because the cash was just in the bank. Going forward, it's going to have to be financed, either equity financed or debt financed. And that's just a harder constraint to keep all of this spending going forward.
And the other big theme that we talked about for most of the year in AI, and whether you want to include the word bubble in that conversation, is all the geopolitical risks that we've been seeing this year. And we've had geopolitics matter so much more than I think we've ever seen, especially the last couple months here. How should investors be thinking about them as it relates to their investments, particularly in the international space, because we have seen outperformance there?
So that's a great question, because everyone is very exposed to these mega cats and this AI narrative. And it's a source of anxiety, because we've never seen such a small group of stocks dominate global portfolios. So the natural inclination is to look to diversify. Do I go abroad, internationally, for example? I think that's very hard. I think that the geopolitical world that we're now in, which has become a patient containment of China, implies that globalization is closing, not opening. And that makes it very hard for the non-U.S. economies to work well. The hard reality is that it's the U.S. economy that's doing well. It's the U.S. economy that is reflating. There are possible winners from that abroad, because reflation benefits cyclical value opportunities. But the point is that even abroad, these opportunities are led by American reflation. If a problem there emerged, the rest of the world's economies are far too precarious to be a genuine source of diversification. So I think if anything really happens to the U.S. market, and the mega caps in particular, there will be no hiding, even internationally.
Michael, we appreciate you joining us in studio today. Really interesting insight there. We really appreciate your insight on that one. That is Michael Grant from Calamos. Thanks again for joining us here in our Chicago headquarters. Coming up next, we've got the Disruptors. Alex Coffey joins us to take a look at Akamai, which was double upgraded over at KeyBank. He'll break down the call and give us an example trade next on Trading 360.
The Schwab Network.
Tune in 24 hours a day, 7 days a week on SchwabNetwork.com
and on all your favorite streaming services. Schwab Network.
Available anytime, anywhere, on any device for free.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you.
Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages, oscillators, and much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Welcome back to Trading 360. I'm Marley Caden here in our Chicago headquarters. Let's head up to the New York Stock Exchange for a check on the markets. Welcome in Nicole Petalides, host of Opening Bell and the Watch List. Good morning to you, Nicole. We're 2 hours into the trading day. I was hoping to ask you about the turnaround we had seen just about 15 minutes ago, but we've given up those gains and we're firmly back in the red this morning.
Yeah, we do have some red arrows here today. There's a lot of things going on all at the same time. Of course, it was looking like the 8th winning month in a row for the Dow and the S&P, and we're still not that far off from record highs. Right now, you can see that the S&P is down 0.1%. But what's weighing on the market overall are names in the energy and materials category, and that's where energy in particular is seeing the worst bunch. And you do have some of the Mag 7 names like Microsoft, Apple, and Google with down arrows, so that's worth noting. Names like Exxon is down 1.5%. Chevron's also lower, just to give you some of those energy type names. Also, we're looking at what's going on. You have Stephen Myron, in fact, he's here now talking about the Fed should be cutting 50 basis points, more concerned about thinking that maybe some of the data really is showing some softness, and so he's been in the 50 basis point camp, as you know. We've had Tesla with some positive news. I'll go through that in a moment. Other names that have been in the news and some good news overall. We've had some up arrows for some of the some of the names that are in the tech sector, for example, are seeing up arrows like NVIDIA. So that's a winner there. That is the big picture, I would say. And Micron got a nice call from Wedbush. That's up 2.5% at one point today. And the guests are still feeling like we're moving to up arrows rather than selling off.
Yeah, and you mentioned Tesla. They're a top performer on the S&P 500 right now, following a really bullish note from Dan Ives, who's been a long-time bull. But this is one of his biggest calls I think he's made to date on Tesla. Can you walk us through what he said?
It comes from a successful robo-taxi launch in Austin, Texas, and saying that this could be a monster year. He sees a monster year in 2026 because of this successful robo-taxi launch. The full self-driving adoption, also accelerating cybercab deployment, and that will help to move Tesla into the next realm when it comes to AI. In fact, he sees $2 trillion market cap. His bull case is $3 trillion, which would be an $800 price target if he gets the bull case there. At $477 today, a $600 target, which is sort of his base case, and outperform rating, that shows you upside potential, and those would be some new highs overall. Expects that we'll see this in over 30 cities next year, and that as we advance in the AI revolution, this deployment of robo-taxis is a game changer for the company, and that this is the next phase of Tesla, and that this will be a pivotal year. So this accelerated rollout here of full self-driving and just the autonomous vehicles and everything that goes along with it is just optimal, and he sees that $3 trillion market cap. I mean, I'll also note we're talking a lot about Elon Musk's SpaceX and the likelihood that we will see an IPO next year. And, will Elon Musk be regarded, I'm throwing this in as a question, really highly? Everybody wants to be in the SpaceX IPO. Is he going to be back to that big visionary genius type? I know a lot of folks have gone back and forth on sentiment on Elon Musk, but is this the year of Elon Musk? And just, the genius and visionary that he is, and they want to buy everything. They want SpaceX, they want Tesla, they want everything Elon Musk. So we'll have to see. But in his words, Dan Ives is just saying this is the golden goose, and also that he sees a monster year ahead for Tesla. Right?
The answer to that question you just posed, Nicole, is whether or not Tesla and SpaceX will be successful next year, too. So I wish I had a crystal ball to answer it for us. That's Nicole Petalides. Thank you for walking us through Dan Ives' latest call on Tesla. And now it's time for for the Disruptors. Alex Coffey is back with today's company. We're talking about Akamai. KeyBank double upgraded the shares this morning to overweight from underweight. They also apologize for being wrong on this one.
Yeah, this is analyst Jackson Ader over at KeyBank. As you mentioned, the double upgrade to overweight from underweight. Again, a part of one of those 2026 sort of sector refreshes as they get their outlook out to the street ahead of the new year. KeyBank has a preference for small and mid-cap software over large caps heading into next year. And as you mentioned, admitting to being wrong on Akamai. The company's revenue has the opportunity, they say, to accelerate as more of the business shifts towards compute. This being told to investors within the research note. Interestingly enough, if that were to happen, it would snap what looks like to be a streak of sort of lackluster sideways revenue growth over the last several years, kind of stuck in the 4 or 5% range. If they could really upgrade that for next year, that would do a lot for investors here. But joining the majority of analysts, or creating a majority of analysts, I should say, is now you have 14 of the, let's call it, 26 analysts compiled by Bloomberg. That's 53.8% in the buy equivalent rating. 9, or about a third of the analysts in the hold camp, and there is still 3 sells, including JP Morgan, Goldman Sachs, and Morgan Stanley, but those have not been updated since early November. So we'll see if any of those soften their stance into the new year as well. But all in all, a nice move here today, bucking the overall kind of tech weakness today, as it's up 1.5%.
Yeah, they are bucking it. When you mentioned some of the analyst coverage here, 21 analysts have revised their earnings upward for the upcoming pyramid. Price targets are between $69 and $135, so puts this new move, on the upper end. They were the street low, though, before this upgrade to $115. They were at $66 at KeyBank. So, Alex, as we look at Akamai Technologies to try to do an example trade here, how might we approach this, knowing that they're really underperforming the market, year to date, down almost 9%, on the year down more than 12%?
Yeah, whenever kind of they're tied to news headlines like this or a story, I try to tie the trade to that narrative. So if you buy into Jackson over at KeyBank's narrative around this particular stock, and you feel, hey, it has a lot of potential now because, hey, maybe we were wrong, and you talked about the underperformance, and so the double upgrade, the really aggressive adjustment in the price target, I looked at an example trade that carries risk definition, but goes out to the middle of January, the January 16th monthly cycle. That's that big leap expirations, typically one of the busiest expirations of the year, and it's the 90 call, just buying a call. And so this strategy, maybe not the highest probability of success oftentimes, but if you have a bullish or bearish outlook, if you have a bullish outlook in the case of the call, and you're looking for a move as a result of that, this is a strategy that does not have capped upside. So it has the positive of having capped downside. You know your risk going in, but if you did get that move, say quickly to 115, where this price target is, although they do typically carry a 12-month price target, but say things really shifted over the next month and you saw a big move, it wouldn't be capped out. Now, you will need help from the market. You'll need about a $6 move to just break even. Say you spent $3 on this, that would be $300 in risk, but your break even, you add that debit to the long call strike, which is 90. So in this case, that's a 93 break even. So you'll need help from the market by expiration, a rally, but risk definition, uncapped gains. And if you're very bullish, like this KeyBank analyst is laying out, perhaps there's a strategy that could help accomplish that if you got the move.
And right now, Akamai trading at 87.08 today, up about 1.4% on news of this double upgrade. I want to thank Alex Coffey, our senior equities contributor, for being here for our Disruptors segment. And coming up next, it's time for our 360 round. We'll continue talking about Tesla, take a look at the year that was for them. We'll recap their up and down 2025 and look ahead to 2026 when we return on Trading 360.
Trading at Schwab is powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop, with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
I'm Alex Coffey.
And I'm Jenny Horn. This is Next Gen Investing, where we track the trends shaping tomorrow's market.
From tech to energy, crypto to consumer, we focus on what's driving investor sentiment right now.
Clear analysis and forward-looking market coverage every trading day.
This is a make-or-break level for this stock. That could certainly be a short to near-term catalyst.
Next Gen Investing, 1 p.m. Eastern.
Only on Schwab Network. Dad, I have a question for you.
Sure.
When did Granddad first start investing?
Granddad had an account with Schwab before there were branches in the area. He really started with nothing. He worked hard, and after he passed away, the torch has been passed to me, and my advisor, Jennifer, she was with me with the journey, helping with the estate distribution. The 2 grandchildren, planning for their college educations. Someday it'll be their turn.
This is Fast Market, built for traders who want more than just headlines.
We walk you through trade ideas with structure, risk management, and a focus on execution.
From options to earnings to volatility plays, we bring decades of trading experience to every segment.
With real-time insight across products and sectors, we deliver what active traders need to stay ahead. Fast Market weekdays at noon Eastern, live on Schwab Network at schwabnetwork.com.
Welcome back to Trading 360. I'm Marley Caden. It's time now for our 360 round. For that, let's bring in our panel to recap the year that was for Tesla. Joining me now is Carl Brower, Executive Analyst at iccars.com, and Garrett Nelson, the Vice President and Senior Equity Analyst at CFRA Research. Carl, we'll start with you. Thoughts on Tesla's volatile year that we've seen so far, albeit it's up more than 4% today.
Yeah, the stock price versus what's going on with that company in the past 12 months is always a quandary, but we've certainly seen a lot of turbulence, as you mentioned. Everything from the sales challenges and the fact that I think it was over a year ago, October of 24, that Elon said growth would be 20 to 30% in 25 for Tesla sales. Obviously, we're not going to get anywhere near that. It's probably going to be a down year for him. To political turbulence and involvement in places like DOGE, the DOGE department, and of course increased competition from China that is really starting to dominate a lot of the global markets for electric vehicles. So a lot of ups and downs, some might argue more downs than ups for Elon and Tesla in 25.
And Garrett, Carl just hinted at, some of this disconnect we've seen between the stock price right now and some of the actual data that we've gotten from Tesla. You have a sell rating on Tesla, $325 price target on shares. What do you think the biggest disconnect is between how the stock is trading and the underlying business right now?
Yeah, thanks for having me. I agree with everything Carl said. This has been really a roller coaster type year for Tesla, but the stock is basically back to pretty much exactly where it was a year ago, trading, hovering, right at record highs. The reason why we lowered our rating to sell in September was just this increasing disconnect. So if we look at estimates for 2026 and 2027, we think consensus numbers are too high. Based on our below consensus numbers for 2027, we have Tesla trading north of 175 times our 2027 EPS estimate. Historically, the stock has traded about 112 times forward earnings, and our $325 price target is based on 120 times. So another thing, we haven't really seen the full impact of the expiration of the federal EV tax credit at the end of September. We've seen some monthly sales numbers in the U.S. Showing that Tesla's EV sales hit close to a 4-year low in November, and so we're going to get those numbers for Q4, their sales, just after the new year, and we're not really optimistic as far as what the sales numbers are going to show. So there's that in terms of a near-term challenge for the stock.
And Carl, coming back to you, I'm looking at the chart here, and a lot of the rebound that we're seeing here coincided with when Elon Musk really recommitted himself back to Tesla and stepped away from his Doge role. How much does the leadership focus and credibility still matter to Tesla's story? I was just talking to Cole Petalides about, is this the year of Elon Musk versus Tesla, and how important is he to the success of Tesla?
Elon's always been critical and a key component to the brand and the visibility that he's able to achieve with the brand, and the belief that he's got a real long-term vision for success of a company like Tesla and a lot of other companies like SpaceX. So he's key, and that's why I think his various political involvements over the past 12 months was detrimental to the stock, because if you're not a fan of Elon, it's hard to be a fan of the things he's managing, and he's so critical of that. But he does also seem to have backed away from that, as you said. He's kind of recommitted to success on the corporate side and less on the political side. And I'm hearing incredibly optimistic things from lots of analysts about SpaceX and its ability to generate power out there, free from the Earth using solar panels and launching satellites into space that would give you a lot of the power that a lot of these AI companies are going to need going forward. A lot of people feel like he's got the biggest advantage there. So that makes some interesting future potential for at least SpaceX.
All right, and Garrett, my last question is coming to you. We got this news of the Model Ys driving around Austin without a safety driver, potentially signaling the robo-taxis for Tesla maybe moving into the next phase of not needing the safety driver in the car, which would be huge for them. Does that in any way meaningfully change your long-term view, or is it too early to move the needle on that one? And I guess the follow-up here is, what does Tesla also need to deliver in 2026 to avoid this multiple contraction that you're forecasting?
Well, give them a lot of credit in terms of their technological development and innovation when it comes to full self-driving and in other areas, AI, robotics. We give them credit for that. What they've done has been very impressive. Our issue is more with, I think maybe they've guided too aggressively in terms of how quickly they're going to expand to other markets. In our view, there's still significant uncertainties and a lot of potential liability related to that expansion to other markets. And so I don't think it's going to be as fast as they're guiding to. Furthermore, they've also guided for volume production of the Cybercab in 2026. As we know, Musk has a long history of sort of disappointing relative to expectations, the timing of when new models might be available. And so we're a little skeptical of that, as well as some of the other products they're guiding for. So I think there's a high risk of disappointment in the near term. Longer term, we continue to be amazed how investors are just focused on what the company's earnings might look like a decade and 2 decades from now, sort of brushing off the near-term challenges that they clearly face. But we do like that Tesla's focused on sort of the industries of the future with AI, robotics, autonomous driving, and so forth. And if investors continue to give them a pass on near term, when I think another rough quarter, as Musk was guiding for a few months back, then the stock can continue to work in this environment. We just, as fundamental analysts, find the stock's valuation very tough to justify here, and we view the risk reward as unfavorable.
Thanks so much for being with us, both of you. Carl Brower from iSeeCars.com and Garrett Nelson from CFRA to talk through Tesla, their year that was, and the potential they've got going into 2026. Shares are up 4% for Tesla today, trading at 477.61. I want to thank all of you for joining us on Trading 360 today. I'm Marley Caden. You can download the free Schwab Network app available in the Apple App Store and tune in 24/7 on SchwabNetwork.com. I'll be back with Market on Close at 3 p.m. Eastern, 2 Central with Sam Bottas. Stay with us. Fast Market with Diane King Hall is coming up next.
Schwab Bank Investor Checking.
the checking account built for investors, named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your Investor Checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Welcome to Schwab Network, where real-time market coverage is excellent strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists, streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
Hey, Bob. Last year, my dad had a stroke. Big shock, since this person that I've always seen as a force in the family being vulnerable. Wait, had a stroke? Yes. Now we're in the car together almost daily. I started to realize, what can I pick up from my dad? He's been with Schwab for a long time.
Jim's my financial consultant. I probably met him 20 years ago.
Jim's really been there to answer any questions I ever have. Makes a huge difference when you have someone that actually cares.
Stay connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are.
Welcome to Fast Market here on Schwab Network. I'm Diane King Hall. It is noon Eastern here at the New York Stock Exchange, and after starting the session higher, stocks are pulling back as the tech sector feels the heat. Let me give you a check of your scorecard. As we hit the lunch hour, the S&P 500 is now flagging a little bit. It is off by 1/10% roughly there. The Dow has some pressure, off by a little bit more than 0.1%. NASDAQ 100 lower by 0.2%. Russell 2000 feeling the most pressure, off by more than 0.5%. I want to quickly circle back to the S&P 500 across sectors. You have weakness in energy really weighing on things, and that's followed by some weakness in information technology. It is being softened by gains in healthcare and a little bit of consumer discretionary and a little bit of utilities there. Here's the roadmap for today's show. We'll look at example option strategies for ServiceNow. Plus, the team from Lightfolio will be along with new sentiment data on Uber. Texas Instruments is also on our radar today after a double downgrade. Now that we've got the roadmap for today's trading action, it is time to bring in my co-hosts and trading veterans. You've got Tom White in our Chicago studio and Kevin H. joining us live from the CBO. As you know, we've got you covered from exchange to exchange and beyond. All right, guys, we've got a fade happening after that pop at the open. Tom, what do you make of this? Is this just kind of a regrouping happening?
A little bit. I think I think investors are trying to figure out if we're going to actually have this Santa Claus rally. Maybe some of the headlines risks that are out there. The rally that we've already seen in markets for the last 2 years also putting a little bit of weight here. You've got some push into different asset classes. I don't feel like investors are completely getting out of the market. I think there's some rotation going on, but it seems like every time there's a little bit of momentum to the upside, it feels like the bears are coming out. I'm not sure if this maybe is a case of maybe some tax loss harvesting before the end of the year at this point, but if you take a look at it, we're still not that far off of those all-time highs that we saw just last week for the S&P, the Dow, and the Russell 2000. The NASDAQ a little bit weaker as we continue to kind of ply through this rotation out of the big tech names. But I think this week is going to be based on maybe a lot of the data that's going to come out, some of the earnings events that are due this week as earnings season kind of wraps up here. But yeah, it's just a little bit of nervousness here when typically, especially the last couple of years, we've seen some pretty massive December rallies, and I think that has investors on edge at this point.
Oh, where is Santa Claus when you need him? We need those, those sleigh bells ringing. At the start of today, Kevin, I was with you. I would have thought that we'd start seeing that now. But I also wonder if some of that is, I saw the CNBC report where there's a little bit of pushback potentially on Kevin Hassett in terms of his candidacy as the next Fed chair. And I wonder if that's something that's at play in terms of rattling investors. What's your take, Kevin?
Good morning, Diane and Tom. I think that either one of the Kevins is going to be fine. If Kevin Warsh were to get the Fed, the chair of the Fed, I think the markets would really like it. I think either one of these guys is a great choice. Now, from the trading perspective today, I'm looking at the 1-minute charts. We gapped open, sold off, rallied up again, and sold off, and now we're firming up here down about 0.1% on the S&P. And the real question is, how far can this market go without information technology, which has been down all day, and without communication services that have been heavy? Throw in the fact that energy is very weak because crude oil futures are down. There's some rumors on some progress on the talks between Ukraine and Russia, so that's weighing on crude oil futures. But this is a market that I don't know if it's bullish or bearish right now, but it's choppy. I mean, the rallies are getting sold, but the sell-offs are getting bought as well, Diane. So it's always important, I felt, to identify the market that you're in. And this market just looks choppy more than anything else.
Okay, great point about identifying it. Well, where investors are bullish today. Seems like it's Tesla. They're gaining some ground. Now, it comes as Wedbush's Dan Ives put out a note saying that 2026 will be a pivotal year for the electric car maker. He says he expects to see an accelerated robo-taxi launch. That's interesting to me, especially when we think about, what the expectations were for this year. He sees various tailwinds. We know he is the biggest bull on Wall Street when it comes to Tesla. Tom, what's your take when you look across Tesla?
Yeah, I think, the optimism from Dan Ives and others on the street. Remember, this is one of those bifurcated stocks. Some people are still rating the stock, like Wells Fargo. I think they're in the low 100s as far as price targets because they're still basing it on the stock's valued as an EV maker. But Dan Ives and others have stated that, hey, if we get that rollout, they expect to roll out to another 30 cities. They're doing further testing on the robo-taxi or the cyber cab where there doesn't need to be a driver in the seat. Also, Dan Ives put a $600 price target as his bull case for this stock. He thinks it's going to hit $2 trillion market cap this year, $3 trillion by the end of 2026 in the bull case scenario. So if a lot of the promises come to fruition, I think that's the biggest thing you've got to look at if you're a Tesla investor is, they're going to roll out more robo-taxis across multiple cities, but when does that take place? They're supposed to ramp up production, bring more of these robo-taxis online in April. Does that happen? That's what you've got to kind of bank on if you're going to go into a stock like this that almost hit those all-time highs earlier that we saw last December, earlier in the session. We pulled back about $5 or $6, but a lot of this is based on optimism and hope for moving into 2026. Deregulation, I think, was one of the key things I read in his note out of Dan Ives, is that it's going to be more beneficial for some of these robo-taxi makers and these autonomous vehicle makers in 2026 as regulation is going to come on. But everybody's expecting that. It's not just going to be in this particular sector. It's going to be broad-based across multiple sectors within the market.
Okay, I think that's great breakdown there, Tom. I think there's something to be said for viewing the company as an AI company, and this is, coming from an agnostic perspective here, because to me, it is beyond just being an EV maker. But it's a great point about how do you value this company? Kevin, what's your take when you look across Tesla?
When I look at Tesla, skeptics want all these rollouts to be timely, right? They're anxious for them and they get frustrated. When I look at Tesla as more, their rollouts are inevitable. I think a lot of investors, the more bullish investors, don't look at Tesla as the hard dates. They look at the trend, and the trend in robotaxis, the trend in robotics, they're coming, Diane. And the people that are getting Tesla wrong, like Tom mentioned, are looking at it from the headlines about EVs. That is the wrong way to look at this stock. The future of this stock is not going to be in EVs. They'll be part of it, but the future that's going to transform this company is going to be in these other parts. In AI, robotics, robotaxis, all these other parts are going to transform this company into the future. It's nothing short, shy of fascinating to watch this unfold. And now some of the discussions about, Starlink, what it's doing, about SpaceX, what it's doing. I mean, remember, Elon Musk, when it comes to Tesla, he has deliverables. He's got to hit thresholds to get this massive pay package that's in the future. So I think his eyes are on the prize, Diane. I think this is a good thing for Tesla.
Okay, all right. Let's talk another member of the Mag 7, this NVIDIA. That has, it's gaining some ground today after some weakness recently. There's a couple factors that seem to be at play. One seems to be that Reuters report that's out that NVIDIA is weighing ramping up production of those H200 chips to China because they recently got that green light, essentially, from the Trump administration. Now, potential more production. Tom, what's your take?
Yeah, some headlines coming out. It was down 4% last week, rebounded about 1.5% here today. This $170 level seems like it's been a good base over the last several weeks, but it's a head scratcher for me. Just looking at all the money that's getting spent on this AI infrastructure build out, where NVIDIA is selling the picks and shovels for this transformational industry that we're moving into at this point. It's not getting the benefit of the doubt. We've seen horrible price action in NVIDIA since their earnings. It hasn't caught a bid, a sustained bid by any stretch of the imagination. The stock's off 16%. They did have some other announcements besides that, potentially ramping up H200 production because they're starting to get orders, but at the same time, there's regulators in China that are kind of pushing back against that narrative. That's a concern here. The Nemotron 3 family of open models, they came out with that news today, designed for power transparent, efficient, and specialized agentic AI development across industries. That was a positive. There was some other news out on this one. But this is, I think, one of those head scratchers for a lot of investors, because I feel like unless we see NVIDIA at least consolidate, maybe turn up a little bit for a sustained period of time, that we're not going to be out of the woods as far as this, this trade, this transformational trade out of tech into other areas of the market at this point. I think NVIDIA's still got to be in the mix and at the top of everybody's list if we want to see some sustained gains here in rebound in tech at this point. But yeah, it just seems like really bad price action. And I've said that about the market over the last week or so. It's just been really chaotic kind of price action. And that's kind of what I'm following right now. And until I see a couple days of sustained gains for NVIDIA, where maybe it gets out of the woods a little bit, maybe it's still going to be a choppy trade.
Okay, so it's like a bit of a head scratcher there, especially when you think about all the tailwinds that are happening. Kevin, what's your take when you look across NVIDIA?
When NVIDIA talked about raising the production of the H200 chips and being allowed to sell them to China, there was immediate pushback not only from China, but other places say there's not companies that'll do it. China doesn't want them to do it. Well, Alibaba and ByteDance are putting in orders, and overwhelming orders is what NVIDIA reports. So there's one thing to say you're not going to buy them or push back from the Chinese government, but if these chips, and remember, these are not the strongest chips that NVIDIA makes, but if they're stronger than the ones currently being produced in China, there's going to be demand for them, and it's going to be a windfall for NVIDIA. So I think today's price action is more indicative of the dust settling, the doubts being removed, actual orders and names of customers starting to be named, and I think the overall price action in NVIDIA getting a little more bullish today, Diane.
Okay, all right. Let's talk about the rally that we've been watching in the metals today. Gold flat right now, but has been climbing toward the highest level in 7 weeks. Silver is still higher. It's having a massive run. It's up more than 2% right now. Copper is also on the rise right now, up more than 1%. So that's giving some lift to some of these, the miners as well. Tom, what's your take when you look across the metals and miners?
Yeah, we talked about this on Morning Movers, Diane. I just think it's more of a diversification, not issue, but what we're seeing as far as rotation in some of these names. A weaker dollar has definitely lent some support over the past week or two. And then, central bank buying as far as gold goes. Those industrial uses for copper and silver, maybe putting a bid back into those. Those are getting a little bit stretched on a technical basis at this point, but it feels like, as I mentioned before, there doesn't feel like a rotation out of the market in general. I think they're just reassessing where they're going into the markets. These are hard assets. I think that's part of the concern, that central bank buying that I mentioned. That's lending support, a little bit of geopolitical unrest. Also, do we get a resolution to the Russia-Ukraine war? They had talks again overnight overseas. So that's also a concern. And I think this is just a diversification type of play because to push into some of these other asset classes, a little bit of a head scratcher. You got Bitcoin down 4.5%, so maybe that's also lending some support. They're getting out of that digital gold and going back into some of the areas within the metals. And I think that it's not a bad thing if investors want to maybe reallocate a little bit metals, but on the silver trade, on the copper trade, maybe getting stretched here a little bit. Even gold, it's pulled back. It was up over 1% earlier on in the session. Maybe getting a little bit tired here, but silver continues to move to the upside near record highs.
It does, but the gold miners you still have trading to higher. You got Newmont higher right now. You've got Freeport-McMoRan. What's your take, Kevin?
I think if you look at the 5-minute charts the last few days on gold, there was a pretty violent sell-off in gold on Friday once the trading day started. Overnight Sunday, this morning it had gotten up pretty close to, back to that 43.80. It was up significantly this morning. Now it's back down. It sold off about, I'd say, $55 to $60 from its highs today. So, and then again, it resumed its kind of sell-off. So, listen, with there is some tailwind behind gold with a lower U.S. dollar, but that relationship has been strained lately as gold only goes up lately, and now you're starting to hit some inflection points on gold. These metals have had an unbelievable, historic run. At one point, gold was up 56% for the year. That sounds like more of a bubble than some of these AI stocks. So, watching them very closely, and not surprised that they're getting a little choppy up these levels, but some big price swings starting Friday morning and overnight Sunday and into today, Diane.
All right. Great analysis, guys. We've got bull versus bear coming up. The guys get their example trades put together for ServiceNow after news of a potential acquisition, and a downgrade is hitting shares. That's next on Fast Market.
you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you an active trader? Our active trading webcasts are designed to help you develop a deeper understanding of technical analysis, options, futures, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Welcome back to Fast Market here on Schwab Network. Shares of ServiceNow are under heavy pressure today amid a couple factors that investors view as headwinds. One, that the company's eyeing a big takeover. According to Bloomberg, ServiceNow is in advanced talks to buy the cybersecurity startup Armis at a deal valued at as much as $7 billion. That would mark its largest acquisition ever. Wall Street doesn't seem to like that. Meantime, KeyBank is downgrading the stock to underweight and maintaining its $775 price target. KeyBank is flagging AI as a potential threat to traditional SaaS models. All right, time now for the bull-bear tug of war. For that, let's welcome back in our co-hosts Tom White and Kevin Hinks. It is bull versus bear time. So before we get to the example trades, we got to talk your take on ServiceNow, guys. Kevin, I'll start with you. What's your thoughts?
Yeah, the quote from KeyBank that downgraded it to underweight from sector weight. Here's the quote that really caught my attention. The death of service, or SaaS, the death of software as a service narrative could come for ServiceNow in 2026. That is an ominous, and they lowered their price target, and the stock went right to and through the price target. So, this is a company that is right in the middle of AI, using large language models, and boy, this was a big downgrade and a very cautious note that they put out, Diane. So, yeah, I thought it was interesting. On August 13th, if you look at the chart, they had a death cross where the 50-day went over the 200-day. The stock sold off to 863 right then. It had rallied from there, and now it's right back down from those. It rallied back to those highs, and now it's back down towards the lows of that move. So the chart's playing a little role here. If you're watching the numbers, it tried to rally off that cross, and now it's way lower than that. Now it's back down towards those lows. So yeah, pretty ugly. I mean, the chart experts are going to have a field day with that picture. It's not pretty, Diane.
So the death cross, the deal that Wall Street doesn't like, plus a downgrade. Tom, what's your take?
Yeah, Kevin mentioned that fall. We're back to levels that we saw in late April during that big, massive sell-off. So at 8-month lows here for the stock, and that kind of highlighted that quote from the KeyBank analyst about that death of software as a service coming for ServiceNow in 2026. You mentioned the Armis deal, $7 billion. That would be their biggest. This comes after that deal, $2.85 billion. In March of this year for MoveWorks, and then in early December they announced a nearly over $1 billion deal for Veza, high-growth identity governance administrator vendor. So they've taken that maybe that makeup that Salesforce had, where they're in the M&A space actively at this point. Bill McDermott, the CEO, always pretty upbeat. Their growth rate's been pretty good, but they're putting themselves into a precarious position by going after all these M&A deals, right? And then they're competing in this software as a service space with Salesforce, with Microsoft, and other big players in this name. And maybe that's going to contract some of their margins as they're outlaying all this capital to kind of keep up and expand their footprint. This is their first move into the cybersecurity space with the startup Armis. So maybe they're thinking that if they can continue to expand their footprint, they're going to have more offerings for the clients that they have existing. But if you look at their earnings have been pretty solid. Their growth rate's pretty solid. Valuation was always a concern for this company, and then on the 18th they start trading in 5-for-1 stock split also. So we have that to look forward to also. But right now, you look at the chart, it's in no man's land. Far below its 50, its 200 and 100-day moving averages. Like $100 below its 50-day moving average, which is pretty significant.
And so that begs the question, is there light at the end of the tunnel? Because we've got both the bull and bear views here. All right, let's get into the example trade. Kevin, let's start out with yours.
Yeah, you know, when you see an $860 stock sell off 10%, that should catch everyone's attention that this stock is it's moving, right? I mean, this news was not well perceived. Now, people trading it is the bad news out? Is this a dip that you could buy? I personally have no idea, Diane. So what I want to do is play for continued movement. And so what I looked at something in the opposite of a range-bound strategy, which is the long iron condor. I went out till December 26th. So I gave myself a little bit of time, about 11 days. I measured the expected move, which was about $41 about an hour ago. Now it's about $38, close enough, around $40. And so what I did, Diane, is I looked at a long iron condor where my short strikes were right at the expected move. So I bought, like I said, in the December 26th, I bought the 805, 815 call vertical. That's where if the stock would start to recover and you know, off the bottoms here. And then if it doesn't, I also bought the 745, 735 put vertical. So I've got verticals on going in both directions. I paid about $4.65 debit for both of them, both $10. It's trading closer to $4 right now, so you can get it even lower. It looks like vol has come down slightly. That's why that expected move has come down. But you're looking for a move of about $40 in either direction, either towards that $815 strike or that $735 strike. You've got 11 days, but like I said, this thing has already moved 10% today, Diane.
I'll go ahead and take it here, Kev. Yeah, December 26th weekly option. So just 11 days to expiration on this. And Kevin makes a good point about the pricing on this long iron condor. Price discovery warranted on this. Bid-ask spreads are pretty wide on this, so the prices are moving around quite a bit. But going up to that December 26th weekly options, you're going to buy the 805 call, sell the 815 call. So you're buying a call vertical that's out of the money to the upside. And then on the put side, you're going to buy the 745 put, sell the 735 put. So $10 wide long iron condor, you're paying roughly, we've got 465 debit, as Kevin mentioned. It's come in a little bit because implied volatility's come in a little bit. But the debit you pay, if you pay $465, there's your risk, $465. You pay $4, you only got $400 in risk on this one. If you do pay $465, your break even to the upside where you want it to go above is $809.65, or you want it to go lower than the break even on the downside, $740.45 to the downside. So it sets up and aligns with that one standard deviation move. But this type of strategy that Kevin brought is one of those strategies where, hey, it's a bull-bear debate in itself. You either want this thing to rally or you want this thing to fall pretty significantly, more than what the option market's pricing in at this point on this type of trade. That's where you're going to get that expansion in either one of those verticals, on the upside or the downside, on this need a move type of strategy here with the long iron condor here, where you're paying a debit you pay is going to be a risk on that one. 11 days in that position. Now let's get back to my neutral to bullish example trade here, Kev. I went up to the January 2nd weekly options, and you mentioned the stock's up a little bit, so the price might be off on this one. January 2nd, so I've given myself 18 days to expiration on this one, a little bit more time, where I'm going to sell an out-of-the-money put vertical for a neutral to bullish stance, sell the 740 strike put, and then buy the 730 strike put. So, it's a don't be a hero type of strategy where you can still take a directional bias, but you're giving yourself a better probability of success on this one. sell that $10 wide short put vertical out of the money to the downside by over $30. You're going to collect roughly, I've got a 210 credit on there, trading closer to $2 right now, but the credit you collect is what you can make. So if you collect $210 is what you can make with $790 in risk, but that's all the way below $730 on this trade. Kev, this one's got an extra week in it, but you've got a good probability of success on this one, but it skews your risk reward a little bit because you're giving yourself that better or higher probability, right?
And for our viewers, notice something, right? I'm long a vertical on the put side, as well on the call side, but Tom is short the vertical on the put side, and both our strikes are very close to each other, right? Why is that? Well, we're using that right column on the Thinkorswim platform to give us the expected move out to those dates, and then you go inside it or outside it a little more aggressive. A little more aggressive, you collect more premium. A little less aggressive, you would collect less. But using those strikes in that right column and as your foundation, and then deciding you want to be a little more bullish or a little more passive with your strike selection. But that right column really helps you out as it tends to give you ideas about where to put your strikes, Tom.
And the probability that 740 strike will be out of the money at expiration, which is what you want on this type of strategy, about 71.8% probability. So that's why you've got so much risk versus the amount of reward you have in this type of position, because you are giving yourself that 3 out of 4 scenarios where you can profit if the stock goes up, stays where it is, or even goes lower. You're wrong, but stays above that break even of just below 738 on this example trade, Diane. So there you go. Bull bear on Kevin's and bullish, neutral bullish on mine.
And also short versus long. There we go, guys. We've got cash tags coming up. The team from Lightfolio will be along with new sentiment data on Uber. It's been an outperformer year to date. Keep it right here on Schwab Network. Fast Market will be back after this break.
Hi, I'm Alex.
I'm Jane. And I'm his mom.
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
I'm Sam Barnes, live from the New York Stock Exchange. When the market moves, we're on it. Getting the reaction, the strategy, and sentiment in real time. Stream Schwab Network at schwabnetwork.com.
Trading at Schwab is powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you an active trader? Our active trading webcasts are designed to help you develop a deeper understanding of technical analysis, options, futures, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
No politics, no spin, just the market from open to close and beyond. Streaming 24/7, any screen, anywhere at schwabnetwork.com.
Welcome back to Fast Market on the Schwab Network. I'm Diane King Hall alongside Kevin Hanks over at the Seaball. Time now for our cash tag segment. For that, we want to bring in our next guest, and that is Landon Swan, co-founder of Lightfolio, taking a look at Uber today. All right, Landon, Uber has been an outperformer compared to the S&P 500 year to date. So the question is, when you look across your data, is the green light still happening?
love that green light. Yeah, it's a good, strong stock. This over the last year, it's up about 40%. It's off its highs right now, so investors may not be super happy, but what is it down? Maybe 20% from highs, but still, again, up 40% in 1 year. So doing well, and it's become number one, right? I mean, it's just crushed Lyft. It's always had a good lead on Lyft. I remember a few years ago, Lyft made a little bit of run at them with consumer sentiment, I think because of the tipping, but Uber matched, and they've kind of left them in the dust. So Uber's definitely the leader, and they're doing well. I mean, when you look at their human delivery, if you want to call it that, it's up 20% on a year-over-year basis. The item delivery is up 25%, so they're getting into that game as well, doing very well. But the data does look strong. I'll give them that. I think the big question on everyone's mind is, what's going to happen with autonomous driving? Is this going to help or hurt Uber? And that's a monster question. And you can kind of see here, Waymo's at the top with the increase in consumer usage, web visits on a year-over-year basis. Uber fits nicely in there, right? I mean, it's a little bit behind DoorDash on the food part of it. Uber Eats is below, but Uber's still doing well, and you can see Lyft and Grubhub kind of struggling a little bit. But I think really the big question for me as an investor is, how does autonomous driving fit in? Is it going to help or hurt? For a long time, I was thinking that they've got the users, and that is super valuable. We talked about Meta the other day. When you've got the user base the size that Uber has, you can do a lot of very powerful things. However, there's also the disruption factor, and when it comes to ride sharing, if you're gonna compete, if Uber's gonna compete with a Tesla, it's looking like the rides are gonna be anywhere from 40 to 80% cheaper than UberX, it's gonna be very tough to continue to pay those drivers. So they have to get to autonomous, because that's who they're gonna be competing against. Right now, Waymo's actually costs more than UberX. It's about 40% more. I'm not sure if that's going to come down. We'll see. They're about $1.36 cost per mile, whereas Teslas are about 80-cent cost per mile to operate those. So we'll see. And Waymo's doing well. They did, I think, 14 million rides in 2025, which is triple last year. But Uber's got way more than that. I think Waymo's got 2,500 units out there running around, whereas Uber's got 5 million drivers. So it's a massive leader, but you've got two very capable companies, and I'd say that Tesla's even more so the bigger one to fear, coming at them with a complete disruption strategy. This is not just a different way of doing things, a different network, and competing on price. I mean, this is obviously taking a big factor in changing it. We're removing the driver. So Tesla thinks that they can get to 2 to 3 million units produced annually, and that's, like I said, Uber's got 5 million drivers. If you're cranking out 2 to 3 million units annually, you've got more than Uber in 2 to 3 years easy. So I think there's a big concern with Uber on what's going to happen on that side of things. Now, I will say the biggest, I guess, saving grace for Uber is probably going to be regulatory. I think it's really important for Tesla shareholders to watch and see how these elections go, because I believe that Elon Musk has half of the congressmen like him and half of them don't, much like the country. And if Democrats get elected, I'm guessing the regulatory side of Tesla self-driving is going to be harder to get over those hurdles than if Republicans are elected. So I think that's actually a big factor. But long term, all things being equal, I think Tesla's going to disrupt in a very big way. And yes, Uber's got a lot of users, but if you're talking able to say 40 to 80%, it's not going to take long for people to start downloading the Tesla app and start hailing driverless cars. So we'll see how well it turns out, but overall I am a little bit worried for Uber long term because of the Tesla factor and to a lesser degree the Waymo factor.
Landon, you and I and Tom have been covering this company since it was a cash-burning machine, and all of a sudden it evolved into this highly profitable machine. And the stock has softened lately, even though the strength of this company keeps getting stronger and stronger. And you have a diverging chart there that you brought us, and that might be diverging because of the risks to the future, that something could disrupt it pretty easily. And you're right, they have to find their role in the next chapter of moving people and things from one place to another. And it might be, Landon, let's talk about the app, right? The Uber app that could help all these companies organize and make reservations and do it. The app is such a strong part of what they're doing. Is it the app that could, render them still needed out there? Because, wow, I mean, you made it. If it's 2 to 3 million a year, there's going to be a catastrophic change in this business, Landon.
Yeah, I mean, it's practically overnight when it comes to the size and scope of Uber. How long it took, think about how long it took for them to build up, fight off Lyft, and build, overcome the stigma of getting in a car with strangers, which is what you're doing with taxis anyway. But, just all of that, it took them so long to build up. And then, at the virtual flip of a switch, you're going to have millions of cars out there competing. So, yeah, it's definitely scary. I do agree that combined with the total user base and the app, the routing, the assignment of cars to drivers and the drivers to passengers, all of that is definitely a huge asset. And the chart that we're looking at is exactly what we're talking about. There's a divergence here, right? We've got the demand going one way, all-time highs, very strong numbers in that blue line. The stock's kind of softening. And if there was no such thing as automated driving, autonomous driving, driverless cars, then I'd say, you know what, this looks like a pretty good deal right now. I like Uber at $80 because of those two things going the other direction. And so this is far more than just talking about, is Uber doing well? Is it a good business? The answer is yes, it's doing well. It's the leader. It's got increasing metrics, significantly increasing, 20 and 25% on a year-over-year basis. That's huge. And so it's doing very well, but it's got this big unknown coming for it, and it's, Tesla has shown repeatedly to be able to do things that everyone said they couldn't do. Musk, in particular, has done things. If you include SpaceX in the formula, he's always done things that people say you just can't do. And so, for him to say, I'm going to make 2 to 3 million autonomous driverless cars per year, and we're going to compete with Uber, we're going to give people rides, and it's going to cost half of what Uber does. You can say he can't do it, but you'd be 0 for whatever 5 on the last 5 predictions he's made. So I would be very, very concerned. I think you're right. I think that's where that divergence comes from. Is we're no longer evaluating Uber based on its metrics on a year-over-year, quarter-over-quarter basis. It's not just what's its margins. It's what is this massive threat, this big disruptor that's coming. Is that going to happen, and how disruptive is it going to be? And is there an out? Right, like you said, maybe they can combine. Maybe one day we're talking about how Tesla's buying Uber just for the user base and the app, and then this seamless integration is just literally overnight. Maybe that's the out. I don't know. It's definitely a huge asset for them, but, if you're talking about having a car that isn't programmatically, doesn't know the roads ahead of time like Waymo does, but you can just unleash it into the wild, and it uses cameras to figure things out. That's a much harder math problem than Joe needs a ride and Susie needs a ride. How can we map the nearest car? So I think that Tesla can probably figure out the app pretty easily compared to AI-driven cars. So I'm not sure how valuable it is, but I could be wrong. I haven't built Uber's app, so I don't know. But I know that all the users that they have plus the app is an asset. But this industry is very disruptible. I mean, think about when it was all taxis back in the day and Uber was just this weird thing that people did. Now it's the standard. That can happen very quickly, and maybe it can happen in 2 to 3 years once that flip is switched and those cars start rolling off the assembly line.
I do remember when my best friend first started taking Uber, because she's always been an early adopter. I thought it was so strange, but listen, it is all, even when we're describing a Lyft, sometimes we say, you're getting an Uber. All right, Landon, we'll have to leave our conversation there for today. That's Landon Swan, co-founder of Likefolio. Now, for the trading perspective, all things Uber, let's bring Tom back into the conversation. Kevin, we got a lot of insights from Likefolio. Quick thought before you guys get into the example trade.
Yeah, I think if you take a look at some of their data, it's starting to turn a little bit, but we're seeing that divergence, the pullback that we've seen in the stock since hitting those all-time highs, pretty significant. I mean, this stock was $102 basically just a few months ago, so down here at 83, below some key technical levels. But Kevin, you look at this one, they'll report earnings in late January. How do you want to look at this one from an example trade?
So Tom, the stock has sold off, and everything feels bullish about this, about Lightfolio's data, except that event that could be coming on the horizon. So I think you stay relatively short term on this. And what I looked at, Tom, they don't have earnings out till they came out November 4th. So I think the next one is February 4th as earnings. So I stayed ahead of that. I went to the January 9th expiration. So gave myself some duration, but not a lot of duration. And I bought an unbalanced call butterfly. So I bought the 83 call. It was right at the money. Yeah, it's pretty much right at the money, the 83 call. Then I looked at the expected move out to January 9th. It's about $6, just under $6. So I went 83, bought one of the 83s, sold two of the 88s, Tom, and then I bought one of the 90s. So I gave myself that $5 call vertical and then short the $2 call vertical. The debit's only $1.50 on this. So you're buying at the money right at or a little inside the expected move, and then finishing out the butterfly with the 83, 88, and then 90 unbalanced call butterfly, Tom.
Yeah, let's break this one down. January 9th, weekly options on this one. So as Kevin mentioned, shorter term, 25 days to expiration on this. Buying the unbalanced call butterfly for a bullish take here on this example. Buy one of the 83 calls, sell two of the 88 calls. That's where you want it to go. And then buy one of the 90 strike calls. But even if it does go above 90 over the next 3.5 weeks, it's still going to be a double in profitability. You can see here from the risk profile, you want it to kind of creep up towards at or near that 88 strike over the next 25 days to get the max profitability on this one. Kevin mentioned to break even where you need the stock to go. 84.50 to the upside. That's less than 2% above the current share price in there. So with 3.5 weeks in this position, and you only need about a 1.8% move above the current share price to get above that break even, you don't need a big percentage move. Almost, Diane, a controlled bullish trade here. You avoid earnings, it's short-term positioning, but you definitely need the stock to get above that break even of 84.50 on this example trade.
So you're avoiding some event risk there. Thanks, guys. We've got the breakdown coming up. We're taking a look at Texas Instruments off the back of a double downgrade today. We'll have a more fast market after this break.
Stay connected to the markets with Schwab Network.
Tune in 24 hours a day, 7 days a week on schwabnetwork.com
and on all your favorite streaming services.
Schwab Network, available anytime, anywhere, on any device for free.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Welcome back to Fast Market here on Schwab Network. I'm Diane King Hall live on the floor of the big board. Before we get to the breakdown, let me give you a check on where markets stand as we get closer to the bottom of the lunch hour. The S&P 500 right now is off by a little bit more than 0.1%. So we're still seeing a little weakness in markets. The Dow lower by just shy of 0.2%. Nasdaq 100 off by 0.25%. Russell 2000 lower by 0.5%. Double downgrade for Texas Instruments. Shares under some pressure today after Goldman Sachs cut the stock to sell from a buy. It slashed the price target. The move comes as part of Goldman's broader 2026 outlook for the semiconductor sector. Time now for the breakdown. Joining us for insight is Sam Valdez, host of Morning Trade Live and co-host of Market on Close, for a fundamental take on Texas Instruments. So this is the time of year where the analysts are busy with a wide range of view across different sectors. What's your take here?
Yeah, 'tis the season to make ratings adjustments, and that's what Goldman has done now. Diane, I know you and I dress very appropriately for this segment too. The 2026 outlook on semiconductor chips now. So Texas
has been a double downgrade from Goldman as part of their coverage here, and this has gone from a sell, from a buy, I should say, to a sell now, with a price target of $156, down from $200. So let's just be clear, of course, around Texas Instruments. It does have exposure to the analog chips, so not the kind of sexy stuff, Diane, of course, but it does have exposure to the autos. It does concerns in recent months around the valuation because of its heavy exposure to China as well, with some of its revenue around 20% that it pulls in terms of sales there too. So this is all stuff to keep in mind as to, you know, how investors have been thinking about this name. But according to Goldman, basically the reason behind this double downgrade here now is because they do continue to see hyperscalers, artificial intelligence spending continuing to move higher. So think your Microsofts, of course, think your Amazons of the world. They say that that is driving tailwinds for digital, memory and storage in 2026. They also do see gradual improvement here as far as industrial and automotive recovery as well, driving some cyclical tailwinds in analog, which of course this company is in the business of. But they say that Texas Instruments, as far as the execution, is lackluster through the cycle and less leveraged than peers in the upcycle. So compared to, you know, obviously some of the other players in this space, they are not positioned as well. So they've also cited that strategic capacity, capital choices this cycle will serve as an idiosyncratic drag here that will weigh on the company's margin and earnings recovery relative to its peers as well. They're also talking about how inventory has been at record levels too, leading to muted margin and earnings expansion in the upturn. So what this effectively means now, Diane, of course, is Goldman is turning more negative on this name as the big companies continue to spend big, but the other chip players are perhaps a little bit better positioned to capture some of that exposure now. Now that downgrade, you could say, sort of highlights what is happening in the technology space beyond the artificial intelligence trade. Obviously, we've seen this rotation, but I mean, if you look across some of the chip space today, I mean, just as far as a breakdown, you do have Texas Instruments on the back foot off the back of this double downgrade. You interestingly have the memory names that are higher today. Think your Microns, think your SanDisks. In fact, that's actually just pulled back a bit, but your Seagates of the world that are higher off the back of more bullish analyst commentary. But you do have your big sort of names like your Broadcoms, your Intels that are all lower today. Interestingly though, if you look across the coverage of Goldman and what they're saying here as far as how they see things moving forward, there are a number of names as far as some of the picks and shovels in this space that have got upgrades, downgrades and initiated coverage. And I think it's important to see, while we have seen this double downgrade for Texas, we've actually seen a double upgrade for Teradyne to buy from sell. So it's going in the other direction. And you can see that reflected in the share price today. I mean, Teradyne's up at 0.8%, while Texas is down 0.6%. They say that they have got greater traction in GPU testing along with the recovery in traditional customers. So interesting moves as far as the way that Goldman is moving around the chess pieces as far as their 2026 outlook for semiconductors.
Thank you, Sam. That's Sam Bott, host of Morning Trade Live and co-host of Market on Close, with a look across this Goldman note on Texas Instruments. Let's get Tom and Kevin back in here for the example trade perspective. So Tom, you've got the example trade in Texas Instruments. It's gone a whole lot of nowhere essentially over the past year, or honestly over the past several years. What's the example trade approach?
Well, it's kind of weird. You look at this downgrade, it's a double downgrade that put that price target down to 156, which is, you know, more than $20 below the current share price. But then they said all this good stuff, tailwinds for digital memory and storage in 2026. And then they said gradual recovery driving cyclical tailwinds in analog. That's right up Texas Instruments' wheelhouse. But then they mentioned, I think the key takeaway from that note was execution, and it's misexecution. Their earnings at the end of October were decent. They were mixed on EPS, mixed on revenue, but at the same time they lowered this current quarter estimates for EPS and revenue, and that's probably what's hurting the stock. The stock's only down 0.6% today on a double downgrade. That's pretty substantial. That it's not moving even lower on that kind of news for this name. So I looked at a strategy that, hey, if you agree with this, you know, this analyst, and you think the stock's going to go lower, I've got a strategy for you that takes advantage of that. So this example trades bearish, and it's basically buying something slightly in the money. We went out to the January 16th monthly option, so 32 days to expiration. Earnings are on the 20th, so you avoid the earnings event. but take advantage of any downside from these current levels. January 16th, buy the in the money 180 strike put, and then against it to offset some of the costs on that bullish put purchase, sell the 165 strike put. So Kevin, a bearish $15 wide put vertical, you're paying roughly about, I've got $5.20 debit on here, that's where it was trading earlier. Probably trading closer to $5 right now, but the debit you pay is going to be your risk on this bearish position. So you're basically paying about 1/3 the width of this bearish vertical here, Kevin, in Texas Instruments, if you think it's going to go below that break even near 175.
Yeah, and how this worked out, how this came to be, right? Tom reads the note from the analyst with the double downgrade. Then he goes to the Thinkorswim platform, looks out to that January 16th, 32 days. What's the expected move? About just under $14. And so buys the 180, sells the 165, a $15 call vertical. That, you know, people always ask us for ideas and how do you come to your ideas? There it is. You formed an opinion, you gave yourself duration for the move, and then you use that right column on the Thinkorswim platform to set your strikes at about a $15 move, Tom. There's the breakdown of how this trade came to be. Now, are you right? Well, you need a move. You're going to need a move, so you gave yourself duration. But this is the opportunity that you're looking for in a downside move on Texas Instruments.
Yep, and on a percentage basis, you don't need a big move to get to the that break even to the downside, just below 175 on this one. And I think one of the keys with these type of strategies is that you're not seeing a big down move today in the stock, and it gives you some of that flexibility as far as trade management. So you've got 32 days in this position, but if you get a move down to maybe 170, 168, 172, and this thing starts to expand in price, which it will if the stock goes down, then you can maybe, if you buy multiple units, you can close a portion or all of it if the market's open on that. So Diane, this sets up with the analyst note on the stock, and you have some flexibility as far as trade management goes on this bearish put vertical.
And that's some great perspective that you gave there, Tom, especially when you think about that it's a double downgrade, but it's not getting hit as much as you would anticipate. So that's going to do it for us today on Fast Market. I'm Diane King Hall. It's alongside Kevin Hinks and Tom White. Download the Schwab Network app. It's in the App Store. Tune in 24/7 on schwabnetwork.com. Stick around. We've got Next Gen Investing coming up.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. schwabnetwork.com.
Hey, Pop.
Hey, Andrew.
Last year, my dad had a stroke. Big shock to see this person that I've always seen as a force in our family be vulnerable.
Wait, had a stroke?
Yes. Now we're in the car together almost daily. I started to realize, what can I pick up from my dad? He's been with Schwab for a long time.
Jim, my financial consultant, I probably met 20 years ago.
Jim's really been there to answer any questions I ever have. Makes a huge difference when you have someone that actually cares.
Live insights, actionable data, and market-moving analysis. Schwab Network connects the headlines to the why in real time. Watch free 24/7 at schwabnetwork.com.
Welcome to Next Gen Investing. I'm Jenny Horn alongside Alex Coffey, and as we do check in on markets to kick off the last full week of trading for the year, we are seeing some sluggishness. Not necessarily that, Alex, but I mean, it does feel like we are at the end of an earnings cycle, of course, for like major catalysts, and also it does very much feel like this awaited Santa Claus rally. Well, I'm not saying it today, at least.
Yeah, I don't know that today is fully written just yet. We still got 3 hours till the bell. It's been kind of a back and forth battle between bears and bulls. The rotation under the surface continues. You do have a little bit of strength in Magnificent 7 today, which I think is welcomed as we get into the last part of this year. But in the end, Jenny, I think by Friday, the tone will ultimately be set for how this year shapes up. Doesn't mean that there isn't potential for movement in the other direction and that there can't be surprise, but you have a holiday disruption next week. You have a holiday disruption the following week. This is that last full trading week. You got Nike, you got Micron, sort of the end of earnings season. A ton of economic data, all that to be said, I think that the tone will be set by Friday for how this year is going to close.
That is a good point. You're right. It's far too soon. Of course, we're just beginning this week, but to really set the overall tone for the week just based on today's sluggishness, I agree that by Friday, we will be able to say, this is how we recap the year. And it does feel like the year absolutely flew by, but markets have been fairly resilient. I will say to their credit and to the overall just equity focus that we tend to hone in on our show, it's been a stronger year than I think a lot of the pessimism would let you think.
Yeah, and I think that's it's an interesting word to use, resilience, around it, because if you're looking at it just from a 10,000 foot view, surface level, we're like a day off of all-time highs. So it's like resilient from what? Like what battle have they been tested? But you think back to the beginning of the year, you think to the tariff tantrum and all the volatility to start the end the first quarter, start the second quarter. You also remember and think about all the disruptions, not only from the government shutdown, but the bifurcation between soft data and the survey and the pessimism you see from consumers when they're asked about it, combined with the fact that they keep spending, and then you see the strength out of some of these things, combined with the AI ups and downs. So I think it's been a pivotal year. I understand resilience as the word, but I would just say it's been a surprisingly strong year once again, and it feels like that's been the theme for 3 straight years.
That's very true, and it's like the way we discuss it, like the most hated, most disliked bullish momentum in this market. So every time we get upside, it feels like there is such a quick narrative to try to shoot that down. But right now we have seen at least some stabilization in like what's driven so much of the focus this year, which is the AI trade. So we're seeing some updated coverage on analyst targets now going forward into the end of this year, beginning of 2026. Which we're going to have to get very used to saying very quickly. But we'll focus on a lot of these analyst calls throughout the next hour. We'll kick things off with some of these semiconductor and just overall consumer discretionary names that are seeing updated analyst coverage. We will also then be charting and trading services now, as well as Adobe and actually KLA Corp as well as Adobe on the back of, again, some various analyst news Lots of analysts to get through. Tesla also with a reaffirmation from Dan Ives, as we did see a $600 price target, and of course some various volatility to follow. We will also be diving into Micron and Wedbush's latest prediction on Micron earnings still for that name Wednesday after the closing bell, as well as Cipher Mining lower amid some of the weakness we're seeing in the broader crypto space. So wide variety, but definitely a heavy focus to come this week.
Yeah, no doubt. We want to talk some of these names that are on the boost, and we're also in that time of the year too, where analysts are trying to get their 2026 outlook out to the street. They're trying to get ahead of the holidays so they can have some family time, and it's like Analyst Monday today for 2026, and we got some updates about some different ones regarding semiconductors. Texas Instruments being a name on our rundown here, Jenny, didn't get the nicest adjustment here from, I believe it was KeyBank as we go into the new year.
Yeah, some conviction though, and I like some conviction. I not to say that neutral isn't a strategy, and neutral is obviously a stance taken on by many analysts, but I like the conviction here with a double downgrade from Goldman Sachs on Texas Instruments to sell from buy, reducing their price target to 156 a share down from 200. They do see adjusted ratings in the semiconductor group as part of now their broader 2026 outlook, and they see hyperscaler AI spending continuing to move higher, driving tailwinds to digital, memory, and storage in 2026. Basically all the themes that have worked in tech throughout this past year. They do also see gradual industrial and automotive recovery that could help drive cyclical tailwinds in analog, but they did cite Texas Instruments' lackluster execution through the cycle and less leverage than its peers in the upcycle behind this double downgrade. Also did downgrade ARM as part of this note, also with accelerating, trimming their price target as well on ARM to 120 from 160, again as part of this updated coverage. But I do appreciate that they mentioned a lot of these cyclical themes that have worked, like again, memory, digital, and anything related to analog. I mean, one piece of the AI trade, but it hasn't been a rally that's been felt equally, as we know, from some of the winners and losers of AI throughout the year.
Yeah, and this was James Schneider over at Goldman. I was getting it confused with the Akamai KeyBank analyst, but
there's a lot of analysts today.
Teradyne, though, a name that was upgraded as a part of this. You mentioned ARM being downgraded. So a couple things moving around. Is there some shuffling within the coverage? A couple new initiations from some lesser followed names as well, but I would say downbeat on Texas Instruments in particular, because you read through, as you did, sort of the rationale, it sounds like they're about to be optimistic. They're saying, hey, bounce back in some of the cyclical areas, still like a lot of the memory and stuff tied to AI, but then they're like, just flat out execution issues with TXN is driving some of that weakness that they anticipate. Let's talk Intel, because I've said before, NVIDIA stole the show, Tesla steals the show, Palantir steals the show. Intel's the stock of the year in my mind.
Intel's up 90% this year nearly. So I know we've pulled back, now about 7.7% so far in the month of December, but I agree. I think they don't let the lackluster December necessarily dictate the entire strength that they've seen throughout this past year. Plus, with some news today that we are seeing reports that they are in these advanced talks to buy the AI chip startup Sabanova Systems for about $1.6 billion, including debt. And so this deal could close as soon as next month for these reports, but additionally, Sabanova could pursue another option and has signed term sheets with other potential investors per Bloomberg reports on Saturday. So we know that this company has been around since 2017. It does build custom AI chips to compete with, I even have a hard time saying to compete with, but to say rival NVIDIA. But this would be the latest, right now, string of Intel really trying to be a formidable competitor in the broader world of AI. Also notably, their CEO, Lip-Bu Tan, does serve as the chairman of Sabanova currently. Moreover, his venture firm, Walden International, did lead the $56 million Series A round back in 2018. So we have exposure to this company, of course, already.
Yeah, I think that's the key piece. That's what I was going to add if you didn't get there, is the ties to the leadership of Intel. And sort of the familiarity, and then also kind of filling gaps. Intel's trying to subtly shift towards offense. They've been on defense for it seems like half a decade now. Perhaps we're starting to see a move towards offense as the stock is stabilized. We're starting to move off of what had been multi-year lows not that long ago. So nice move for Intel over the year, not necessarily over the last few weeks, but you can't be a beggar. What did they say? Beggars can't be choosers. Intel's been struggling. So the fact that it's been, one of the nice performers and it has really turned the tables just a bit this year, I think is certainly welcome, particularly for long-term investors that have watched that stock erode. Dollar General. So we talked a lot about this earnings in particular, sort of the nuance within retail and how names that are more exposed to value-oriented consumers have done a little bit better. Well, I think Dollar General not only is that, but it serves kind of a unique subset of the American population, which is a little bit more rural, it's a little bit more staples-oriented, but whatever they're doing seems to be working.
I mean, you talk about a story of the year, and I know that Dollar General is frequently thought of, I think, top of mind, especially even in the broader world of retail, but we've seen a string of good news really kicked off by a stronger than expected earnings season for a lot of these discount names. I mean, so many of the standouts have been Dollar General, Dollar Tree, TJX, Ross Stores, companies that do serve this very important need for lower or just more affordability, frankly, for middle America, which is, I mean, Dollar General has such exposure to most Americans. I think it's fascinating for that very reason. But we did see JP Morgan upgrade shares to overweight from neutral with a price target that was raised to 166 from 128. They do see upside. The company is now 2 to 3% same-store sales growth outlook for fiscal 2026, given its exposure to the employed low-income consumer as well as the higher level of middle-income consumers that are now trading down. Walmart mentioned the very same. That's a huge part of these companies' recent growth. But following a meeting with management, JP Morgan says that Dollar General is now back on offense. Words we actually were just using for Intel, but seeing favorability for price as well. I mean, this thing continues to be a really standout performer. We're up now 76% on the year and 22% for the month of December.
Yeah, I believe this is a street high price target as well. So you're seeing a lot of optimism from Matthew Boss, what a name, out of JP Morgan into the new year for a stock that's done really nicely too. So this isn't a turnaround story necessarily. This is a continued success story. But really nice words from the team at JP Morgan as we round that final turn of the year. We'll see if Dollar General can continue its outperformance in the 2026. And then finally, Caesar. So this was another Goldman adjustment, kind of full-on, 2026 outlook within lodging and gaming. You could have taken your pick in terms of the names they looked at, but I like the framing, the haves and the have-nots. Isn't just us as people, it's apparently gaming companies too.
That's true. And so Caesars, unfortunately, you're down 27% on the year so far, but actually seeing some favorability so far this month, up 3.5% in December. But Goldman today did downgrade Caesars to neutral from buy. Price target was also cut modestly to $24 a share from $25, basically in line with where we are currently trading. But they did give adjusted ratings in the gaming and lodging group as part of their broader 2026 outlook. They do expect now a mixed 26 for gaming and lodging with another year of the, to quote you, Alex, and to quote this note, have and have-nots. But they find it too early to call an inflection and take a positive view, frankly, on gaming. In lodging, they expect that U.S. RevPAR growth will accelerate from this year with some help from the World Cup as well as just overall stimulus. So as part of this note, we did see Wyndham Hotels was also downgraded, but then they actually upgraded names like Marriott to buy from neutral, Hilton also to buy from neutral, and Las Vegas Sands has also gotten an upgrade to buy from neutral. So there wasn't just all negativity in this note. There were some haves and the have-nots, that's very clearly stated.
Yeah, Wynn reiterated as a buy with a price target adjustment higher. So it does seem when it comes to the gaming sector, they're going for the higher end. And then when it goes to some of the other areas within lodging, kind of looking at scale. You think Hilton, you think Marriott is two names that got upgraded, I should say, is just scale. That's what I think of when I think of those two names. So going to be an interesting 2026 because these are some of the themes that I think many analysts and investors were kind of looking for in 26 or 25 rather, and it's almost became an extension of 23 and 24, which has been this AI-centric rally until recently, maybe over the last 3 months, it started to broaden out just a little bit.
Yeah, and I do feel like within the broader tourism space, we've seen, pretty strong still reports and pretty strong guidance. And the nice thing about a lot of gig companies with like tourism, gaming exposure is they do know some of their forward-looking metrics for like the next year and a half, but hasn't really resonated so well with the street. But to their point, there are still names that just maybe provide more value with, I think, a more diverse type of tourism exposure, like say Marriott, being the largest hotel chain in the world and by a sizable margin at that. So interesting note here, but lots of analyst notes to get through, as we did mention on the top of the show. We'll leave it there, though. Coming up next, let me dive into some more analyst calls today on Adobe as well as KLA Corp. We'll be charting and trading those names coming up next.
Stay connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are.
What's up, Carl Nation?
Oh, it's starting to look bullish now. Barely bullish. It's just in the channel right here. Just ping-ponging back and forth.
Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab is a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties. Carl.
Schwab, a modern approach to wealth management.
Whether you're a bull or a bear, you'll want to catch the latest market action on Morning Movers with me, Diane King Hall, live from the floor of the New York Stock Exchange, only on Schwab Network.
Welcome back to Next Gen Investing. It's now time for Chart Master. Today we are looking at the charts of Adobe as well as KLA Corp with some analyst news driving not exactly the most optimistic of days, but some various opinions, of course, on Adobe here specifically following its earnings. So Rick Ducat is joining us here for a look at the technicals. And Rick, walk us through the Adobe story because, again, not a hugely optimistic note today, but we did get a nice pop in the back of earnings.
Yes, KeyBank was not the only one here. We saw lots of other price target cuts from various firms recently here, so not the brightest picture here. But when we do look at our chart more specifically, this area, 332, our darker green line, that was a notable low point from back here. We tested it again several more times. Ultimately, we did fall below it, though, to give us these 52-week lows near 311.58. However, we have retaken that level here. That's about where we bottomed out a couple sessions ago. So for now, that remains a downside level to be on the lookout for. In terms of our overall trend, you can see that we have this blue line beginning here with these highs, connecting subsequent highs here and here. We have broken beyond that one pretty convincingly at this point here. But now you could say that we have our white trend line here connecting these about where we topped out recently, that could be another area to watch. Our red line here, that was a notable low point, our breakdown point, and then we retested it several more times as both support and resistance. So another standout level to the upside in this case. When we do look at our other studies here, our moving averages, we can see that our yellow 21-day and orange 63-day exponential moving averages are quite close together, near about 340 or so. That's the general point where they're coming together. So there's a supportive confluence there that's just above our 332 level that we highlighted as well. When we look at RSI, red trend line that was pointing downward has been broken after a brief foray into the oversold area. Now, though, our green line that was trending upward, that's also been broken here. So a bit of an interruption in momentum here for the bullish crowd. The bulls would want for the price activity to break above our trend line and break above our resistance level, and for RSI to break above the 70 level in tandem to push into the overbought area. So when we include our volume profile study, our point of control, our thick red line here, that comes in near about 350. That's about right where we are now. So an important point to hold going forward. We can also look at our +1 standard deviation channel. One standard deviation to the upside from our teal linear regression line, that comes in near 362. That's about where we topped out yesterday. So, or excuse me, last session. So that was another level to the upside to watch out for. Finally, volume picks up once again here near about 385.
Okay, again, of course, we did see, again, some strength to end last week, obviously a bit lower today by about 1.6%. So with all of this in mind now, as you think through trading Adobe here for example purposes, Alex, walk us through your thinking.
Yeah, I mean, the trend is, I think, pretty straightforward. This has been a stock that's struggled, and even with the recent earnings jump, even with the recent increase in momentum, it still has yet to break that downtrend. So going with that neutral to bearish call vertical spread, just going into the end of the year. So it's a January 2nd expiration, short call credit spread, elongated Z risk profile. Basically, with this strategy, as we talk about all the time, particularly on the put side, you just select a short strike, you provide risk definition, and if it stays below, in the case of the call vertical, that short strike, you collect your credit. In this case, it's the 365.37. If you do, you would collect that $100 and keep that. 366 to break even, 400 is the max loss. So 4-to-1 risk reward on the higher probability of success side, but most importantly, it is risk defined. So if the stock does make a breakout or a rally, you don't have unlimited risk. You know what that risk is going in.
Yeah, and I think a good way to really summarize, obviously being mindful of risk, but hoping for at least some continuation of the recent trend we've seen in Adobe. But now our next name today, KLA Corp, which is also seeing a more, not pessimistic, but in a more cautious tone, although today we are actually up by 3.5%. So to KLA Corp's credit, seeing a pretty nice session to kick off this week.
Yes, the broader picture, perhaps you could say, is more of a triangular shape here. We have our low points that we can connect here with our high points here, give us this shape of two trend lines converging toward each other here. So now we are near the upper boundary there. If we were to keep moving higher, 1284.47 was our intraday high, but our high close was just recently last week here. So a bit of a disparity between the closing high and the intraday high there. Typically the closing high is regarded as being more important, so that could be the mark to watch out for. In terms of our recent lows, 1185 is where we bottomed out here. You could also look here at another relative low here, 1072. So a couple notable horizontal areas to consider. When we include our moving averages here, our yellow 21-day EMA lines up pretty closely with those recent relative lows that we discussed. 1195 is where that particular indicator comes in. If you were to look at our orange 63-day EMA, just a little bit below, pretty close to the trend line, the upward sloping trend line here, that comes in at about 1130. So a bit more food for thought here as we attempt to find some supported areas. When we look at our RSI study, our longer downward sloping trend line in red has been broken as price pushed above the 50 midline. However, our green trend line that was much shorter lived has now been broken as well. So price, kind of stabilized near our supportive level, and we did not break through the 50 midline on the RSI, but still we haven't really managed to claw our way back above that trend line at this point. Finally, when we look at our volume profile study, we can see some very clear, very distinct volume nodes here. First, we have this one here near about 1070. We have another one here centered around 1130. And finally, the one that's closest to where we are now is right around 1200 or so. So these are some notable potential congestion points to be on the lookout for if price does start to retreat. Meanwhile, our +1 channel, our standard deviation channel to the upside, a bit of a stretch here, 1347 is where it comes in at this point in time. Remember though, this is just a snapshot of right now. It'll be a moving target if price keeps going upward in the future here. Just an idea of where to start thinking about potential resistance.
Yeah, and a name that is, again, making a pretty nice move today outside of some of the weakness we've seen in the overall tech industry. So a name to keep on your radar here. The trend has been pretty promising. All that to be said, though, now as we think through trading KLA Core, for example, purposes, again, Alex, a different story today, especially just based on price performance, a different world, obviously, that Adobe particularly operates in, but we'll obviously be thinking for an example trade.
Yeah, same strategy, but flipped over, so the neutral to bullish version. So short put vertical spread here done for a credit. One thing I should note, though, KLAC only has monthly options available and only has $10 wide strikes given the big price tag of this particular stock. So this is the smallest version of the short put vertical that you can do in terms of notional exposure, but it's a big product, and so the trade's just a little bit bigger. That said, looking at the 1200 mark as a potential support point and anchoring the trade to that level in that January leap expiration, the January 16th of 2026. $10 wide spread, that's again the minimum width that you could do for this particular stock. If you collect 330, that would be pretty close to a third the width of the strikes, which we talked about as a rough guideline for these strategies when pricing them out. And if you did that, you could collect 330 as a max profit. Max loss would be 670, and that break even 1196.70. So very similar strategy to Adobe. It's just neutral to bullish as opposed to Adobe's neutral to bearish look.
Yeah, and leading into it, more of what we're seeing from today's price activity as we are obviously making a nice pop to the upside. But we'll leave it there for Chartmaster today. Coming up next, time to discuss another winner of the session, and that is Tesla, which got a positive note from Wedbush's Dan Ives. The shares are up almost 4% now on the session.
For instant reactions, earnings breakdowns, and hot takes that teach you about stocks and markets, follow me on X at @NPetalides and connect with me, Nicole Petalides, on LinkedIn, Facebook, and Instagram.
Trading at Schwab is powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Live from Chicago, this is Trading 360. I'm Marley Caden. We track macro forces, market trends, and company news that shape investor decisions, all with expert analysis and actionable context. From inflation data to sector rotations, earnings to policy, it's a comprehensive view of the market every trading day. Trading 360, in-depth market coverage straight from Chicago. Weekdays at 11 a.m. Eastern on Schwab Network.
Stay connected to what moves markets. Download the Schwab Network app and get live coverage wherever you are.
Hey, Dad, I have a question for you.
Sure.
When did Granddad first start investing?
Granddad had an account with Schwab before there were branches in the area. He really started with nothing. He worked hard, and after he passed away, the torch has been passed to me, and my advisor, Jennifer, she was with me with the journey. helping with the estate distribution. The 2 grandchildren planning for their college educations. Someday it'll be their turn.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on ETFs.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists. Streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
Welcome back to Next Gen Investing. It's now time for FOMO. We are talking one of our, really our best performing Next 7 name of the day, which is Tesla, up almost now 3.7%. Say almost 4%, not quite though. As we are seeing some analyst favorability trickle into this name today. So Marley Cannon is of course doing it here in studio, host of the Schwab Network. So break down all of the various thoughts, because what I can engage based on what versus Dan Ives, of course, is there's optimism to kick off the season Tesla.
And Dan Ives has always been an optimist for Tesla. He's a longtime Tesla bull, so this is not a new bull case scenario for him. It is a much greater long-term bull case scenario for him, though, and he did supply some numbers. He doubled down on their long-term upside. He posted to X saying that he thinks that they could hit a $3 trillion market cap by the end of 2026 for Tesla. So that would be a bullish scenario thanks to the company's efforts to both develop and push its AI programs. He tweeted, quote, heading into 2026, this marks a monster year ahead for Tesla/Musk as the autonomous and robotics chapter begins. We believe Tesla hits a $2 trillion market cap in 2026. In a bull case scenario, that's $3 trillion by the end of 2026 as the AI chapter takes hold at Tesla. And this has been the big discussion about Tesla, right? Are we still supposed to talk about them as an electric vehicle maker? Are they moving into this AI robotics landscape? And that's the kind of company that we should be referring to them as. Dan Ives really thinks that it's the latter. He thinks they're entering this pivotal period where its autonomy and robotics ambitions move closer to commercialization. He expects that $2 trillion market cap to hit regardless of the scenario. That's a 33% upside from where we are. He has an outperform rating right now. He reiterated that, a $600 price tag. He also says that he thinks robo-taxis will expand to 30 plus U.S. cities in 2026. And that bull case scenario would put the stock around $800 over the next 12 to 18 months. And that's how he framed it. But another part of this conversation that sort of supports this post that he made is that over the weekend there were some videos that came out of some Model Ys driving around on public roads in Austin, Texas, without a safety monitor in the vehicle. So their robo-taxis may now be riding without that human safety requirement. Elon Musk has since come out since these videos were posted and said testing is underway with no occupant in the car. Now this is very important because if they can achieve this, Waymo has been doing these rides with no human safety driver in play. And that's really been the distinguishing feature of the regulatory restrictions on Tesla, is that they still have a human in the car in the passenger seat in case something goes wrong. If they are able to get over that regulatory hurdle, it will really unlock a lot of this power in this space that they are hoping to maximize on in this robo-taxi play and help them catch up to some of the competitors who are farther ahead. But we don't know if there's a shadow support like a chased car, or if there's any sort of remote monitoring going on, or geofencing, or anything in there. But any of those kinds of details would be very important because Tesla's valuation really hinges on the concept that this robo-taxi and autonomous driving functionality is a big driver of growth for them and a high margin network business for Tesla. So to potentially change what that looks like to get the human component out of the driver's seat or the passenger seat, that raises them up to another level of safety in terms of the regulation. That makes them a level 4 in terms of their autonomous driving. That would be a huge deal.
No doubt, and I guess I should start. It is Tesla, so this stock has like a million things going on at once. Is there anything else that you have that we should be aware of? Because the other thing that's caught my eye here is this SpaceX news, and I start to wonder, we so many see an investment in Tesla is an investment in the mind of Elon Musk, and it's not about the valuation of the car company or robotaxi, but like exposure to what he's working on. If SpaceX is suddenly an option too, does that get some of that demand elsewhere?
It's a very interesting thing, and I think there's a catalyst mix here today. That's what we'll call it. I think this autonomous driving thing is a big deal, this robotaxi without the safety driver, because this has been a big headline. And one of the things really holding that portion of the business back in terms of being a major competitor in that space. We are also hearing about SpaceX having a potential IPO in 2026. Elon Musk has pretty much all but confirmed that that is in sight, at least, or something that they're hoping to do. And you raise a good point, Alex. Does that divert attention away? I think there's the flip argument to be made that it also brings some attention back on Elon Musk and shows how very focused he is on his core businesses. And we were talking about Tesla on Trading 360 today, and the big conversation was about how critical Elon Musk's focus is to the success of any of his companies or products. And if he seems focused, they seem to be successful. Whether or not the numbers are actually matching was the argument that was made. There's also the Cybercab, the production-ready Cybercab hit a showroom floor in San Jose. They showed the upgrades. They made some improvements. This is that self-driving. It seems to be near production-ready. It does not have a steering wheel, which was a big question mark. It's an autonomous two-seater. The photos are kind of fascinating. It looks like a partial car to me, but they're saying that they hope that it hits the production line in Q2 of 26. So this is potentially really coming, and I think Tesla has teased a lot of vehicles, but when you start to actually see them become a part of reality and actually physically have a vehicle to get your eyes on, that is another driver today. There was also some headlines about director compensation that's driving a move to the upside today. So several catalysts. But I would say that the big ones really are around, this potential bullish move in autonomy. But I say that with a caveat because Morgan Stanley downgraded Tesla from overweight to equal weight and said that their high expectations around AI innovation have brought the stock closer to fair value. Now, they did raise their price target to $425, but that's about $50 below where we're currently trading.
Yeah, and I think that's it's been somewhat brushed over because the optimism really from Dan Ives has been so much more of the frontline story today. But I do think there's still some skepticism when it comes to the timelines and the ability to deliver on a lot of the autonomy focus. I mean, there's a lot riding on Tesla's next year. It's like that pretty much every year. But what we do know is deliveries for a yearly basis at least expected to contract for the second straight year, which is not a theme that you want to see continue. So all that being said, as we now think through trading Tesla, again, for example purposes, a lot of conviction. We always say it's one of the most highly polarizing names, but today is definitely seeing a nice bit of upside and some positive commentary going forward.
Yeah, I mean, I was just looking at the chart. If what I'm looking at is accurate, this may be, if we were to close here, the second highest close ever for Tesla. Now, it did have a day where it peaked up to 488.54, but that day it ultimately turned around and closed like sub 440. It does look like the day before that, though, it closed around 479.86. So, I mean, we're in striking distance here of an all-time high close, if not even an all-time high intraday if the market were to firm up alongside Tesla. That said, critical area on the chart for it to break through. If you think it's going to, and it's going to continue to make potentially new highs into the new year, I have a coal butterfly here for an example that looks for a move basically right to 500. We talk about the psychological importance of those big round numbers, but also in the case of Tesla, you could just read the headlines now. $500 a share for the first time. If that were to happen by New Year, this is a strategy that could benefit greatly from that. It's a 485, 500, 515 called butterfly spread expiring January 2nd. And with this, it's $1.50 debit. So you have two break-even points. Basically, you want this to end up between 486.5 and 513.5. With it being closer to 500 being your best case scenario, that's where your theoretical max gain would be 1,350. So the first thing many would see is, oh, I'm risking 150 and I can make 1,350, like sign me up. but you need to be really, really right, guys, and it needs to be basically at expiration. So it's very, very uncommon to capture that full max profit, but for the conversation, we show it.
Yeah, and hey, Tesla is now looking like one of our best performing Mag 7 names, at least on a month-to-date basis, as we've climbed now about 10.5% for the month of December so far. But we'll leave it there for FOMO. Appreciate it to Marley Caden, host of the Schwab Network, for that breakdown. Coming up next, we'll discuss Micron getting a price target hike ahead of its earnings Wednesday after the close. And we'll also dive into what investors should be watching in the broader video game space, which has faced a good degree of consolidation as of late.
Carl's way is the best way.
Is it? At Schwab, how I choose to invest is up to me.
Exactly. I can invest and trade on my own.
Yes, and I let them manage the investments for me too.
Let's move on, shall we? No can do.
I'll get out here.
Where are you going?
Schwab. Schwab, a modern approach to wealth management.
Stay connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are. Morning Movers brings traders the biggest headlines to start the day. From volatile overnight swings to the earliest analyst calls. Get your watch list ready. 8 a.m. Eastern. Morning Movers only on Schwab Network. Well, next is about things that we discussed some of the analyst conviction here on Micron ahead of their earnings event, which will be Wednesday after the closing bell. Joining us now is Dan King, colleague host of Morning Movers, for some insights on this call from Wedbush today, which I will say is pretty optimistic, all things considered. I mean, price target raised to $300 a share.
No,
it is. They brought more bullish on Micron ahead of its earnings, and they're essentially seeing this results being raised quarter for Micron. They're raising their price target, as you mentioned, to $300 a share. That's more than 35% higher than what their previous price target was. Their previous price target was $220 on that one. So they have more conviction around this because they're expecting Micron to benefit from bigger than expected increases in memory pricing. So they're expecting DRAM prices to rise at least 30% in the current quarter. NAND prices, they're expecting that to climb at least 20%. So these again are on the low, the at least side, 20 to 30%. They do point out that gains could vary by manufacturer, especially depending on product mix and contract timing. But they point out that Micron's guidance only is looking for high single to low double-digit increases, and they think that's understated, especially when you look across industry pricing. So they think that their Q2 results could meaningfully outperform where expectations land. The one caveat I want to point out, this is Jay Woods from Freedom Capital Markets, who his note on Micron is looking at the technical aspect of it. One, obviously, the stock has had a huge run year to date. One of the things that he pointed out is that shares have traded lower off the back of the last 4 quarters and 5 of the last 6 quarters. So, that's something that he pointed out that it could be a case of seeing shares rally into the event, and then sell off on the news. So, which we've seen that before, right, where investors sell the news. So shares are gaining some ground today, though those gains have been tempered throughout today's session, guys.
Yeah, and I will say that at least was looking, this has been one of the stories of this year, but at least today we're slightly higher. I know not making a huge move, we've given up some of that strength, but I think that it's been now up 184% in 2025. It's been a really impressive story to follow alongside Micron and all that strength. So appreciate it, Dan. You can follow Victor Morning Movers for that breakdown. And now shift gears into the broader gaming space and some of the trends we're seeing emerge from video games for 25 into, of course, the new year. I'd like to welcome in Michael Packer, Managing Director of Strategic Planning at Wedbush Securities. Michael, first and foremost, thank you so much for joining us on this Monday. As far as industry consolidation outlook here for the gaming world, what are you watching for now as we head into the new year?
Well, there's really not much left to consolidate. So, we lost Zynga and then Activision the last couple of years, and now EA is under contract to be sold to a consortium that's led by the Saudi Public Investment Fund. The only big guy left to buy is Take-Two. And I think Ubisoft might get taken out just because they're a mess, but they're small and they're not particularly, they're not profitable. So Take-Two is the big profit center, and they're the only ones left. When I started back in 2001, I covered 11 U.S. public console and PC publishers, and I think we're down to 1 now. So they've all disappeared, either bankruptcy or consolidation. Not a lot left to buy.
Michael, 2 questions. First one, relatively straightforward. Does Grand Theft Auto actually get released in 26, as that's been the big conversation for games? And 2, has the mobile adoption for these bigger companies and sort of the brand IP lived up to initial expectations, or has it been kind of a flop?
GTA coming out eventually. Those guys get a free pass. So if they decide that it's not done in fall of 26, it'll get delayed again. It's not like them to delay multiple times, and they have now. They delayed out of 25 into spring of 26 and then into fall of 26. I don't expect they'll delay again. They dated it. I think that they fully intend for the game to come out. And they're like James Cameron making a movie. You know it's going to do $1 billion, so you just let them go. As far as mobile, I think people really misunderstand mobile. Mobile is not an extension of console and PC gaming. Mobile is its own thing. So, think about that the way you think about movies and TV. There are franchises that franchises are created for television, and the vast majority of movie franchises are created for movies. Console and mobile work that way. So think of console like a self-contained story, it ends in a few hours. And think of mobile as something that goes on and on and on forever. Hopefully Candy Crush, I think, is 13 years old, 15 years old now, and is still top 5 game. So think about that, and they're just different businesses, which is why we haven't had a lot of crossover success. Activision bought King, it's the only way they got mobile. Take-Two bought Zynga, it's the only way they got mobile. So there are plenty of mobile companies out there, none that are particularly large in the West to invest in. One I know so is Ultra, one is Playtika. And I think they're really interesting companies. The reason I know a lot is they created something with mobile, and they start to build again, they'll bring 10 million so hopefully your viewers will join them. I am talking my book, but I don't know they ain't.
Okay, so outside of the mobile world, we're hearing from the mobile office of the CFO and guidance that gives some emerging question concerns about their investment.
We gotta save people, no.
Their AI push. How is
I need to save them all,
shaping this entire world because it's, frankly, it's reshaping everything in tech right now.
Roblox was at 140 shortly after
That's
they went
the world,
public,
man.
back in
Don't nobody
2021. And then they dropped down to the 20.
It's really like that.
I was an analyst covering this data, and we got rated at 29, I think. Mostly because they were getting religion about not owning data centers and starting to use third parties, and the margins started to expand quietly. So the stock ripped back up to the hundreds, above 100. Then CFO left, and the new guy came in, and I think he's doing what new people do, starting out conservative, and so he said, oh, we're going to invest in data centers again. That is the all-time dumbest idea ever. They don't need to own data centers. The only reason to own data centers would be if there's nobody else to build them for you.
I guess I'm stuck.
And the fact is
that not only
is there's somebody else to build them for you, this AI boom means everybody's building data centers everywhere. So there's tons and tons of capacity out there. If anything, the capacity is overbuilt. That's why you're seeing more slowing down or data center deployment. There's a lot of skepticism on AI that they're over capacity, which means Roblox is
wherever I can go.
As far as AI for the business, Roblox is what's brilliant about Roblox is they are a platform. So there is no game called Roblox. They don't make games. They never make. They make an engine designed a system to build your own games. Think of them like Microsoft is PC. They don't write anything. They just give you the tools to write something. You compose on Word. Roblox is that, and developers come to the site and build games. AI is going to make it easy. So a team of 2 people who wants to make a game, let's say about travel, doesn't have to build a cruise ship. They can pull something down from an AI menu. The ship can be in any port they choose to put it in. And let this construct the AI.
It ain't about that.
Manipulate this image.
Like I say, it's just the conversation part of it. It's just the, me family. It's the same thing with friends too, bro. We just know each other. Ain't nobody trying to do nothing, bro. Like, hi, hi, bro. But at this level, like, if we can never talk, bro, like, you are always. And like, I know everybody, like,
we have a fund, the AI Revolution Fund. Roblox is in it. The AFCs, Tesla, and Roblox as beneficiaries of the AI boom. So yes, they're very, very.
We all have
We just need the CFO to get a little bit more aggressive and say we can't in fact expand.
No, I'm saying, no, what I'm saying is
you mentioned consolidation, you mentioned the sandbox style, Roblox, Minecraft, and also kind of that free-to-play microtransaction take over the last decade. What's the next big thing that we're not talking about?
We're right in the midst of my new job. I'm raising money for a fund.
It's not, I'm not even mad at that. Like, I did my own business. If it wasn't for trading and investing, bro, I'm probably doing this. It's literally the way it is. It's like
they literally spent 75 million on those games, and those games combined are $1 billion. So Owen's trying to do the same thing.
I don't make some video, I talk about SoundCloud, I really don't care what people do
game development.
But what really hurts is like, the person that's always good, they need some real, I swear to be retarded, bro. And that's what really hurt me for family, because I never ever asked me like anyone to do it. One day, franchise. When I started asking, like,
I think it's great to break down some of the spaces. You mentioned it's a different world than when you first started really covering these games. So there's a lot more to cover at the time, but really great insight as we towards that into 2026 rapidly with appreciate it, Michael Packer, Director of Strategic Planning at Wedbush Securities. But now shift gears into it's great to see some progressive data for the real world, focusing on cyber mining. I think most of the Schwab network. So we're seeing some more time here. Walk us through what drives the
under significant amount of pressure at this stage, and it is down to double digits right now, with 8% lower. And so we are seeing a bit of a sell-off here, you could say, the least in this stock, but it's being felt across the whole industry right now. I mean, if you take a look really at the Bitcoin exposed space, you've got Iron, which is another Bitcoin miner, Australian company, down almost 10%. You've got Clean Fund, also down in double digits, almost 15%. In fact, that is feeling the most pronounced losses across the space. But you've already also got some of the Bitcoin treasury companies, of course, like Strategy down 8%, and Coin down 5.5%. So this is really big.
Bob for sure, but he didn't want. I used to come over, bring my Xbox over, play my little.
Bitcoin, Ether, Solana, really all getting hammered today. We're seeing Bitcoin is back to levels of 85,000 and change. Now, the reason why we are seeing shares down so significantly, obviously, is because it's tied very closely to the price of Bitcoin, so that weakness does tend to knock some of that sentiment lower. Markets have been relatively speculative, I should say, cautious around the speculative type trade as well. There is said to be a strong correlation here with tech stocks. Obviously, we've been seeing some of the rotation out, the more high-flying names into other parts of the market. There's certainly been a trend that might be closely linked to what we're seeing as far as a bit of a pullback here. Not to mention, there's also talk of crypto sort of being related to, the whole popular carry trade to BOJ's, of course, expected to hike rates later this week, and so there has been some speculation around some potential for an unwind of those positions, which are tied up to basically trade some of those more speculative names like Bitcoin and also technology stocks. So all stuff to keep an eye on. Also seeing some other reports that are related to crackdown on mining over in China. Obviously, this is something that we don't typically see, but there has been still a lot of mining going on in China, despite the fact that it's obviously banned. The fundamentals still look good in this company, but it is off significantly today, very much off the highs that we've seen. Look at early November, for instance, still up though, 220% year-to-date, guys.
Sam, when you look at a company like this, fundamentals aside, I don't want to oversimplify it, but in many ways, is this just a higher beta extension of Bitcoin itself, the same way that some of the altcoins or Ethereum, the correlation is so strong. And if you're not bullish on Bitcoin, are you even keen in this stock?
Question, Alex, because while it's not a good time to be exposed to Bitcoin if you're a company, obviously because the prices have been volatile, it is a good time to be adaptable, to prove to the market that you're able to see the writing on the wall when it comes to being exposed just to Bitcoin. So we're seeing a lot of the companies, like this one, for instance, that is not relying on a big chunk of its revenue or its sales or its exposure coming just from cryptocurrency, Bitcoin. In fact, it has managed to adapt. So it's also got this announcement of partnerships with AWS, particularly deals in the data center space there. It's also got this leasing agreement with Stack as well, 10-year high-performance computing lease agreement. So, these companies that are able to be adaptable are very much benefiting from that. But yes, you tend to see this correlation between that pullback in Bitcoin prices. But yes, we are obviously seeing this one down double digits, and we do see that strong correlation, as I mentioned. But just to look across the fundamentals, still, it was big across the board, but I think it was really about the announcement that it is managing to diversify some of its uses just the way that Bitcoin has helped.
Yeah, I do have your diversification. The performance of the broader asset class, but appreciate it, Sam Bottom, strong network for that breakdown. That'll do for Alex and myself, and actually investing for this Monday. Watch what's coming up next.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client client satisfaction by JD Power for 7 years in a row. With investor checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists. Streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
Mom, when my grandparents moved here, did they know what our family would become?
I don't even know if they could envision it. To leave everything behind, literally come across the entire world. I think that we totally met what their wishes were. Schwab has been with us for almost 25 years. Through purchasing of houses, opening up our business, having children, they've always been there for us.
I want to invest with a company that can help me give my family a happy financial future.
Stay connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are.
Good Monday afternoon and welcome to the Watch List. I'm Nicole Petalini. So glad you're with us. It's 2 p.m. Eastern Time. And we're coming to you live from the New York Stock Exchange on the corner of Wall and Broad, where things started off into the green, but we are seeing some pressure. Energy, for example, is one area that has a down arrow. Today's show will focus on some AI growth, and is that starting to fade? We'll discuss why one of the main market drivers could be slowing down. We'll explain. Also getting into crypto and the new phase that Bitcoin seems to be entering here in the new year. Our panel's ready to talk all about Apple and putting that into focus as the tech giant has another strong year. And what can we expect? Other names that have been in the news include NVIDIA and Tesla, with some great news from Tesla today, pertaining to Dan Ives' call on Tesla. But we're going to cover it all for you, and a lot of economic data and earnings this week as well. Some of the economic data delayed, but we're going to get more, particularly tomorrow. Here's a quick look at the markets with 2 hours left of the trading day. Right now, you're seeing the S&P 500 down 0.1%. The Nasdaq is down 0.25%. The Dow is down 93 points at 48,364. The S&P is sitting at 68.19. The Russell losing 0.5%. Oil and gold are mixed. Gold is higher by $15, and oil's at 56.53 the barrel. The 10-year bond yield is 4.18 at this moment, and that's worth noting because it's been moving around a couple of bits. And there's a look at Bitcoin, which has dropped even further now. It's down 4.7% here at 86,180. pressure is on crypto. We'll talk a little bit about that. Kevin Hicks, host of Fast Market, is with me here at Schwab Network, talking about a few things, and we're looking at ServiceNow, which could be in advanced discussions. Let's hear a little bit about this. What's going on?
Yeah, there's a $7 billion takeover in the works for ServiceNow, but that might not be the biggest story. The biggest story might be the double downgrade that they got today from KeyBank, Nicole. KeyBank basically sent them to underweight from sector weight, lowered the price target to $775, Nicole. And here's the quote in their note that really caught my attention. It could be the death of the software as a service narrative could come for ServiceNow in 2026. This is the digital AI company, a software company, and remember, this stock traded almost $1,200 at the beginning of this year, the end of January, now trading below $762. So it's a big downgrade, despite the fact that they're also trying a $7 billion purchase of a software security company, or cybersecurity company. So there's a lot going on here with ServiceNow, and stock very heavy today, down 11.5%.
Understood. I mean, there's a big mover here, one to watch. What about the November jobs report? We're getting data tomorrow. I know it's delayed, but what are people saying, and what are they watching for?
So it's, this is a big deal. Here's why. Number one, it's delayed. It was supposed to come out, a week ago Friday, the first week of the month, the first Friday of the month. So it's delayed. It's also, remember, Nicole, we didn't get an October payroll number. So they're saying, what I read is they're going to combine the two numbers and put this out to combine the data. So what does that mean? Well, we'll find out tomorrow. It's kind of a little bit of uncharted territory there. Now, the expectations are for 40,000 jobs, an unemployment rate of about 4.5% are the estimates. Wage data up 0.3 month over month, and moving from 3.8% to 3.6% year over year. So obviously, this is the number one data point of the month that we get is non-farm payrolls and unemployment. We'll watch it tomorrow. It'll be a market mover for sure.
Understood. All right. Good to see you. Kevin Hicks, thank you so much. Really appreciate it, Kevin. Thank you. You want to listen to Barbara Goodstein next to get the big picture. Barbara's with me here, managing partner at R360. Thank you for being with us. I'm glad you were able to make it on this day where we saw a complete turnaround. And, we're seeing Google down, some Microsoft, Apple, but it's also some of these energy names that are weighing. What are your thoughts on the market?
So we are always placing long-term bets. We don't do anything quickly. This is a very affluent group of people. So the members at R360 have a monthly meeting. It's called our Market Opportunities and Risk Call, and we look at long-term opportunities. So this is a 20-year play. They're not looking to cash in their money anytime soon. They're investing for the long term.
Isn't there a minimum for this? To be a part of this group? What was that?
So it's $100 million in assets minimum, and it's a group of very wealthy people, which is why they're interested in investment opportunities, and they're also looking at philanthropy and doing good for the world.
I remember last time we talked, a lot of those folks were looking at crypto, right?
They are.
Are they still?
They absolutely are, and as I said, it's a long-term play, so people are holding this for 20 years or more, but crypto has some amazing benefits. And crypto historically has gone down 20 times in the past 10 years. And the shift, when it goes down, is over 30% drop. So crypto is not for the faint of heart, but crypto is really a good investment for the long term. 10 out of 14 years, it was the top performing asset class. So our people are still invested in crypto. Nothing's changing their mind. They're all in going forward for the future.
So $100 million is the minimum to be a part of this exclusive group, and it's very special because they have really intelligent, long-term conversations. What are some of the things they're discussing? Let's just start off with the AI revolution. Where do they think we are? What are they saying? Are they still seeing opportunities? What kind of opportunities?
So there are opportunities, but in the tangential spaces. So yes, we think everybody should own Microsoft, NVIDIA, but then there are tangential opportunities. So this is the middle layer of companies, the a layer of companies that's into verification and security and governance, and we believe that those are the companies that are going to perform best going forward.
Interesting. What do they say about the current rate environment? I mean, there are folks who think that the rates could come down, but then go back up to 4.5 for the 10-year, for example. Are they sort of watching that closely, and what's the takeaway?
Well, because it's a long-term play in this case, nobody's making any fast moves. Everybody's invested for multi-generations. This is about growing wealth for the future. This is about growing wealth for your children. The average net worth of our 360 members is over $500 million. So they are very focused on what can we do, where are the huge opportunities in the future, and that's why Bitcoin always comes up on top.
What are some of the top stocks or top ETFs or indexes that they buy? I mean, what are their go-tos? I don't know if you can give us specific stocks or ETFs, but what do they buy?
So in the Bitcoin space, we're looking at stocks that are using Bitcoin as their treasury. So there's a stock called DRR now. Naka is doing the same thing. So they're using Bitcoin as their treasury, and we think that the Bitcoin itself is undervalued. So basically, the stock itself is undervalued because the Bitcoin is at an all-time, a recent low. So we think that there's a lot of upside opportunity there.
I mean, with Bitcoin, we're not at right now, not even at 90,000, can't hold it right now. But there's plenty of people who say 100,000, 200,000, and there are even those who say million. Do you hear the million Bitcoin thrown around a lot?
Yeah, we do, and that will be someday in the future when the markets stabilize. Right now, a lot of the investment firms are recommending 4% allocation in Bitcoin starting in 2026. So Merrill Lynch, Morgan Stanley, Bank of America, if you're recommending 4% allocation in Bitcoin, that space is going to see a lot of growth.
What else would see a good amount of allocation? I mean, 4 or 5%, that's a pretty good amount.
Right. So we also tell people to invest in gold, and gold is another hedge against inflation. You use gold for different purposes. So gold is 1 to 2%, and then depending on what's happening in the markets, we can make adjustments from there.
Understood. What am I leaving out? I mean, in these discussions, are there also worries about a big sell-off? Do people put money in cash, or are they just stay fully invested?
Well, this group stays primarily invested, although just like Warren Buffett is willing to hold so much cash, we're willing to hold cash too. There's no reason to invest until you're ready to invest and you see a big opportunity. Warren Buffett might look at buying railroads someday in the future, so he's got to have his powder dry for when that happens, and we have the same philosophy. If you find the right opportunity, you invest heavily in it, and until you find the right opportunity, there's no reason to jump.
How often are they interested in IPOs? Often, sometimes, or never?
Sometimes, and again, it depends on the company, and most of the time, people are investing in the spaces they know. So we have 20% of our members are very successful financial investors. They come together in a market opportunities and risk call once a month, and they talk about their areas of expertise. So we have a top investor in commodities, we have a top investor in biotech. They talk about what they're doing, and everybody learns from them.
It's pretty amazing. I mean, you mentioned gold. I mean, do they look at the other metals like platinum and silver and everything else?
Yes, and silver's gone up. It's at an all-time high, and gold is outperforming, and it's also at an all-time high. So all of the metals are looked at. Our commodities guy is very sharp, and he's not only looking at metals, he's looking again at the ancillary businesses that support all of those commodities.
What do they say about the China story, and why is that important?
So China ends up being a bellwether for how the larger markets are going to do, and everybody pays attention because their impact can be enormous. Just like China in AI has been investing for a long time. They are not as determined as we are to sort of go forward quickly, but they've got AI built into all of their different systems now, and even if it's not the best case scenario where they want to end up, they've integrated it thoroughly. So we're looking at China relative to AI right now and trying to figure out, who's going to succeed in the end.
ETFs are definitely something they look at. You said you talked a little bit about ETFs. Can I hear a little about that?
Sure, so it depends on the asset class again. If you're trying to buy ETFs just to protect yourself and get in and out quickly, there are ETFs for Bitcoin, there are ETFs for hard assets, there are ETFs for every possible sector that people are interested in. We were recommending ETFs for infrastructure because we think that those are going to do well in the future, and that way you get a basket of products. you're not investing in one particular stock, but you're investing in the asset class.
We're looking so much at this group here, a special group. When you're saying they have on average 500 million, is a lot of this generational wealth or more earned themselves?
This is in this group in R360 is primarily
I bet y'all. I was boy.
successful, and now they're looking at how to preserve, maintain, and protect their wealth, while they also look at building legacies and philanthropies for the future.
Need this to
When they
break.
look about investing abroad, do they talk a little bit about that? Because I know you said there's growing interest abroad, just even in R360 to be a member.
This is rough.
And we have one value.
Big consolidation on the market.
Recommending financial stocks abroad, so it can be anything global, any type of investment opportunity. We cover that all in that market opportunities and risks running on a monthly basis.
And I mentioned some of the AI themes, and you talked about, for example, cybersecurity or things like that. You said some of the key companies that they're watching is Fair Isaac, which is FICO.
You said what?
ServiceNow, which we'll take a look at that. CrowdStrike, Palo Alto.
Why are you even talking to me?
And Siemens are some of the names that they're watching. I mean, any thoughts on any
what'd you
of
say?
those? Do they seem excited on any of those?
Well, we're watching all of those same companies, so everybody's in the same place. I think that is the middle layer that drives this whole space further.
Oh, no, what
so
they was
everybody's
talking
looking
about.
at the same types of companies now, but it's the
I just
right
came
way
back
to
in
look
here
at
because I heard
this.
somebody
There's a lot
talking
of
on the
upside
TV back
still
there.
in AI, primarily in the stocks that
Bro,
are
why is
focused on
the
AI,
market's not
upside in
the market's not going nowhere the whole time?
Right, understood. I mean, ServiceNow, for example, has
I don't
news today.
I don't hear it no more.
It is down about 11% today, so that is a name that's been hit a little bit hard today.
I don't hear it anymore. I think they all left.
Where do they say the S&P or the Dow or something's going to be in 5 years or 10 years or 20 years? Higher for sure? I mean, do they seem certain or no?
The market is consolidated, and I can't really trade while it's consolidating like this because
strategic investors, but as I said, they invest for the long term. So
a what? A seed? What does that mean?
in the next 5 years, I'm sure they would say yes, they would, but they're not
What's a
moving their money
seed?
anytime soon. So just like a Warren Buffett, they make a long-term play and they hold that play.
It's so exciting. I remember the last time we spoke. I mean, it just...
No, I didn't even buy those damn seeds.
I'm sure everybody wishes they could be in on the meetings with these pros. Thank you, Barbara. It's wonderful to see you, Barbara.
I ain't messing with Chop. Chop's sensitive. We gotta be nice to him.
Thank you. Coming up, Options Corner, Tom White joins us and highlight unusual options trades that we're
Some of these women on Swap can get it too, boy. And they call me. I ain't gonna lie to you.
We'll be right back.
Whoa, you gotta watch your mouth. Hey,
I don't fuck with
we don't say that on the chat. We accept all walks of life. I'm about to hop on 2K if I fall asleep in here. But we would have had the team. Ain't no way we would have lost by one shot earlier too, bro. That was weak. No, bro. It was because of the teammates, bro. It was bad. What's wrong with y'all mans, bro? Somebody get y'all mans, bro. He's tripping again, bro. Why is he saying that to me, bro?
Whether you're an experienced investor or just getting started.
Joe said, "That's your man's."
Our investing webcast series breaks down different investing styles, including growth, value.
You know what I'm saying? But that's your man's.
Best of all, you can ask questions by chatting directly with the education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Network connects the dots. Watch live, subscribe free at SwapNetwork.com.
Hey, Kiva, what you even doing right now?
All right, welcome back to the Watch List. It's time for Options Corner, where we analyze unusual options trades that we're seeing throughout the day. All this
Look,
activity
SPY rejected right here off this right here, right off the top.
the last full trading week. People are trying to get their trades in. Let's hear a little bit about
And
Google, one of the Max 7
it never did break out, did it?
lately, but now you found a bearish trade.
Now I made a new
rallied over 60%.
look right up here on this resistance that was sloping, but came up here, rejected right here. And here we are, down here. So we actually need all this to break for them to be bullish. See how they playing. They could push that lower.
Which has gotten great reviews. It seems like it's gaining
all this gotta get broken.
Pushing back against ChatGPT and others in this space. So that's kind of a double whammy for this company where
all this gotta get broken right here. Right now they pushed it back down.
Market share from them, but they've integrated Gemini into their search industry. Other segments
Hey, whose man's is that?
doing well. Google climbed through it over 32% last quarter. And then you throw in YouTube also. Everything seems to be clicking for it. That's why you saw the stock hit those all-time highs in November. Got a bunch of price target hikes, the highest one I think I've seen.
I ain't gonna lie, but Chop used to ball, bro. When he was on, he used to play on my team, bro.
They've got the EU. There's supposed to be a large find that's supposed to be maybe coming out in the next couple of weeks. So maybe there's a reason for that pullback along with the rotation out of some of the tech names. But even after this big run-up, I saw some unusual option activity.
He is a little weird, though.
This is off the January 16th of monthly option. You're not going to get earnings on this one. Earnings are after this. But a trader bought 9,000 of the January 310 strike puts. Made an average debit of about $10.50 on these. It's the break even for this trader when they start to profit to go to $299.50 over the next 32 days. That's only about 2.6% below the current share price in Google Alphabet. So I don't think this is somebody that's maybe hedging an existing stock position just because they're paying a lot for these puts. They're basically at the money at this point, or basically slightly in the money at this point. But yeah, this trader thinks over the next month we're going to see some downside here from Google Alphabet. And we've seen that in a bunch of names that have done really well in the tech space, where they're down anywhere from 10 to 20 to 30% from their recent all-time highs. Alphabet's only down about 6% from its recent high. So yeah, this trader's betting on some downside here.
All right, well, thank you for that, because, everybody's wondering what's happening with these Max 7 names. What about Oracle? I mean, you look at Oracle now, huge story stock, and now you found a bearish trade. I'd like to hear more about that. It's down about 2% today.
Yeah, stocks pulled back over 45% from those all-time highs that we saw just in September, when the stock shot up to about 345. This is on the back of all that news surrounding their investments from OpenAI, that $300 billion deal that's supposed to take place over the next few years. Now, they've already pushed back some timelines on that deal. The company came out after their earnings last week and basically said, hey, we're still on track to do all this integration and partnership with OpenAI and some of the other partners that we have. The adoption of their OCI platform has been going really strong. Now, their earnings weren't as good as the street anticipated when those came out, and that was a concern because what they're doing is free cash flow is not as high. Investment dollars were about double what they anticipated, about $10 billion this quarter, and I think they only expected about $5.1 billion. So the street was lowballing that one. So we're starting to see some cracks in here. They took on debt last quarter, also $18 billion deal to help finance the build out of these data centers for Oracle. But they do have all the partnerships. So this is one of those stocks down significantly from those all-time highs. And if this is the bearish activity in here, Also, this is on the January 9th weekly option, so this is about 25 days to expiration, where a trader bought 10,000 of the 160 strike put, so far out of the money to the downside. Paid an average debit of only $1.68 per put on these, so the break even for this trader where they start to profit is all the way below 158.32 over the next 3.5 weeks. That's about 15% below the current share price. So this trader thinks we're going to continue to see some weakness. Now, because they're only paying about $1.68, this could be a trader that has a big stock position that just wants to hedge some or all of it, or it could be somebody just picking up some cheap puts with the expectations that, hey, this this downturn that we've seen in the stock over the last 3 months is not ending anytime soon, and they're betting on some more downside here more.
Okay, thank you for that. I mean, these tech names, people are loving tech, but you see a little bit of, rotation that's happening, looking to other areas, and as you mentioned, 2 bearish trades here right out of the gate. Last but not least, let's hear your last one, Tom.
Yeah, Nike, they report earnings on Thursday after the close. The bar is actually kind of low on this one. Stock's off about, up about 10% so far this year, 2025, but rebounding a little bit. There's some optimism coming in with some of the channel checks from analysts. Up about 5% so far in the month of December. The bar is low. If you look at this one, there's the 1-year chart of Nike that we've got up there. But you look at a 3-year chart, this thing has just been in a downtrend for the last 3 years. And why is that? Well, sales, comparable sales have been decreasing. Margins have been decreasing. The direct-to-consumer business is waning a little bit. Remember, they tried to pull away from some of the outlets like Dick's Sporting Goods and some of the others in this space, and Foot Locker, but then at the same time, direct-to-consumer was doing really well. That's a high-margin portion of their business, but at the same time, now it's flipped, where they're getting more foot traffic in some of these stores.
Hey, come get the ball.
Nike had pulled away a little bit, so they're trying to fix that. CEO Elliott Hill has a plan.
Yeah, I ain't giving it to that point guard. I think he took them dumbass threes. I ain't giving it to him, bro.
Option market pricing in a pretty hefty plus or minus 8% move.
I'm trying to win, bro.
$5.50 either way. So I think the street's going to be looking at new products, innovation in this space, how the running segment of their business is picking up, competitive pressures from On Holdings, from Hoka, and some of the others in there. And then you start looking at their international business. Are they continuing to pull back on some of the growth numbers there also, because it's a big portion of their business, and the impact of tariffs. So they've got a lot of things on their plate going into this earnings report. But we did see some optimistic call buying in here, and this is in the December 19th monthly options that expire at the end of the week here. So you're going to capture that earnings bet. Trader bought 4,000 of the 69 strike calls.
It's that point guard. That point guard know he ass, bro.
Break even of just over $71 to the upside over the next 4 years.
No,
That's only about 5%.
I wasn't even gonna shoot that either, but
share price and well within that one standard deviation move.
yeah, that's what I told him. That's what I told him. I said I can't give that point guard the ball no more. I saw him take 2 badass 3. No, you can't force no shots. That's what it is.
There's some optimism here with the stock up about 5%.
I hope so. I came here to this motherfucker to win, boy.
Great to see you. Really appreciate it. Thank you.
Look, I'm scared, boy. These Reddits be making me lose, boy. I swear. I'll be spooked.
And then we'll turn our focus over to crypto. We'll discuss potential new phase in Bitcoin. I mean, we just heard.
Yeah, he pulled up on the defense and took a 3. I said, damn. He don't want to win. And he playing music, too. I'll take that shit.
Kick off the morning with the data and the decisions moving markets. Morning Trade Live breaks down the macro moves driving the price action, from Fed policy to global growth to inflation prints and geopolitical risk. Smart, fast, and always live from Wall Street to your screen. Morning Trade Live, where the markets meet the macro, weekdays at 10 a.m. Eastern on the Schwab Network.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis.
What the fuck is that?
Different
Why not even dunk the ball? I never even seen that before.
Best of all, you can ask questions you want to an education coach. It's interactive learning at its finest. Tune in live or on demand. Go to sheldronfrost.com/coaching and start learning today.
Real ain't gonna mess with you, bro.
Identifying new clients, selling, and helping impact markets. Watch live on Schwab Network and SchwabNetwork.com.
Trading at Schwab is powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders.
Bro. Fuck, bro.
Stacked with content curated
I missed.
spend less time searching and more time learning. Trade really good with Schwab.
Did I?
Welcome back to the Watch List. I'm Nicole Fennell, leading over live on the floor of the New York Stock Exchange. Here are a few movers for you. We're watching shares of Tesla. Even ground today comes as Wedbush's Dan Ives saying 2026 will be
Yeah, I missed 3 shots, bro. One of them shits is passing. Don't start forcing me the ball and shit, cause I don't even know what y'all on, bro. I'm gonna make every single shot, but you just gotta see me, bro. Don't expect me to go off the dribble and do some other shit. Cause I ain't never seen that layup they made me do though. That shit was crazy. Wait, you that big? Like, I've been putting 40 up on these guys. For the last 3 years. Like, I don't think anybody in here on my couch before. I'm a whole streamer. I watch y'all mouth. I'm making money while we playing this. Yeah. look, chat. Tell them they can Google me. I don't know what they talking about. They can Google me. Shit. Yeah. I'm laughing. I ain't screaming. I'm laughing at y'all. I don't know what y'all talking about. Y'all give me the ball and got the way. And then when I get the ball, you tell your point guard to stop running next to me when I'm open and stuff too. Tell him to find an open spot. Yeah, tell your man to find an open spot and get out the way. Quit chasing me. Like, stop standing next to me. That's what. Look, stop standing next to me. That's all I'm telling you. I'm the best. I'm the coldest. I'm the coldest, nigga. Now what? Yeah, now what? Yeah, look. Keep forcing me the ball, right? He keep forcing me the ball. And he gonna be like, he took 3 bad shots, bro. You keep doing dumb shit. Find me when I'm open. Don't just give me the ball. You want me to bring the ball up the court? Is that what you want me to do? Bro, we losing, bro. And y'all, bro. All y'all, listen, my nigga. Listen, homie. We losing. All y'all taking bad shots. I don't lose. I don't take bad shots. That's the thing. Y'all used to this losing and y'all playing together. I don't play with y'all. My team, look, my team, we win. And if you give me the ball, we gonna win. We losing because of y'all. Yeah. Just keep forcing me the ball. He want me to carry y'all. That shit crazy. I said, find me when I'm open. Now he want me to play, make, and do everything else. Stuff is crazy. No, I wish y'all play basketball right. No, you ain't have to take up for me. Talk to your mans. I'm better than your mans. Talk to him. Look at this junk. Just forcing me the ball, right? Like, look, I could be the point guard if you want me to just have the ball. That's why I said, don't give the point guard the ball no damn more. That's your mans. That's your mans. You defending your mans. I'm trying to win the game. I'm trying to win the game. Look, I'm trying to win the game. What are you talking about? Yeah, I don't care what you're talking about. I'm trying to win the game, though, homie. I'm trying to win the game. Whose man is this?
Do those sound doable? For me, yes. I think Bitcoin is going to go to the moon, but I've also been in Bitcoin for quite a while.
Come on, David, bro. Can I have this whole corner, bro? You see me cut and come back, bro. How I see you there when I was there first, bro? Yeah, do what you gotta do, because you know you ran over where I was, bro. Just like the point guard keep doing. Yeah.
You also need to use it because that is how Bitcoin protocol works. And that's something that we're going to see you being focused on.
That's what I'm talking about, Chad. All these randoms be trash and they making me lose. I'm tired of making content of people just making me lose. That stuff's stupid.
Absolutely. I think the biggest dynamic shift we're going to see what's
oh, open again! What is going on? Yeah, bro, I really gotta take over this damn game, bro. Do it then, bum. Do it then. Yeah, I know you don't. I know you don't want to do what I do because you can't do it. Alright, so shut up then. What you talking about then? I know, you right? You right about that? I don't go back and forth with kids, bro.
Now, when you talk about the Bitcoin curve, explain that to folks and why that's important. Bitcoin curve?
Matter of fact, one of y'all put one of y'all girls, somebody on the phone, bro. What are y'all talking about?
Feeling the volatility, or, you know, how volatile do you think the volatility that we've seen for Bitcoin is way less than previous cycles, and I think that signals maturity or maturation of Bitcoin as an asset class.
Yeah, I need two of them again, yeah.
To be less volatile, and we may not see the crazy spike that we see in every single cycle.
Two of them again, yeah. Drive kick to me, yeah.
Bitcoin cycle is ending, and we're going to see just much more gradual cycles because Bitcoin and crypto are institutionalized.
But I hate people on 2K.
Not going to be shifting anytime soon, especially with the Genius Act, especially with clarity, with all this regulatory shifting, both in the United States and around the world. That is going to have this compounded impact on the longevity of Bitcoin and crypto, which reduce volatility and increase that base financialization that needs to push the industry forward.
Just the fact that he shot that shit is crazy, bro.
Crypto, Bitcoin, and gold.
Like, why would he shoot it, bro? Fucking God, because nobody wants to play defense. They really want me to carry him for real. Just giving up the damn game. The whole time, just selling.
I think it's much more powerful, and that's because if you look at the purchasing power of the US dollar over time, and you look at the purchasing power of Bitcoin over time, that's very different and very favorable towards Bitcoin. So long term, it does tend to be a better play, and I think it's going to continue to do so. However, I think now Bitcoin is a little bit trapped within the store of value narrative. People compare it to digital gold, and obviously it has maintained itself as a very, very good store of value, but it is important that it transcends beyond that. It becomes more like financial technology, which is what it was written for, and a medium of exchange. And I think now with a lot of yield-bearing instruments that we're seeing come to Bitcoin on decentralized financial ecosystems, we're really going to see that shift that pushes Bitcoin forward, and yield is going to be key. All right, Alicia Painter, thank you. It's great to see you. Thank you so much. Co-founder, CEO of Photonics Labs. Thank you for joining us. All right, coming up, we're looking at market sector trends and what might be on the rise. What about small caps? Where do those fit into the story too? We'll be right back.
Just fucking ass, bro. Just super damn ass, bro. Just super damn ass. All of them just be ass. God, equal.
Sometimes, you know, you could have done better. Same goes for where you invest. Level up and invest smart with Schwab.
Real-time market moves, earnings breakdowns, and trade-ready insights. Follow me on X_Bardas and connect with me on LinkedIn or Instagram.
Trading at Schwab is powered by Ameritrade, unlocking the power of thinkorswim, the award-winning trading platforms. Bring your trades into focus on the thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailored platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Welcome back to the Watch for Technical Penalty. So glad you're with us. Paul Schass, Senior President and Chief Investment Officer at Heritage Capital. Always great to see you, Paul Schass. How's it going? And I remember when you turned from, I guess, somewhat bearish or cautious to more bullish. You've been on that road. You had a great year, I'm sure. Was it a great year, and what now?
Well, we still have, 2 weeks left in the year, so I don't want to jinx it yet. Look, yeah, if you've been a bull for a while like I have, it's been 3 really good years. We don't often see 3 straight years of double-digit returns. It's really hard to get a catalyst for the downside in December. That doesn't mean 2007 and 2018 had downside. It's just hard to get the market going to the downside this late in the year, especially seeing a new high just recently. So I am certainly sounding more bullish heading into the new year. I think you can buy this little pullback every week as we get if you're nimble and get some short-term money you can certainly buy.
Understood. So when there is opportunity for 2026, what kind of sectors are you looking at? And we're almost there. And, some of us are waiting on Santa Claus to rally. What do you think could work for 2026 and why?
I think Santa's coming, and he normally won't come until next week, which a lot of people misunderstand that. It has nothing to do with December. Santa should be coming next week. Looking into 2026, I'm not bearish, but I do think it'll be the worst year since 2022. I don't think we're going to have 4 straight years of double-digit returns, but it's still okay. I see it really completely year to half. I am super bullish out of the gate. I think 4 years ago I said Dow 50,000 before the bull market ends. Dow 50,000 in Q1, and then I think it'll be Q1 will be a risk on. Q1, Q2 will be a risk on, and I think the second half of the year there'll be a pivot and things will change. It's a midterm election year, and markets sometimes struggle the second half of midterm election years. I think this will be the case, so I would want to be more risk on out of the gate. I want to harvest my acorns in the second half of the year. I would be buying some of the out-of-favor sectors later, like staples and REITs and utilities. I don't think there are plays out of the gate. I still think you can play the risk on. And look, since the April bottom, the tariff entry bottom, high betas led by an enormous margin. Small caps have beaten the S&P 500 and
Hey, big man, if I pick your man up, pick up the dude behind you, and then somebody else rotate, they don't get that 3. Shot defense and all this other stuff, bro. They don't play no defense. And the point guard don't know how to pass the ball. Y'all gotta work on that. Y'all gotta work on playmaking and find the right man and stuff. And defense! Get a stop! I do not know what's going on. Do you not see me carrying the whole team and all y'all garbage? Do y'all not see that? Like, do you not look at the scoreboard? Like, the dude quit because he's garbage, and the rest of the people playing is garbage. None of y'all got no defense. Do you not see this? Y'all can't pass the ball. He keep feeding me the ball to Curry, y'all. Like, who else is there? It's me. It's me and you, right? No, it's just me. Ain't nobody else to do anything. The point guard can't shoot. He can't score. The center can't get his own shot. I'm being forced the ball to do everything, and they freaking talking crap, and they all garbage. Like, what can you do? What can you do? Oh, my kids, what can you do? Like, it sounds like I got garbage in my mouth, but what can you do on this court? Like, play some defense. No, got no defense, can't score. Like, this is the easiest 2K to score in. Y'all can't score? Like, it's either the kids that can't play, then it's the grown man that can't play. Like, what game can you play? What game can you play? Spades? I'm about to get all y'all out of here. That's what I'm finna do. All of these, look, Bart, report all these people, so I'll never play with y'all weak people again. I'm tired of losing to bums. Y'all gotta start playing some basketball in real life. Start watching the NBA. Learn how to play basketball. All you gotta do is watch the NBA. Like, when you gonna start watching basketball and quit playing this junk? Cause y'all don't even know what y'all doing. You can do what you want to do. I don't care what you do. Yeah, I had to snap on them, tell them they don't know how to play 2K. Yeah. They can hoop. They can hoop though. He was hooping. Yeah. We hoop all the time. Yeah, he was hooping. I was hooping with them yesterday. Yeah. They do know. Yeah, they do. They dummy. Is it bad enough to go to the hospital?
We're going to talk about the year that was, Apple, and 2026.
You can't press down on anything. Is it numb or tingly? You better make sure you got some feeling right there. I forgot. I didn't think about it then, but of course now. That shit probably gonna hurt like a bit later. My bad, chat, boy. I almost came out of curd to him, though. I'm tired. I'm meant to go to sleep. I try to play 2K. These guys were selling me. And, I tried to send you some, and you said fuck that shit. I know, that shit would have been there now.
Opportunities don't stop in the marketplace. So why don't you show up if you run the
No, you don't even have to run over no more. My fact, I could just send it to you now. That's actually a good idea. You turned it down. It's like I could be shopping for you and just mail it to you. That shit come like Amazon.
No matter the hour, you can trade brilliantly.
No, I can't go expire. Bro, they're not gonna have no eggs, bro. Or you gonna get everything but the eggs. I can send you some meat. Yeah, like chicken, ribs, seafood. I can do all that shit. Yeah, they're having all that. Yeah. Bro, I just made chicken and rice from them. Bro, I got chicken. I got diced chicken cubes right now in the freezer from them. Bro, I told you I could get down to anything you want. You start turning shit down because you got too much money and shit. I said you gotta think about the little people that don't got it for real. Oh. You know what I'm saying? The people that's out here hustling. Let them work for you. You get me? Cause I can't eat all that stuff, and then when the kids come, they can't eat all that stuff either. So yeah, I'm about to look into drop shipping and start, get rid of some stuff. Getting some stuff and getting rid of it. Yep. I did that over the weekend. I saw how they do with the drop shipping. You know what I'm saying? I just gotta fill out the little apps, the little websites, and just get it going. Right now, I was already thinking they probably got, there's probably a whole bunch of them little heaters, them space heaters cheap right now.
With the Siri integration of AI through Google Gemini.
That's a hustle.
We think once that happens,
All kind of stuff is like that you can just flip that people be wanting.
New monetization.
I mean, you know,
Opportunities with Apple.
it will stack up into a nice profit over time.
The hardware device launches, whether it be opportunities on the services side, there are going to be.
It can even be rare fish, anything that people want. Some people like rare fish, like exotic fish. You might get them and start breeding them. Kiva, did you see PL today? Oh, this has just been a big consolidation test. See, the first, like in the morning, the very first 30 minutes was the move. Right here. This move that these indexes did was the best move in the morning. Then it's just been consolidation. So that's, I really think they might go lower the roof road. Like, just go lower eventually. I mean, this is the channel right here. Let me see. There's other stuff. Let me see.
We're not sure that that's going to have a commensurate impact on those iPhone sales, and so that is what leads to more time to be interested.
And then I was also thinking that I understand what you're saying. At the same time, I think we have a bit of a surprise lately on the news from China about the Apple iPhone. We've been seeing some good news on the China story. Is that a tailwind, Angela?
I think so. I mean, when I think about China here, it's been a negative story for Apple over the last 2+ years or so. We're looking at the guys that did on the iPhone.
They also could bounce right here too, break upwards and see what they got to do.
Well, so our fair value estimate is $240 a share today. So you're right, we are looking for a little bit of a pullback, but we actually do think that 2026 is set up really well, and it's just about how well that year is being priced into the stock. And we're seeing really strong momentum for the iPhone 17 family in China, as we were just talking about, but also in the Western world. But we see this a little bit more as the result of pent-up refresh demand, not necessarily anything idiosyncratic that's been successful with this specific model. Now, it remains to be seen if there is a killer AI strategy that emerges next year, and if that requires new hardware to build and for consumers to buy. I think that's the bull case for Apple stock today, but right now we just don't see that spring enough of those hardware device sales, and those are really what move the financials for Apple.
Right.
Why is somebody always picking you up?
We just think that there's a lot of opportunity in
Somebody's always picking you up.
in some of those infrastructure stuff that's going on, like the Marvell or where we're placing our
Yeah, I was trying to,
someone like an Apple, we're a little bit more tempered in our view on because we're waiting to see how it affects the potential for hardware sales.
It's really great to see you both, William Kerwin and Angela Zeno. Thank you so much. And we'll get a lot more on earnings this week, more on economic data, tomorrow jobs, and the late EO report. So thank you guys so much. It was good to chat about Apple there and more. And thank you guys for being here on the watch list. I'm Nicole Pittman, right here on Schwab Network. Thanks for being with us. You can download our Schwab Network app. It's available on the Apple App Store. 20% Schwab Network. I'm Nicole Pittman. Thanks for watching. Market Plus.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of your checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your Investor Checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Welcome to Schwab Network, where real-time market coverage meets expert strategy. From the opening bell to the closing bell, we got you covered. Get inside the minds of pro traders.
Bonuses at the beginning. A higher rate change in sales based on market guidance without saying a rate change in WPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
The show's built for action. We break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going to earnings. So that would be a further downside area for Schwab.
Excellent insights, actionable data, streaming live and online.
Schwab Network, streaming 24/7, anytime, anywhere, free. SchwabNetwork.com.
Mom, when my grandparents moved here, did they know what our family was becoming?
They don't even know if they could envision it to leave everything behind, literally come across the entire world. I think that we totally met what their wishes were. Schwab has been with us for almost 25 years, through purchasing up houses, opening up our business, having children. They've always been there for us.
I want to invest with a company that can help give my family a happy financial future.
Stay connected to what moves the markets. Download the Schwab Network app and stream anytime, wherever you are.
there's some scrutiny about where everything is being spent, where is the end user demand going to be, that will be the ultimate payoff. So I think as we close out the year, there's a lot to think about in terms of risk and reward right now.
James, as you think about risk and reward right now as it relates to AI, who do you see as the winners here? Is it the big names that we continue to talk about? We have seen under some pretty severe pressure over the last couple weeks, or is it some of these secondary AI plays?
Well, I honestly think it's too early to tell. Obviously, the money and investment been put on AI hyperscalers, chip makers, large language model providers. That's where a lot of money has been going. But ultimately, in order for that to pay off, the downstream effects have to be in play. Meaning, what other ecosystem is going to benefit? Clearly, the power and utilities that focus on the market in terms of the tangential benefit. But in order to get more of this to pay off, the AI narrative, you need to see the end user demand, consumers and businesses using AI in their daily lives, daily practices, and that has to happen. And I think ultimately when it does happen and do happen, that means businesses, the old economies will start to benefit from AI in terms of maybe higher profit margins as well as top line revenue.
We can monitor the market against the degree of protection. Something else from the headlines that we had. Sort of the headline is Broadcom and Oracle last week. Some say that we'll see Broadcom with a bit of a overreaction, but that's just one move. I mean, how do you take advantage of that pullback? Did you make a look? I'm wondering, do look at the protection? Do you believe that the market has ways to tweak things?
I think so. I think most of our investors are starting to recognize the level versus the high expectations and some of these names like the United and others. And you see again the potential for AI to benefit the rest of the stock market, the companies that are not necessarily producers of AI technology, but they are consumers of AI technology. And theoretically, at least, that should be a huge beneficiary that should benefit many of those companies.
We have this small group of stocks, mega cap group, that's just sort of been dominating so much so that it's almost forced a lot of investors to hold them because they don't want to miss out on these big names. They control so much of the market action. If we see the AI narrative crack, even ever so slightly in 2026, how asymmetric do you think the downside could be with how crowded the trade is?
It's very asymmetric. I think the AI narrative is propping up the economic outlook and obviously the market because of that concentration you mentioned. You're looking at 40% of the S&P 500 represented by just the top 10 names. That's an incredible amount of concentration, and most of those names are tied to one narrative. So you say live by the sword, die by the sword. That has been responsible for a lot of the gains that we've seen in the S&P. And if that doesn't come to fruition, the high expectations that are being built into these stocks, that could pose a significant downside risk in the market next year and beyond.
Give us a little bit more of data this week as some of those big backwards looking that are very important to at least justify what the Fed has done rather than what it does next, as some economists have been pointing out. But is this likely to move the needle, come next week with respect to whether the Santa Claus rally is on or off? Or do you think that has largely been priced in at this stage, the positioning has been done?
Yeah, it's difficult to say. I think it's certainly, if you get some softish data that's not sort of that Goldilocks, not too strong, not too soft, that actually may help boost confidence as we end the year here in terms of what the Fed might be able to do. Really, it's about flexibility for the Fed. Are they going to have the flexibility to address a weakening labor market, or do they have to continue to worry about inflation? So again, these two objectives of the Fed are at odds with each other, and this is making it very difficult and potentially bringing them to a point of paralysis next year, which I
So I think it's very subjective in terms of what that level is. And as you get members on the committee that differ in terms of their view, maybe some are hawkish and some are dovish, depending on their opinion of where that neutral rate lies, that's going to create a lot of dispersion in views. And ultimately, if there's a disconnect between what the market thinks is necessary from a monetary policy perspective versus what the Fed collectively thinks as a consensus is appropriate, you have a potential clash set up. Similar to what we saw, I think, back in 2018 when you had Powell talking about the monetary policy being on autopilot. The market rejected that very forcefully, and we saw a pretty significant sell-off in the fourth quarter of the year.
With all the uncertainties around what the Fed may or may not do, obviously everyone's looking at the earnings growth as far as a catalyst as well. I mean, do you think what we've seen here is sustainable into 2026? Because there seems to be a conversation emerging that this has been, the first of maybe several quarters now where we really start to question the ROI, particularly with regards to the hyperscalers. I mean, we've seen this sort of CapEx indigestion in the market. Perhaps speaks to some of the air coming out of these stocks in recent weeks, and so there's been a lot of talk now about, maybe the 493 getting a look in, and maybe earnings growth coming off at the rest of the 7. Do you sort of buy into that narrative?
I think so. This certainly wouldn't be the first time we saw an emerging technology get overpriced and infrastructure overbuilt in response to the promise of that technology. So I definitely believe that there are, again, the curse of high expectations out there in terms of what these names are expected to deliver in the next couple of years. And it wouldn't be surprising to see that some of those disappoint. And I think, again, there's a lot of competition right now in AI. And I think ultimately the beneficiaries of that are consumers and businesses who end up using AI. I think it's hard to pick winners and losers at this phase of the market cycle and the theme of AI. So it does feel like there is more unreasonably high expectations in certain names, and I think that is going to make it a very high hurdle to clear for the next 7.
Okay, Jason, we're going to wrap it up there. Thanks so much for joining us today. Really appreciate your time and your insights, Jason Orbit, Ocean Park Asset Management. Coming up next, we'll check in on the housing market as US home builder sentiment ticked up a little bit higher. Mark on close, be right back.
Opportunities don't stop when the market day ends. So neither do we. Schwab gives you round-the-clock access to over 1,100 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
I'm Diane King Hall on the floor of the New York Stock Exchange. When markets react, we are live with analysis that matters. Watch now, only on SchwabNetwork.com.
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab. Trading at Schwab is powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
Actually, I've seen something from Schwab.
Uh-oh.
Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties. Carl.
Schwab, a modern approach to wealth management.
Welcome back to Market on Close. I'm Marley Caden alongside Sam Bottis in New York. Shares of Zillow are under pressure today following a report that Google is testing putting home sale listings directly into its search results. Google reportedly testing these listings in a limited number of markets and only on mobile for now, but it is sending shares of several of these more real estate focused stocks down. Zillow, like I mentioned, down more than 7% today on the news. Of course, Zillow, a major website used to search for home listings anywhere. Real estate down 3.5%. They own brokerages like Corcoran, Sotheby's International Realty, Coldwell Banker, Century 21, and Remax also lower 6% lower today on that report as well. The real estate sector on the whole, though, up just ever so slightly on the day. I do want to send it back to Sam in New York to continue our conversation about the housing market. Thanks so much for that, Molly. So let's turn our attention to the housing market and welcome our next guest. So that's Aaron McLaughlin, who's the CEO from the conference call. Thanks so much for your time, Aaron. When we got the NAHB data this morning, 39. I mean, it's an improvement, but it's still well above that neutral line. That's what it says on paper. What are you seeing out there?
Yes, the housing market is still suffering from a bunch of issues, namely mortgage rates have remained high. So although there is some optimism for next year, and perhaps one more rate cut, rates are still well above 6% for a 30-year mortgage, and as a result, it's really interesting, the age of a first-time home buyer has peaked at 40 over the last year, and it was 33 in 2019-2020. So that's just an incredible difference in a very short period of time.
Yeah, I was pretty shocked at that stat. I mean, particularly in such a short amount of time. There's plenty to unpack there, but let's just talk about that. What do you think is behind that?
Well, it really is about affordability. So housing prices have doubled in that last 6-year period, and at the same time, over the last 3 or 4 years, we've seen rates go up. So it really is a matter of affordability. Now, for new home And then thirdly, the big thing is that regulatory approvals, permitting, the cost of land, all of that is just really, really tough for new home builders. And, you know, it has been a topic in the federal market, you know, regarding policy around these things, but really it's at the state and local level that a lot of these issues would have to be overcome.
Okay, so there's a lot of factors here. I'm just wondering, you know, as far as those high import prices, obviously that feeds into
we talked about NVIDIA sort of in a field of its own, right? It was in a league of its own. Its chart was so much higher than everyone else's. And now things have normalized a bit here. As we look at it more broadly, how has NVIDIA been stacking up over the last, few weeks or couple months?
Yeah, the party can't last forever. And we can see that NVIDIA is still vastly outperforming the S&P up about 34% versus the S&P up about 12%, but an underperformer versus the SMA Semiconductor ETF, which is up about a little shy of 40% here. When you look at it broken down even more versus some of the other names in the field, NVIDIA actually almost a laggard versus the likes of Broadcom, AMD, and Intel. It is outpacing QCOM, however, the Qualcomm, but it's still a bit more of a sideways lean toward the price trajectory here. You kind of have to wonder, if you're a trader facing this situation, are the days of these outsized gains behind us? Is there still another leg up to come? It's a difficult situation to make sense of at this time here. We did see that NVIDIA acquired SCAD-MD, which is the developer of Slurm, an open source workload management system for high-end computing and AI today. No details yet on the deal here, but that's about one of the more noteworthy pieces of news we saw today.
Yeah, interestingly enough, Evercore ISI also giving a significant price chart increase up to $352, almost double from where we're trading right now at 176.67. But if we take a look at the technical performance of NVIDIA, you mentioned these massive gains that we've seen and the potential is that slowing down? Could that be over? What are the technicals showing us?
Well, a lot of people say that we're still in the early stages of this whole AI situation here, but for now, it seems like it is a bit more of a sideways trajectory here. One thing I do notice, too, is that if you were to look at our recent price activity, kind of looks like a head and shoulders type pattern has developed here with a neckline near that 173 level, 174 level or so. Not a bullish pattern, this can be more of a bearish outlook here. And really, these patterns can go either way. It's not like it's a guarantee it's going to break downward here. But we do have what looks like a supportive zone here between about 165 to 171 or so. So that could be an area to watch going forward. We do see as well that our downward trend line is still in play off these highs, connecting these subsequent highs as well. 188, our red line here, that's our relative recent high. If we do break above our trend line, that would be the mark to beat in the short term here. When we also look at our other studies here, including our momentum study, RSI, we can see that after a short trip into the overbought area, the momentum has been moving downward here after an attempt to cross above that 50 midline. The bulls couldn't quite make it. Right downward sloping trend line in play below that 50 midline still as well, suggesting more of a bearish outlook to momentum here. When we look at our moving averages, we can see that they're all clustered together basically right on top of each other near about 180 or so. So this gives us a pretty easy confluence point to be on the lookout for a potential upside breakout, which also lines up with our trend line here. So an easy point to watch to the upside for the potential for a big push. When we also look here at our volume profile study, our point of control, our heaviest trading area of all, comes in right about where we are now, or where we were earlier today, at least 178.64 to be exact. You can see our thick red line there. So this is an important area for the bulls to hold on to. Notice not really a whole lot of activity between there and our next volume node down here, where things start to pick up near about 145 or so.
And that's a significant drop off from where we are right now at 176, just below that important 180 level that you highlighted. Now, as far as the options action in NVIDIA, a heavily traded name, are we seeing an increase in options activity today, or is it a normal day?
Today is a little bit lighter when I checked the sizzle, which is the options activity versus the 5-day moving average, was about 0.8 or so, so a lighter than average day. Still, to say that, NVIDIA at the time I checked was about 1.5 million contracts traded, so a light day for NVIDIA as many other stocks put together in terms of the activity. Open interest, about 20 million or so total. So once again, very, very heavy activity in this name overall here. Looking at our January 16th expiration here for that month, we can see that 32 days out, our yellow box here is our expected move, plus or minus 9.4% approximately here. The OI just for the month, by the way, 4.6 million, about 23% of the total name here. We did see one interesting large trade as well. Plus 7,500, December 26th, 210 strike puts, and a 33.45 debit. So a $25 million debit paid for this very large trade here. Not clear if it's opening or closing, but many large trades almost at that exact same time. So we could do a whole segment on that one, but we don't have time.
Hey, well, thank you for breaking down in video for us, taking a look at them as we head into the end of the year, like you mentioned, seemingly turning into a bit of a laggard in the space, but still heavily outperforming the market overall, up 41% so far this year. I want to send it back to Sam in New York, though, and find out what commodities should we be talking about coming up.
Well, we'll dive, Molly, into the metal space and look at gold, which is breaking back up toward its record high that comes up into the market on close.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you an active trader? Our active trading webcasts are designed to help you develop a deeper understanding of technical analysis, options, futures, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
I'm Jenny Ward. We'll be on the headlines, tracking the trends, sector moves, and fundamentals shaping markets in real time. This is Schwab Network. Subscribe to schwabnetwork.com.
Moving on. Birthday, so sometimes you could have done better. Same goes for working the best. Level up and invest smarter with Schwab.
What's up, Girl Nation? It's your number one broker with the best full-service wealth management skills in the biz.
Actually, I've seen something from Schwab.
Uh-oh.
Yeah, Schwab lets you invest and trade on your own.
And if you will, they can even manage it for you.
Not to mention Schwab has a team of specialists with taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties.
Schwab, a modern approach to wealth management.
Stay connected to the markets with Schwab Network. Tune in 24 hours a day, 7 days a week on schwabnetwork.com and on all your favorite streaming services. Schwab Network, available anytime, anywhere, on any device for free. Welcome back to Market on Close. Let's stand by some more of the New York Stock Exchange. Joining us now is Derek McPherson, CEO of Westpoint Gold. Hello to you, Derek. Thanks so much for joining us today. Look, the last time we had you on, it looked like gold had sort of gone under the radar a little bit just because we'd seen those record highs and it pulled back a bit, but we are creeping back up towards those records again. Just talk us through the price action and what's driving that right now.
Well, price action's back up, as you said, 52-week highs, or surrounding 52-week highs, the all-time highs, and it's pushing it, holds up 65% year to date, so obviously a very strong performer overall. And what's driving it is liquidity. I think as much as the rate cut was sort of telegraphed the Fed last week, I think that's continued to drive positive momentum in the gold price. And you got globally you have significant deficit spending on the governments, and so that liquidity is continuing to go in the system. And that's benefiting hard assets. I'm looking at the graph you have here on the side, and you got gold's doing really well, but so are silver, copper, and other commodities as well.
Yeah, obviously we've seen the dollar weakness very much helping gold catch a bit this year. That is set to continue into 2026. We've seen this aggressive central bank buying. Obviously China's been a big contributor of that. And as you mentioned, some of these sort of global concerns around debts and deficits coming from certain governments. Are those likely to be those sorts of trends that continue to drive this higher into the new year?
Well, I think you kind of outlined those key factors, right? You have central government buying, or central bank buying, which I think is going to continue. There's still the weaponization of the SWIFT system with respect to that. I think is still something that central banks are going to be obviously not going to continue to de-dollarize at the slow pace that they are doing that, and so that's going to provide buying support for gold. The other thing is you have this liquidity. We don't see any government soon. They're all virtually all governments are in heavy deficit spending, so that liquidity and that deficit spending, including the U.S., and so you're seeing that I think that's going to continue to push gold higher as well. And so I think when you have those two things, those factors are still there. I mean, what could be the red flag out there, or what could be the thing that kind of gives us a bit of a pullback? I think it might be a global pullback in the economy if we get that kind of that liquidity dump. But even that, I think, between the central banks and the governments, they're really trying to protect the economy against that, protect the markets against that. And so I really think it's kind of the train's going to kind of keep on rolling. Are we going to see another 65% again? I'm not sure. But I think the gold price is going to continue to be strong. And I think one of the other things that we're going to see is that I think the investment case is going to shift from where we had seen it, which was out of the commodity, which was up until probably the middle of this year, that was the place to be. And I think it's actually shifting more towards the gold equities.
Right, yeah, I mean, obviously we've seen that as well as far as some of the outperformance in some of these mining companies, I mean, up over 100%. Also, for some key names at least, I'm not sure who's buying gold. When you talk about the retail investor, there's been a big conversation about how, maybe the market would like to see more participation on that front. Is that something that you're seeing?
Yeah, I think we are, right? I think the kind of had almost like a stealth bull market in gold up, late 2023 and early 2024, because what you had were, as we talked about at the beginning, the central bank buyers. And so those Eastern, and mostly Eastern, so, China, India, governments like that. And so they're not going to step in and buy gold equities, right? And they're not going to step in and buy the GLD, which is kind of the preferred way for retail to play gold. And so because of that, but that shifted middle of this year. And all of a sudden now you're seeing, not only are you seeing the gold price continue to perform strongly, but you're also, because they're getting those incremental buyers, but you're also seeing the equity start to form, the GLD finally started adding tons, which is a big difference. So that momentum is going to continue. Now, I guess the bull market or the buyers are shifting from, they were east to now they're kind of east and west, which I think is giving it further momentum. The other key thing on gold is, or on precious metals that you can look at is that silver tends to be the poor man's gold, for lack of a better description. And I think the run in silver that we've seen recently is a good sign that you're seeing retail participation in the precious metal stream.
Right, I just want to unpack that a little bit further because you sort of took the words out of my mouth with this sort of commodity market that we're seeing sort of playing out here. At least that's the thinking into 2026 is that sort of starts with gold. What do you see as part of some of the trickle down effects here with silver getting record highs over on the LME?
Yeah, I think you'll see silver's the obvious one. Typically, what you see in a commodities bull market, a big cycle, gold will run first, and then things fall behind it. Silver's one of the first ones, and so we're seeing that already, starting with silver, and then that actually generally trickles down after that, right? You start to see, other commodities. The factors that drive gold ultimately drive those other commodities. So we see things like copper, platinum, palladium, things like that to start to see to catch a bit as well.
Derek, it's always great to talk to you and get an update on the gold market. Thank you so much for joining me today. Really appreciate your time. That's Derek McPherson there at Westpoint Gold. I'll send things back over to Chicago with Molly.
Thanks so much, Sam. We're nearing the end of our market session. We'll be bringing in Alex Coffey to break down today's action and set us up for tomorrow. Next on Market on Close.
Real-time access, data-driven analysis, from U.S. equities to global macro matters. Schwab Network connects the dots. Watch live. Subscribe free at schwabnetwork.com.
Opportunities don't stop when the market day ends. So neither do we. Schwab gives you round-the-clock access to over 1,100 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
I'm Alex Coffey.
And I'm Jenny Ford. This is Next Gen Investing, where we track the trends shaping tomorrow's market.
From tech to energy and crypto to consumer, we focus on what's driving investor sentiment right now.
Clear analysis and forward-looking market coverage every trading day.
This is the make or break level for the stock.
And that could certainly be a short to near-term catalyst.
Next Gen Investing, 1 p.m.
where you invest. Level up and invest smarter with Schwab.
Morning Movers brings traders the biggest headlines to start the day, from volatile overnight swings to the earliest analyst calls. Get your watch list ready. 8 a.m. Eastern. Morning Movers only on Schwab Network. Stay connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages, oscillators, and much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Real-time market moves, earnings breakdowns, and trade-ready insights. Follow me on X at _Marcus and connect with me on LinkedIn or Instagram for more. We're back here on Marco Close on standby here on the floor of the New York Stock Exchange alongside Molly Hayden at Chicago headquarters. We've just got a few minutes left in today's session. Let's welcome in Alex Coffey today to help close out the session. So Alex, just a few minutes to go now before we hear this closing bell. The big boys are telling us that on the surface level, the Dow and the S&P is pretty much unchanged. But as you and I like to discuss each morning, when you look under the hood, it tells a very different story under the surface.
Yeah, it does, Sam. And guys, I'm encouraged by what I've seen the last couple of days in the face of some red candles. And the reason I say that is we're starting to see a market that is holding in there without the leadership consistently of some of the most important names in the marketplace. So, yeah, we had an NVIDIA bounce back today, but it was, offset by a massive move again in Broadcom, a move pretty significantly to the downside in Apple, as well as Amazon. I did some math before I came on, and NVIDIA and Tesla together contributed about 10 positive S&P points, which is impressive for two names. But those other three that I mentioned that are to the red, Amazon, Apple, and Broadcom, contributed about 25 points of negative action. So they more than offset the bounce backs that you're seeing in Tesla or NVIDIA, and then the big move in Tesla back towards its highs. All that to be said, you look under the surface, Sam, as you mentioned, it's about 60-40 now, advancing names outpacing decliners. And also, you look at the fact that you're starting to see a market that is going sideways in this rotation. One of the big concerns, I think, was, maybe we have a concentrated market. But if every dollar that leaves the S&P 500 guy, or leaves those mega cap tech names, isn't necessarily going to find its way back into another S&P 500 company. And the fact that we're starting to see more of a sideways headline market with some of this rotation happening on the surface, this is, in my mind, the most positive way for some of this concentration to resolve itself.
And with that rotation that we saw today, we saw them moving into areas that are a little more sensitive to the economy. Healthcare, consumer discretionary, industrials, healthcare up like 1.3%, and consumer discretionary up 0.75%. What are some of your thoughts about this rotation into this, and how it pertains to as we move into 2026?
Yeah, and it hasn't been consistent that way, right? And even today, you look at, equal weight is outperforming because you have more names higher, but it's still value-oriented. So it's a movement, I feel like, within these different sectors, looking for valuations that aren't as extended. Because I don't know that there's a ton of concern, maybe outside of some of these oracles out there that are taking on a lot of debt, that the AI trade isn't intact. It's just how much am I willing to spend on it. And if I've been an early investor, or even a middle innings investor in this first leg or two up higher in AI, at some point it's just prudent to take money off the table. And we're at that time of the year where portfolio managers are buttoning up things into the new year, locking in gains, offsetting things, re-rotating and rebalancing into the new year. This is the last full trading week of the year, guys. So what considered. Again, I say I'm encouraged, but then you have almost like this embedded pricing floor. We see this in the Schwab stacks data, where every time these big winners pull back, there are buyers that step in. So it's an ebb and flow, and it's not consistent day to day.
Raise an interesting point. Some of these are sort of individual stories. I mean, the case with Broadcom is that some are talking about some of the news of it on the back of it because of the run-up that it's seen. An interesting move today. So we ended up pretty flat on the Dow Jones there on the line to the downside. There wasn't much movement very much in the index on the day. The S&P 500 was also pretty range bound. We just ended the session about 0.2% lower at 68 to 16 there for the Nasdaq. The 10K board, of course, under pressure because of the pullback that we saw in that particular sector. As we mentioned, with some of those bigger names like Broadcom down around 0.5%. That took us to 25.067 there, down around 129 points or so. And then we saw the Russell 2000 shedding about 20 points. Took us down about 0.8%, 25.30 there on the small cap trade. So all in all, some down arrows across the board today. We look at this setup, this positioning ahead. What is going to be a pretty big week as far as the backlog of economic data that we'll be getting. Sectors as far as what we saw there as we painted the picture a little bit earlier. Told a bit of a different story to what we did see at an headline level. Of course, we saw technology under pressure to the tune of 1%. Cost services dipped below the line. Just in those final minutes there, discretionary held up next to names like Tesla, 0.9%, higher staples, 2/10 financials. Also held their head above water too. So that's obviously been a good day across some of those sectors. And if we flip the boards, utilities was very much an outperformer on the day as well. That managed to hold on to over 1% gain there for that sector. Real estate also high, industrials higher as well. But interestingly, materials just slipping below the line in that final hour too. Energy had been lower on the day, tracking those crude prices. So mixed performance, but I mean things still are working as far as some of the rotation, as Alex had mentioned too, into a sort of more value-orientated type trade here. We very much have seen that movement out of technology into other parts, other corners of the market in recent sessions. So we saw that very much continuing today. That momentum is building as far as that trend. Just what the next catalyst are going to be those day prints that we get. So let's do Marley back with their conversation. And Alex, just wanted to sort of get your thoughts on the day, sort of pick up where you left off there.
Yeah, when I look at this, all things considered, a couple of the things that I thought we could tie this in, guys, is kind of setting the stage now that we are at that kind of final full trading week of the year, starting to think about year end. I sent the team a S&P 500 chart that looks at the last month of trading, but really what I'm more concerned with is the right side of this particular chart. So no real technical damage was done. I think, the buying took place where you kind of would expect it to intraday today, as it did on Friday, right around that 1 month moving average represented by that purple line. But that area that is highlighted to the right portion of the screen there is what options are suggesting is a 1 standard deviation range throughout the end of the year based off the S&P 500's December 31st end of the year expiration, which has about a 2.5% range up or down, so 5% high to low in terms of where we could be. If we round here, we're basically talking around 7,000 to the upside to around 6650 to the downside. So, implied volatility, absent surprise, oftentimes even overstates what will actually happen. That's typically, especially you kind of see options as insurance contracts, which is not a perfect description, but it can be kind of a layman's way to understand them. Typically those premiums over time in the insurance world are meant to collect enough to offset any type of outlays, and you're kind of buying that protection or peace of mind. It's similar but different in the options world, as the price can happen at any time. But that to be said, you have an idea based off of this, what is a realistic end of the year for the S&P 500, and as we get closer to that, this box will shrink and shrink and shrink until we get to, of course, that closing bell, basically to close down the year. Also, another chart I sent the team is a DSPX chart, guys, and what this looks at is the dispersion amongst the names within the S&P 500. Basically, looking at the average volatility of the average name in the index, which right now sits at about 32.5,
compared to where the VIX for that headline, which is close to about 16.5, and it measures that relationship. And as we've seen this come down from its peak about a month and a half, 2 months ago, what it tells me is the average stock is performing much more like the index now, or we're starting to actually see that 490 move a little bit more in a path, even though we're talking about that rotation. It's been a rotation out of mega cap tech into the other 490, and so this to me illustrates that. Also illustrates that we're getting through another earnings season, which can add that idiosyncratic individual stock equity volatility that's different from the headline. All that to be said, though, I think we set up for a very interesting new year, Sam and Marley, and I think where you look at this, there's always going to have to be a resolution to how concentrated things have been. Again, I said it before, I'll say it again. I feel like we're on the path, absent some sort of a hiccup or change, to do that in the most healthy way we can.
And Sam mentioned in our market recap that this is a big week of economic data. We've got a lot coming out, some major potential catalysts here. Tomorrow, we're getting our November and some of October non-farm payroll figures, the unemployment rate, we're going to get October's retail sales. As far as the data that we're getting, not just tomorrow, but this week, what are your expectations in terms of how important they'll be to the market, knowing that some of that data is delayed from the shutdown?
It is delayed, but it's starting to paint a picture, right? So the Fed and each individual member, you hear this when they take the stage, they all have a kind of, I guess, theme to, or I guess their projections that they subscribe to. And ultimately, the data will prove someone right, someone wrong, or everyone wrong, or everyone right in some way. And as we get that picture, we're basically filling in the past, and we're starting to see the path we're taking. So, yeah, it's delayed. This data is always a little bit delayed as it is, just because we're always looking back in time with hard data. It would be nice to see that caught up. It's the most important data points that we get, especially given where we are in terms of this Fed easing cycle. It's no longer really an inflation conversation. It's a labor market conversation alongside potential productivity gains. So the fact that you're going to get some of those answers from this data, combined with some soft data that we'll get this week, S&P Global's PMIs we'll get tomorrow. We'll also get CPI, I believe, later on in the week, and then of course the University of Michigan consumer sentiment at the end of the week is truly more of that soft data. We start to patch the story together, and the bifurcation, the soft data continue to set off the alarms that things are falling apart. The hard data just doesn't seem to confirm that. So at some point, one would think that we'd see some convergence, but we've been saying that for a couple of years now.
Yeah, Alex, away from, of course, the jobs, just to obviously keep us on our toes, we're going to be getting the jobs Friday, Tuesday, and then all those different months of data to obviously come over as well. We're going to be getting some key earnings, which really sort of bookends the season and bookends the year here, and some really important names to this whole AI trade, to the consumption picture as well. As we touched on earlier, Micron is going to be one of those. Nike, FedEx, which is always a really good pulse check on the entire economy. Just wondering how you're looking at some of those names.
Yeah, I mean, Micron far and away, I think, from a market impact standpoint, is the most important. I don't think it's relatively close. From an economy and sort of projection of how is the consumer hanging in there, what's the holiday season potentially looking like, how stretched is the consumer, it's hard to discount Nike. It's hard to discount FedEx. And I would even throw in some of these home builders. It's hard to discount Lennar and KB Homes and even something like Carnival or ConAgra as we'll get throughout the week. Now, not all of them are going to carry the same weight as a FedEx in terms of the visibility that they have into the consumer, or a Nike, even in its struggle
team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
And I'm Jenny Horn. This is Next Gen Investing, where we track the trends shaping tomorrow's markets.
From tech to energy, crypto to consumers, we focus on what's driving investor sentiment right now.
Clear analysis and forward-looking market coverage every trading day.
This is a make or break level for the stock, and that could certainly be a short to near-term catalyst.
Nectar Investing, 4 p.m. Eastern.
Only on Schwab Network.
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Welcome back to Market on Close. I'm Marley Caden here at our Chicago headquarters. Joining us now is Russell Rose, Associate Professor of Finance at the Kelley School of Business and the Head of Research for Academic Market Insights. Russell, great to have you with us on this Monday. I'd love to get your thoughts on the action we saw today. A bit choppy. We ended up closing the day entirely in the red. Had some very important data this week.
Yeah, it was, I heard you guys in the previous segment refer to, getting the Friday employment number on Tuesday. I guess this kind of makes today like a pre-employment Thursday. And the price action was kind of like that once we got past the numbers from this morning. Pretty quiet, drifted lower toward the end of the day. VIX remained somewhat elevated. It was even holding up when the market was looking, was looking strong earlier this morning. The S&P was looking strong earlier this morning. So, the stock market continues to try and march higher, but the derivative markets just don't seem to be buying into it.
And Russell, I want to talk about this data that we're playing catch up on now. You mentioned we're getting what's usually Friday data on Tuesday because it's October/November data from the government shutdown. Tomorrow is the jobs data. How much weight do you think investors should really be putting on these late year numbers versus how much weight do we think we actually think the market's going to give them?
I was at an event last week where I got to hear one of the Fed presidents talk about this very topic along with somebody from one of the business networks, and they were really interesting. They were talking about if you want to try and trade some of the numbers coming up, you might want to try and react to what you think are erroneous numbers due to the numbers being put together very quickly, possibly not using the exact same format that they use when these things are done once a month. And I'll give you a little anecdotal one that is completely, it has to do with government spending, and it's outside this area. My daughter's involved in meteorology, and due to government cuts, the National Weather Service now has cut in half the number of weather balloons that they put up, and the volatility around the forecasts and what actually happens weather-wise has been off the charts relative
held up and even trended higher as the stock market moves higher, that is usually an early indication that there is some sort of volatility event on the horizon. VIX remaining in the upper teens as we make all-time highs in the S&P 500, or we're close to all-time highs in the S&P 500, is an indication that people that are using the instruments behind me, the S&P 500 index options, are continuing to pay up for protection into 2026.
Russell, those dates that you just mentioned are pretty significant. The end of 17 into January, February of 18, because if my memory serves correctly, that was a Volmageddon event in February of 2018. So are you suggesting that if we stay in this current setup that we have, we could be in for a similar volatility shock?
I would not be shocked if we have some sort of volatility shock in the first quarter of next year. As I just mentioned, as I started to prepare to talk to you today, I was looking, I was like, this feels an awful lot like 2017, and went back and looked at the behavior of VIX relative to the S&P 500, even as early as the first half of December in 2017. And there are some similarities, kind of lining up there. So time will tell, but it is very much, I think it's a higher possibility than, quarters further out in the future, at least from reading the tea leaves from VIX and VIX futures.
Well, Russell, it's always a pleasure to talk to you. Thank you for that insight. And being my first guest that's mentioned a Volmageddon event, so we'll certainly keep our eyes on that. That's Russell Road from Academic Market Insights, of course, at the Kelley School of Business at Indiana University. I do want to send it back to Sam in New York.
Thanks, Molly. Well, coming up next, we will close out the show with our final takeaways and what we're watching out for tomorrow. Michael, I'll be right back.
For instant reactions, earnings breakdowns, and hot takes that teach you about stocks and markets, follow me on X at @NPetalides and connect with me, Nicole Petalides, on LinkedIn, Facebook, and Instagram. This is Fast Market, built for traders who want more than just headlines.
We walk you through trade ideas with structure, risk management, and a focus on execution.
From options to earnings to volatility plays, we bring decades of trading experience to every sector.
With real-time insight across products and sectors, we deliver what active traders need to stay ahead. Fast Market weekdays at noon Eastern, live on Schwab Network at schwabnetwork.com.
Believe me, when it comes to investing, you'll love Carl's Way. Take a left here, please. But there's a... Carl's Way is the best way.
Is it? At Schwab, how I choose to invest is up to me.
Exactly. I can invest and trade on my own.
Yes, and I let them manage some investments for me too.
Let's move on, shall we? No can do.
I'll get out here.
Where are you going?
Schwab. Schwab, a modern approach to wealth management.
I'm Nicole Petalides, live at the New York Stock Exchange, and this is the Watch List. Your midday view into the trends driving the markets with a sharp focus on technology, innovation, and companies leading the next wave of growth. Big movers, real-time interviews, and insight from analysts, founders, and market voices you trust. The Watch List, 2 p.m. Eastern, only on Schwab Network.
Stay connected to what moves the market. Download the Schwab Network app and stream anytime wherever you are.
Welcome back to Market on Close. I'm Marley Caden here in Chicago alongside Sam Bonus at the New York Stock Exchange. We'll close out our show with some final thoughts on this session today. Copper prices are surging this year, up more than 35% year to date and hitting multiple new highs along the way. And Citigroup says that rally should continue into 2026. Citi saying today expects prices of the red metal to skyrocket on the back of stronger demand from AI hyperscalers and the energy sector. This, combined with the potential hoarding of U.S. copper, has Citi predicting prices could hit $13,000 per ton in early 2026 and potentially $15,000 by the second quarter of next year. Spot prices of copper hit another high on Friday at $11,816 per ton on the London Metals Exchange. And crypto prices continue to be under pressure today, but last week's inflow numbers indicate investor confidence is gradually improving. Inflows totaled $864 million last week, marking a third consecutive week of modest inflows. Bitcoin led
unemployment rate data, which will be from October, part of October, and also include November. The jobs report expected to show that we added just 40,000 jobs last month, and the unemployment rate held steady at 4.4%. If that number comes in line, it would mark a significant drop from 119,000 jobs that were added in September. Now, guests we've spoken to say the industry-specific breakdown of job gains will be important to watch, as well as wage growth, which is expected to slow. If it does, it could raise some concerns about pressure on future consumer spending. The other data that we'll be getting will give us a backward look at some consumer spending with October's retail sales figures. And this report was also delayed by the government shutdown. But of course, very important, as we discussed with Alex Coffey, Sam, about painting a picture and also at this point sort of helping to justify the action that the Fed has taken thus far.
Yeah, it's going to justify it, hasn't it, rather than as far as what they're going to do next. That's certainly what economists have been saying. But we've also got Lennar earnings out tomorrow. This is going to be a really interesting one. This is up to the bell, so you put an eye on you, hopefully breaking those down. According to Zach, expectations are for adjusted EPS of $2.23 on revenue of about $9.1 billion. Now, they did provide guidance for lower gross margins previously, and that comes, as I was talking to the folks over the conference board about earlier in the show, they've been offering these incentives to try to attract buyers, so actually price cutting, and now that has become a bit of a concern for some of the margin pressure, so let's see if there's any evidence of that. Also, the conference board, Marley, raising a really interesting point. You just highlighted those higher copper prices. What some of these higher prices in commodities going to mean for the feed-through, the pass-through to, what's costing to actually build a home as well? Could we potentially see any sort of margin pressure there too? I mean, could this be a bit of a double whammy for some of these home builders, as we've got 3 rate cuts being put in the system this year, but we haven't really quite seen the kind of demand that many have been anticipating as far as the recovery in the housing market as we perhaps thought earlier this year.
Yeah, sadly, Lennar not coming out until 5:50 p.m. Eastern, so we won't have it on the show. We'll have the coverage Wednesday morning, but that's going to do it for us on Market on Close today. For Sam Gladys, I'm Marley Caden. Be sure to download the Schwab Network app in the Apple App Store and tune in 24/7 on SchwabNetwork.com. Market Overtime is coming up next.
Welcome to Schwab Network, where real-time market coverage meets expert strategy. From the opening bell to the closing bell, we've got you covered. Get inside the minds of pro traders.
What is it that they're getting? A higher rate of change in sales based on their guidance, but not the same rate of change on ETFs.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
Actually, I've seen something from Schwab.
Uh-oh. Yeah, Schwab lets you invest and trade on your own.
If you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists with taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties. Carl.
Schwab, a modern approach to wealth management.
first of all, I don't think that many investors have even participated in the gold rally. They may have come in a little bit during the week that gold got almost to 4,400 and then had a sharp pullback, but as we're sitting now around 4,100, I think very few investors actually have any allocation at all to gold. And I do think they'll start thinking about that more next year. But I think over the last couple of years, as gold's moved from 2,000 to 4,000, it's mainly been driven by central bank buying. They are rotating out of U.S. dollars and U.S. treasuries into gold. And I think that trend is going to not only continue but broaden. I think more central banks that haven't been buying gold are going to start. And I think the central banks that have been buying it are going to buy even more.
So why is that? I mean, what exactly is that telling you about that trend of aggressive central bank buying right now?
Well, it's a long overdue loss of confidence in the United States, in the fiscal situation in the U.S., our ability to repay our debts honestly. I think it's pretty clear that we're either going to default or more likely inflate, but there's no way to legitimately pay. The deficits are 2 to 3 trillion a year and rising. We have no appetite for any kind of deficit reduction. In fact, the Trump administration made the Biden deficits that it inherited even worse. And we're chipping away at what's left at the pretense of Fed independence. Trump is stacking the Federal Reserve. Trump is trying to dig up dirt on FOMC members so he can fire them and replace them. We'll see what the Supreme Court says. Maybe the Supreme Court will tear down what's left of Fed independence. Trump is, pounding the table for huge rate cuts and more money printing. And the tariffs, I think, have done a lot of harm globally. I think we've made a lot of our friends angry. I think we've driven China and Russia and India closer together as the world unites against our trade war. And that's undermining the rationale for holding U.S. dollars. So I think it's really a race to get out. And of course, then you got the politics. Biden sanctioned Russia, and that was a warning to all holders of U.S. dollars that you could be next. That the U.S. government could, pull the rug out from under you at a whim if it doesn't like what you do. So by weaponizing the dollar, I think ultimately it's going to be the U.S. that ends up getting shot.
Some have been pointing to this gold rally as perhaps a canary in a coal mine, given some of the reasons you just spelled out. But let's talk about the sort of more commodity bull market. I mean, silver has been catching a bit. I mean, it's been holding about 50 lately today.
Oh, I think absolutely. I mean, silver took out 50. That was a huge double top going back to 1980 and then again 2011. Silver got almost to 54 and a half before pulling back, but it's been trading around 50. And, as we speak here, it's over 51. I think we're headed to $100 an ounce on silver by next year, and gold's obviously going to be quite a bit higher as well. But I think that silver is going to start to outshine gold as this bull market moves into a higher gear.
Michael Saylor's Bitcoin Treasury Company strategy. You say you think it'll go bankrupt, and you challenge Saylor to a debate. Why do you think that?
Well, first of all, the company has no real earnings. In fact, it has substantial losses. And what it's doing is it's borrowing money either by issuing debt or preferred stock, and it's just taking that money and using it to buy Bitcoin, which generates no income, and all the earnings is the unrealized gains on their Bitcoin holdings, which are rapidly evaporating. I mean, Bitcoin continues to tank as we're talking. It's trading below $90. MicroStrategy is down about 11 or 12% today. It's down 65% from where it was in November a year ago. And soon, MicroStrategy is going to be trading at a discount to the Bitcoin that it owns. And the minute that happens, the party is over, because the so-called Bitcoin yield that Saylor has been able to generate will now be negative. He won't be able to sell any more stock and create a yield by buying Bitcoin, because his stock will be worth less than the Bitcoin he's buying. And so that's going to start the death spiral, because now he does have interest that is due on debt money that he borrowed, and he has no way to anymore. He's going to be shut out. The only thing he can do is start selling his Bitcoin. But the minute he starts selling Bitcoin, Bitcoin's going to implode. So this whole thing is, a accident waiting to happen. It's really, a Ponzi or pyramid built on a pyramid, which is what Bitcoin is. And MicroStrategy has been one of the main buyers of Bitcoin. They borrowed and sold stock and bought with $40-50 billion or spent on buying Bitcoin. And his average price is about 74,500. We're not that far above that. He's got a pretty low return. He's been buying Bitcoin for 5 years. He'd have more money if he had bought anything else. Bitcoin's been a horrible investment over the course of the time he's been buying it like that. But the big problem is he can't get out. If he tried to sell, it would collapse. I mean, had he bought gold instead of Bitcoin, he'd have a much bigger gain right now. And if he wanted to realize the profits, he could easily do it. There's no way to realize these paper profits in Bitcoin. And soon the paper profits are going to be gone.
Stephen recently told me he sees Bitcoin go to 150 come year end. As you and I speak, Peter, we are sub 90,000. We've come off for almost 30% from those record highs in October. I'm just wondering, despite a lot of favorable tailwinds that we've seen in the space this year, what does this tell you, this performance?
Yeah, when a stock doesn't go up on good news, that's usually an indication that all the good news is already baked into the price, and it's more likely to go down. And that's what's happened with Bitcoin. All the good news is there. We had all the Bitcoin ETFs. We had all the Bitcoin treasury companies. We elected a Bitcoin president who established a strategic Bitcoin reserve. So everything that could have possibly gone right with Bitcoin went right. Everybody thought it was a can't-lose investment. You've got the Trump family behind it. It's now their family business instead of real estate. So everybody wanted to hop in that bandwagon. You had a lot of new money come in, and the price did not go up. And that is because the big money, the OGs, the whales who bankrolled the Trump campaign, they used all of that hype to sell, to realize their gains. So the big money was getting out, and the suckers were getting in. We distributed Bitcoin from strong hands to weak hands, and leveraged hands. In fact, there's a lot of leverage now in Bitcoin. This thing could collapse very quickly. I think the only hope that Bitcoin would have of getting to 150,000 at all, let alone by the end of the year, you would need a U.S. government bailout of Bitcoin. Now, I guess there's a lot of, Trump people that are, want Bitcoin to go up. There's a lot of Bitcoin people in the administration, a lot of big donors to Trump that will need a bailout. So the question is, will he endure or risk the political capital bailing out Bitcoin by using government money to buy Bitcoin and prop up the price? Because unless the U.S. government buys Bitcoin, I can't imagine anybody else willing to do it at this point. I think all the buyers are in, and now it's just a race to the answers.
Let's talk about the stock market, because many people have been drawing in comparisons, or at least making a connection between the prices of crypto, Bitcoin, certainly as far as the correlation we're seeing with regards to technology stocks as well. Peter, I want to know if you think that we're in an AI bubble.
Yeah, I mean, I think we're in a crypto bubble and we're in an AI bubble. I think the AI bubble is bigger than the crypto bubble, but I think the crypto bubble is bigger than the dot-com bubble. So that's a pretty big bubble all by itself. But when you juxtapose it to the crypto bubble, to the AI bubble, it's enormous. But the big difference between the AI bubble and the crypto bubble is at least the AI bubble is based on something real. I think AI is a disruptive technology that is probably going to be much more important than the internet was. Maybe it's going to be the most important development we've ever had as as a human society. I see tremendous potential to increase the productivity of humans and make our lives better, because we won't have to work as much. Maybe we won't have to work at all at some point. We'll have artificial intelligence, and also in the form of robots, and they can do the mental work, they can do the physical work, and that can free us up for leisure and more more enjoyment. But, a lot of this is going to take time to build out. In the meantime, I do think there's a bubble in a lot of these stocks. I think there's going to be a big blow up. I don't think we can finance the rate of investment that we have right now. I think there's a lot of problems. People are looking at all the money being invested in data centers. Where's that money coming from? What are we not funding to make this possible? So I do think that we're going to see a big shakeout in these stocks. But, just like with the dot-com bubble, the internet was real. Amazon, came out of that. A few other companies survived, but the majority of them went bankrupt, the vast majority. And I think a lot of the AI, hyperscalers, whatever, I think there's going to be a big problem here. Investors are going to lose money in the short run. But, the AI bubble, at least, and the dot-com bubble were built on something real. There really was an internet that has changed our lives and changed them for the better. And AI will probably be, an even, a bigger, more substantive long-run change for our lives. Bitcoin, however, is nothing. Crypto, by and large, is a complete fraud. There's no real value at all. It's pure bubble. Nothing is going to survive. Pretty much all of these cryptocurrencies are going to zero or close enough to it that it's not going to matter to the people who own them now, whether they go all the way to zero or there's still a few pennies there and people are, trading them. But the whole thing is going to collapse. I mean, there might be, maybe stable coins will have some use. I think, ironically, what works most best would be tokenized gold. Right? If you take gold and you make a token backed by gold, that makes sense to me. Because, that's like the old currencies that were backed by gold. Now you can have a cryptocurrency backed by gold. It's a lot better than one backed by the dollar, which is just going to keep falling. Gold, retains its value, but you can use it very effectively as a medium of exchange. So to be ironic that the one thing that might come out of blockchain is tokenized gold. Right? So instead of, killing gold, Bitcoin would give it a new lease on life, because I think gold would emerge as a better form of payment, as better money than it's ever been, because the internet or blockchain can make gold much more efficient as a medium of exchange. And it's certainly a lot better than Bitcoin. Bitcoin is slow and expensive to use, and it doesn't have any value to store. So that might be the irony of it. But most of this, almost everything in crypto is just going to blow up. All these companies, all these Bitcoin treasury companies, Ethereum treasury companies, they're all going bankrupt. Every single one of them. They have no viable business model. They all exist because of the mania.
Just back to the stock market and what you're saying about the AI bubble. We've seen several sort of cautionary headlines recently from some of the Wall Street bankers around, perhaps the market due for a bit of a correction here. The conversation seems to have shifted very much from worries about sort of stretched valuations now to, just exactly how these companies are sort of taking on debt to fund their ambitions. I'm just wondering, with all that in mind, are you surprised that the market managed to defy the seasonal weakness post-summer with record after record recently?
Well, nothing surprises me anymore. I mean, look at the gray hairs on my head. I've been around for a while. And, the market's, been going up despite overvaluation. I think it's floating on a sea of liquidity. I think the Fed cutting interest rates and the expectation that the Fed's going to continue to cut rates, that's what's, propping up the market. But I do think that we're going to see a decline in the markets. I think what will eventually put it at a bottom will be the Fed going back to quantitative easing. But when it does that, to prop up the stock market, it's going to crush the dollar and really send gold on a much more parabolic rise. And so even if we get stocks moving to nominal new highs based on Fed money printing, in real terms, priced in gold, you're going to continue to see new lows for the U.S. stock market.
The last time you came on the Schwab Network meet was back in April, when we were arguably at peak pessimism over tariffs. You gave a bearish outlook, but of course you're not really known for being particularly bullish on the economy. Has any of that view changed now?
Well, basically Trump backed away immediately from those reciprocal tariffs. 90-day pause, and so he backtracked on a lot of it. So, not all the damage that may have been done was done. And in fact, he continues to back away from tariffs. More recently, a lot of items, the tariffs are being removed, and a lot of food items, because Donald Trump recognizes that the tariffs are increasing prices for American consumers, and so he's now removing the tariffs, without acknowledging that they were a mistake. But I do think that the tariffs have damaged the economy, but not nearly as much as they would have had Trump, continued on, the direction that he was in on Liberation Day. And we'll see what happens with the Supreme Court. And if they strike down the tariffs, they should. They are unconstitutional, and that would be a good thing. And I think Trump will use it as a scapegoat. He's going to blame the recession that ensues on the elimination of the tariffs, when the elimination of the tariffs may make the recession not quite as bad as it otherwise would be. But he's going to be able to blame it on the Supreme Court. He can blame it on the Fed, saying too late, pal, waited too long to cut rates. But if you look at where the price of gold is now compared to where it was when we spoke last, that really tells you what's going on. Gold is rising because the U.S. economy is not in good shape. Gold is the canary in the economic coal mine. Gold would not be doing this if we had good monetary and fiscal policy. If we really had a strong economy, gold would be a lot weaker than it is right now.
Well, we got a real good sense of how people feel from the recent elections just a couple of weeks ago, obviously, and one of the main themes that came out of that was affordability. There's this very nuanced debate going on in the Fed right now on both sides of the dual mandate. I mean, officials are emphasizing the job side of the equation, but you have consistently argued that inflation is significant and it's a worsening problem. So can the Fed fix that alone?
Well, the Fed is the source of the inflation. So, sure, the Fed could do something about it, but it doesn't want to. Because in order to really stop the inflation, we need much higher interest rates than the rates we have right now. And the Fed has to shrink its balance sheet faster. Instead, the Fed is cutting rates and has announced that it's going to discontinue quantitative tightening. So the Fed is pursuing a highly inflationary policy. So, we're going to get more inflation. And, of course, it's not just the Fed, it's the Fed working in tandem with the government, because the government is running these huge deficits, which the Fed is monetizing. And so all of this is stimulating demand without stimulating supply. We're creating all kinds of demand for goods, but we're not producing the goods. And so the prices have no place to go but up. And the tariffs are actually going to exacerbate that.
It's not fair of the view, though, that this is going to be a sort of a one-off transitory type of price increase. But it's been interesting, some of the corporates have been highlighting that they're struggling to pass on to the consumer right now. They're having to pick up the tab, and that's inevitably going to become a bit of a margin problem. So we're hearing very different things. Which is it here?
Well, look, the government's never going to tell the truth about inflation, especially since they create it. Last time they used the word transitory, it didn't work out too well. But inflation is not transitory, it's here to stay, because it is a byproduct of our monetary and fiscal policy. The tariffs aren't going to be driving inflation, they'll be exacerbating it, but it's going to be caused by our monetary and fiscal policy. What's really going to exacerbate it, too, is going to be a big drop in the value of the dollar. I'm talking about not relative to gold, which we've already seen, but relative to the rest of the world's fiat currencies. And that's going to dramatically increase the cost of imports into the United States, even more so than the tariffs. So Americans, unfortunately, are going to be staring at much, much higher consumer prices in the years ahead. In fact, I think by the end of the Trump term, the Trump years are going to be more inflationary than the Biden years. During Biden, the worst year for the CPI was his first year. And a lot of that was inflation that was left over from Trump showing up under Biden, because there's always a lag. But I think during Trump, the lowest inflation years are going to be in the early years. And so I think his third and fourth year are going to be much worse. And in fact, I think we're going to have higher inflation in Trump's fourth year of his term than we had in Biden's first.
Part of the intent as to why Trump has been targeting certain trading partners with these tariffs is to really try to onshore all this manufacturing
numbers out there so Trump can claim credit for it. I mean, some of them might happen, but they might happen anyway. And I don't think that people are going to take action here because of the tariffs, because who knows how long the tariffs are going to remain in place. Why are you going to invest billions of dollars in factories that are only viable if there are tariffs? And so I don't think you're going to get the investment. You know, remember, Trump promised to reverse our trade deficits and bring back manufacturing the first time he ran for president. And when he left, the trade deficits were at a record high. So the trade deficits got worse during Trump's first term, and manufacturing continued to shrink. In fact, manufacturing has been in a recession. In fact, it was in a recession for most of Biden's term, and it's still in a recession now under Trump. So I think all this has just been a bunch of noise. Yes, we need to reindustrialize, we need factories, but we're not going to build them. And tariffs actually make it worse. Tariffs are going to help put more U.S. manufacturers out of business. Because a lot of U.S. manufacturers, the ones that we have left, they rely on foreign components. They import those components. Well, now those components are a lot more expensive than they were before. And now their products are not only less competitive here, but they're less competitive if they have to be exported. So I think that you'll only have some companies that will benefit from the tariffs, but other companies will suffer. And the net result will be a loss even in manufacturing. So I think that the downtrend is going to continue despite these tariffs. And the bill, of course, gets paid by the average American, by middle class, poor Americans who are buying these products that are subject to tariffs, or paying more for products that no longer, where they can raise the price because the tariff items have gone up, and so that allows the competitors to raise their prices. And the idea that we're going to get some kind of tariff dividend, I think, is all fantasy. And if we do get a tariff dividend, they're just going to exacerbate the inflation problem, and that's going to hurt the people who receive the dividends too.
Well, and earlier this year you did warn us that if tariffs weren't rolled back, we'd be headed for a recession. According to you, that's the same worse than 2008 and versus the Great Depression. I mean, some of them have been rolled back. I mean, what kind of recession projects telling you right now here? Because some argue that maybe we're in a recession in the housing market, perhaps there's being one in some parts of the job market. Where do you see this?
Yeah, so a lot of the tariffs have been rolled back. So the tariffs in themselves are not going to cause this massive recession. They will exacerbate it, no doubt, but they're making it worse. But I think it's the financial system that is going to fail again like it did in 2008. I think our banking system is in worse shape now than it was then. I think we're more vulnerable to a big drop in the bond market, a big drop in mortgage-backed securities. The whole economy is way too levered up. The private sector, the public sector, you name it, there's too much debt. And so I think this whole thing is going to implode as we get a run on the dollar. That's what gold is really telling you. Gold is telling you that a dollar crisis is coming, that a U.S. sovereign debt crisis is coming. One of the reasons that the Trump administration wants the Fed to cut rates is it wants long-term rates to go down. It wants mortgage rates to go down. But they're actually going to go up, and they are going up. The rate cuts have not benefited the long end of the market at all. And in fact, if the Fed continues to cut rates, you're going to continue to get a steepening of the yield curve, and long-term rates are going to rise until they eventually explode when we have a complete run on the Treasury market.
Well, what does that tell you about the world's most primary reserve currency? I mean, what does that also tell you about this whole debate around U.S. protectionism? I mean, this sort of came into question at the start of the year. You saw markets like Europe and China outperforming the U.S., but still, when you talk to overseas investors, they still very much remain bullish and overweight the U.S. So what replaces that here?
Well, I don't think there's that much left of U.S. exceptionalism. At one time, sure, we were the leaders of the world in freedom, and because we were the freest people, with the smallest government and the least amount of regulations and the lowest tax, yeah, we led the world. We were the manufacturers of everything. We had huge trade surpluses with everybody. We were the world's wealthiest creditor nation. But America is the mirror image of what it used to be. We just have a reputation still that is no longer really deserved. But I think, the dollar's days as the reserve currency are coming to an end. That is what gold is telling you. That is why central banks are buying gold. They are moving away from the dollar. And, we've taken for granted the reserve currency status, and that is the crutch that the U.S. economy has been using for decades now in order to function. That's how we can run a service sector economy with all this debt, is because the rest of the world is willing to produce what we can't and loan us the money to buy it because they want dollars because it's the reserve currency. But as the dollar loses that status, that crutch is gone. And we can't survive without it. Donald Trump doesn't understand the relationship. He claims that the world's been ripping us off. The truth is the reverse. We've been ripping off the world because they've been giving us their stuff and we've just been giving them our inflation. We've just been trading paper for goods. But people have been complacent because they thought the world is stuck with the dollar because there's nothing to replace it. That we're just dirty shirt in a hamper. That the euro's not up to the task, not the yen. That who's going to trust the Chinese RMB? Pound's no good. The Swiss franc, too small, not a big enough debt market, right? So everybody just thinks that we win by default, but we don't, because while everybody's looking at all the dirty, fiat currency shirts in that hamper, they haven't looked at the one monetary asset that's not in the hamper at all, and that's gold. Gold replaces the dollar, not the euro, not the yen, gold. And in fact, before the dollar became the reserve currency, gold was the reserve. And in fact, initially when the dollar became the reserve currency, it was because it was not only backed by gold, but redeemable in gold on demand. So the world remained on a gold standard up until 1971, albeit through the U.S. dollar. But it's only been for the last 50 some odd years that we've been on a dollar standard without gold, and it hasn't worked. It's been a complete disaster. There's massive global economic imbalances, and I think the world is preparing to return to gold as the basis of the monetary system.
There is always a pleasure. Thank you so much for joining us here on the Schwab Network. We do have to wrap it up there. That is Peter Schiff, Chief Economist and Global Strategist at Europe Pacific Asset Management. Really enjoyed our conversation and appreciate your time. That's going to do it here for Market Overtime. Make sure to like and subscribe to Schwab Network.
looks like the bears are coming out. I'm not sure if this maybe is a case of maybe some tax loss harvesting before the end of the year at this point. But if you take a look at it, we're still not that far off of those all-time highs that we saw just last week for the S&P, the Dow, and the Russell 2000. The NASDAQ a little bit weaker as we continue to kind of fly through this rotation out of big tech names. But I think this week is going to be based on maybe a lot of data that's going to come out, some of the earnings events that are due this week as earnings season kind of wraps up here. But yeah, it's just a little bit of nervousness here when typically, especially the last couple of years, we've seen some pretty massive December rallies, and I think that has investors on edge at this point.
Oh, when is Santa Claus when you need him? We need those, those sleigh bells ringing. At the start of today, I kind of was with you. I would have thought that we start seeing that now. But I also wonder some of that, I saw the CNBC report where there's a little bit of pushback potentially on Kevin Hassett in terms of his candidacy as the next Fed chair. And I wonder if that's something that's at play in terms of rattling investors. What's your take, Kevin?
Good morning, Diane. I think that either one of the Kevins is going to be fine. Kevin Bush were in the Fed, the chair of the Fed. I think the markets would really like it. I think either one of those guys is a great choice. Now, from the trading perspective today, I'm looking at the 1-minute charts. We gapped open, sold off, rallied up again, and sold off, and now we're firming up here down about a 10% on the S&P. And the real question is, how far did this market go without information technology, which has been down all day, and without communication services that have been heavy? Throw in the fact that energy is very weak because crude oil futures are down. There's some rumors on some progress on the talks between Ukraine and Russia, so that's weighing on crude oil futures. But this is a market that I don't know if it's bullish or bearish right now, but it's choppy. I mean, the rallies are getting sold, but the sell-offs are getting bought as well, Diane. So it's always important, I felt, to identify the market that you're in. And this market just looks choppy more than anything else.
Okay, great point about identifying it. Well, where investors are bullish today, it seems like it's Tesla. They're gaining some ground. Now, Gabe Thompson's witness today, and I put out a note saying that 2026 will be a pivotal year for the electric car maker. He says he expects to see an accelerated robo-taxi launch. That's interesting to me, especially when we think about, what the expectations were for this year. He sees various tailwinds. We know he is the biggest bull on Wall Street when it comes to Tesla. Tom, what's your take when you look across Tesla?
Yeah, I think, the optimism from Dan and others on the street. Remember, this is one of those bifurcated stocks. Some people are still rating the stock, like Wells Fargo. I think they're in the low 100s as far as price target because they're still basing it on the stock value as an EV maker. But Dan and others have stated that, hey, if we get that rollout, they expect to roll out to another 30 cities. They're doing further testing on the robo-taxi, the cyber cab, where there doesn't need to be a driver within initial trade out of tech into other areas of the market at this point. I think NVIDIA's still got to be in the mix and at the top of everybody's list if we want to see some sustained gains here and rebound in tech at this point. But yeah, it just seems like really bad price action. And I've said that about the market for the last week or so. It's just been really chaotic kind of price action. And that's kind of what I'm following right now. And until I see a couple days of sustained gains for NVIDIA where maybe it gets out of the woods a little bit, maybe it's still going to be a choppy trade.
Okay, so it's like a bit of a head scratcher there, especially when you think about all the tailwinds that are happening. Kevin, what's your take when you look across NVIDIA?
Are you an active trader? Our active trading webcasts are designed to help you develop a deeper understanding of technical analysis, options, futures, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Sometimes, you know, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Do you like moving the charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages, oscillators, and much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Real-time market moves, earnings breakdowns, and trade-ready insights. Follow me on X at Sam_Vardis and connect with me on LinkedIn or Instagram for more.
valuation was always a concern for this company, and then on the 18th they start trading in 5-to-1 stock split also. So we have that to look forward to also. But right now, you look at the chart, it's in no man's land. Far below is 50, it's 200 and 100-day moving averages. Like 100 plus below is 50-day moving average, which is pretty significant.
And so that begs the question, is there light at the end of the tunnel? Because we've got both the bull and bear view here. All right, looking at some example trades. Devin, let's start out with yours.
Yeah, when you see an $860 stock sell off 10%, that should catch everyone's attention that this stock is it's moving, right? I mean, this news was not well perceived. Now, people trading it out is the bad news out? Is this a dip that you can buy? I personally have no idea. And so, when I look at something in the opposite of a range-bound strategy, which is the long iron condor, I went out till December 26th. So I gave myself a little bit of time, about 11 days. I measured the expected move, which was about $41 about an hour ago. Now it's about $38, close enough, around $40. And so what I did, Diane, is I looked at a long iron condor where my short strikes were right at the expected move. So I bought, like I said, in the December 26th, I bought the 805, 815 call vertical. That's where if the stock would start to recover and off the bottoms here. And then if it doesn't, I also bought the 745, 735 vertical. So I've got verticals I'm going in both directions. I paid about $4.65 debit for both of them, both $10. It's trading closer to $4 right now, so you can get it even lower. It looks like vol has come down slightly. That's why that expected move has come down. But you're looking for a move of about $40 in either direction, either towards that $815 strike or that $735 strike. You've got 11 days, but like I said, this thing has already moved 10% today, Diane.
I'll go ahead and take you. December 26th, weekly option. So just 11 days to expiration on this. And Kevin makes a good point about the pricing on this long iron condor. Price discovery warranted on this. Bid-ask spreads are pretty wide on this. So the prices are moving around quite a bit. Going out to that December 26th weekly options, you're going to buy the 805 call, sell the 815 call. So you're buying a call vertical that's out of money to the upside. And then on the put side, you're going to buy the 745 put, sell the 735 put. So $10 buy long iron condor, you're paying roughly, you've got 465 debit, as Kevin mentioned, it's come in a little bit because implied volatility has come in a little bit. But the debt you pay, if you pay 465 is your risk, 465 plus. If you pay $4, you only got 400 bucks in risk on this one. If you do pay 465, you're break even to the upside where you want to go above is 809.65, or you want to go lower than the break even on the downside, 740.45.
Schwab is powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you an active trader? Our active trading webcasts are designed to help you develop a deeper understanding of technical analysis, options, futures, and more. Best of all, you can
unbalanced call butterfly for a bullish take here on this example. Buy 1 to the 83 calls, sell 2 to the 88 calls. That's where you want to go. And then buy 1 of the 90 strike calls. But even if it does go above 90 over the next 3.5 weeks, it's still going to be a double in profitability. You can see here from the risk profile, you want to kind of creep up towards at or near that 88 strike over the next 25 days to get the max profitability on this one. Kevin mentioned the break-even where you need this stock to go. 84.50 to the upside. That's less than 2% above the current share price in there. So with 3.5 weeks in this position, and you only need about a 1.8% move above the current share price to get above that break-even. You don't need a big percentage move. Almost, Diane, a controlled bullish trade here. You avoid earnings and short-term positioning, but you definitely need the stock to get above that break-even at 84.50 on this example trade.
So you're avoiding some of the risk there. Thanks, guys. We've got the breakdown coming up. We're taking a look at Texas Instruments on the back of a double downgrade today. More fast market after this break.
Stay connected to the markets with Schwab Network. Tune in 24 hours a day, 7 days a week on SchwabNetwork.com and on all your favorite streaming services. Schwab Network, available anytime, anywhere, on any device for free.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of the platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth, value, income, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in
sell the 165 strike put. So if having a bearish $15 right put vertical, you're paying roughly about, I've got 520 debit on here, that's where I was trading earlier. Probably trading closer to $5 right now, but the debit you pay is going to be your risk on this bearish position. So you're basically paying about 1/3 of the width of this bearish vertical here, kind of in Texas Instruments, if you think it's going to go below that break even near 175.
Yeah, and how this worked out, how this came to be, right? Tom reads the note from the analyst with the double downgrade. Then he goes to the Thinkorswim platform, looks out to that January 16th, 32 days. What's the expected move? Just under $14. And so buys the 180, sells the 165, a $15 all vertical.
And on a percentage basis, you don't need a big move to get to that break even to the downside, just below 175 on this one. And I think one of the keys with these type of strategies is that you're not seeing a big down move today in the stock, and it gives you some of that flexibility as far as trade management. So if you get on 32 days in this position, if you get a move down to maybe 170, 168, 172, where this thing starts to expand in price, which it will if the stock goes down, then you can maybe, if you buy multiple units, you can close a portion or all of it if the market's open on that. So, Diane, this sets up with the analyst note on the stock, and you have some flexibility as far as trade management goes on this bearish put vertical.
That's some great perspective that you gave there, Tom, especially when you think about that it's double downgrade, but it's not getting hit as much as you would anticipate. So that's going to do it for us today on Fast Market. I'm Diane King Hall alongside Ken Hicks and Tom White. Download the Schwab Network app. It's in the App Store. Tune in 24/7 on SchwabNetwork.com. Stick around. We got Action Investing coming up.
Schwab-backed Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab-backed Investor Checking, the checking account built for investors.
Welcome to Schwab Network, where real-time market coverage is expert strategy. From you and Big Bell to the closing bell, we talk economics.
through past me, and my advisor Jennifer teamed with me with the attorney, helping me with the estate distribution. The two grandchildren planning for their college educations. Someday it'll be their turn.
Trading at Schwab is powered by Ameritrade, unlocking the power of thinkorswim with the award-winning trading platforms. Getting your trades into focus on the thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailored platforms to your unique needs with nearly endless customization. And track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Welcome back to Investing. I'm Jenny Ward alongside Alex Coffey, and music and markets kick off the last full week of trading for the year. We are seeing some sluggishness, mostly that, Alex, but I mean, it does feel like we are at the end of an earnings cycle for like major catalysts, and also it does very much feel like there's a way to Santa Claus rally. Well, not seeing it today.
Yeah, I don't know that today is fully written just yet. Still got 3 hours till the bell. It's been kind of a back and forth battle between bears and bulls. The rotation on the surface continues. We do have a little bit of strength in the Magnificent Seven today, which I think is welcome as we get into the last part of this year. But in the end, Jimmy, I think by Friday, the tone will ultimately be set for how this year shapes up. Doesn't mean that there isn't potential for movement in the other direction, and that there can't be surprise, but you have holiday disruption next week, you have holiday disruption the following week. This is that last full trading week. You got Nike, you got Micron, sort of end of earnings season, a ton of economic data. All that to be said, I think that the tone will be set by Friday for how this year is going to close.
That is a good point, you're right. It's hard to assume, of course, we were just beginning to see it, so overall tone for the week just based on days. As much as I agree that by Friday, we will be able to say that this is how we recap the year. It doesn't feel like the year absolutely flew by, but markets have been fairly resilient. I think that they're credit to the overall just equity focus that we tend to hone in on our show. It's been a stronger year than I think a lot of the pessimism would let me think.
Yeah, I think that's it's an interesting word to use, resilience, around it, because if you're looking at it just from a 10,000-foot view, surface level, we're like a day off of all-time highs. So it's like resilient from what? Like what battle have they been tested? But you think back to the beginning of the year, you think to the tariff tantrum and all of the volatility to start the end of the first quarter, start the second quarter. You also remember and think about all of the disruptions, not only from the government shutdown, but the bifurcation between soft data and the survey and the pessimism you see from consumers when they're asked about it, combined with the fact that they keep spending, and then you see the strength out of some of these things, combined with the AI ups and downs. So I think it's been a pivotal year. I understand resilience as the word, but I would just say it's been a surprisingly strong year once again, and it feels like that's been the theme for 3 straight years.
That's very true, and it's like the way we discuss it, like the most hated, most disliked bullish momentum in this market. But every time we get upside, it feels like there is such a quick narrative to try and shoot that down. But right now we have seen at least some stabilization in like what's driven so much of the here, which is the AI trades. And we're seeing some updated coverage on analyst targets now going forward into the end of this year, beginning of 2026, which we're going to have to get very used to saying very quickly. But we'll focus on a lot of these analyst calls throughout the next hour. We'll kick things off with some of these semiconductor and just overall consumer discretionary names that are seeing updated analyst coverage. We will also then be charting and trading services now, as well as Adobe, and actually KLA Corp as well as Adobe, on the back of again some various analyst news. Lots of analyst news to get through. Tesla also with a reaffirmation from Dan Ives as we can see a $600 price target, and of course some various volatility to follow. We will also be diving into Micron and Wedbush's latest conviction on Micron as we do earnings still for that name Wednesday after the closing bell,
lower amid some of the weakness we're seeing in the broader crypto space. So wide variety, but definitely a tech-heavy focus throughout this week.
Yeah, no doubt. You want to talk some of these names that are on the move? So we're also in that time of the year too, where analysts are trying to get their 2026 outlooks out to the street. They're trying to get ahead of the holidays so they can have some family time. And it's like Analyst Monday today for 2026, and we got some updates from different ones regarding semiconductors. Texas Instruments being a name on our rundown here, Jenny, didn't get the nicest adjustment here from, I believe it was KeyBank as we go into the new year.
Yes, some conviction though, and I like some conviction. Not to say that neutral isn't a strategy, and neutral is obviously a stance taken on by many analysts, but I like the conviction here, the double downgrade from Goldman Sachs on Texas Instruments to sell from buy, reducing their price target to 156 a share, down from 200. They do see adjusted ratings in the semiconductor groups as part of now their broader 2026 outlook, and they see hyperscaler AI spending continuing to move higher, driving tailwinds to digital memory and storage in 2026. Basically all the things that have worked in tech throughout this past year. They do also see gradual industrial and automotive recovery that could help drive cyclical tailwinds in analog. But they did cite Texas Instruments' lackluster execution through the cycle and less leverage than peers in the up cycle behind this double downgrade. Also did downgrade ARM's part of this note, also accelerating to their price records fall on ARMs in 120 from 160 against part of this updated coverage. But I do appreciate that they mentioned a lot of these cyclical themes that have worked, like again, memory, digital, and anything related to analog. I mean, one piece of the AI trade, but it hasn't been a rally that's been felt equally, as we know, from some of the winners and losers of AI throughout the year.
Yeah, and this was James Schneider over at Goldman. I was getting confused with the Akamai KeyBank analyst, but
there's a lot of analysts.
Yeah, Teradyne, though, a name that was upgraded as a part of this. You mentioned ARM being downgraded. So a couple things moving around. Is there some shuffling within the coverage? A couple new initiations from some lesser followed names as well, but I would say downbeat on Texas Instruments in particular, because you read through, as you did, sort of the rationale. It sounds like they're about to be optimistic. They're saying, hey, bounce back in some of the cyclical areas. Still like a lot of the memory and stuff tied to AI, but then they're like, just flatter execution issues with TXN is driving some of that weakness that they anticipate. Let's talk Intel, because I said before, NVIDIA stole the show, Tesla steals the show, Palantir steals the show. Intel's the stock of the year in my mind.
Intel's up 90% this year nearly. So I know we've pulled back, now about 7.7% so far in the month of December. But I agree. I think I don't let the lackluster December necessarily dictate the entire strength that they've seen throughout this past year. Plus, with some news today that we are seeing reports that they are in these advanced talks to buy the AI chip startup Salvanova Systems for about $1.6 billion, including debt. And so this deal could close as soon as next month per these reports, but additionally Salvanova could pursue another option and assigned term sheets with other potential investors per Bloomberg reports on Saturday. So we know that this company has been around since 2017. It doesn't build custom AI chips to compete with, I even just have hard to say to compete with, but to say rival NVIDIA. But this would be the latest, right now, string of Intel really trying to be a formidable competitor in the broader world of AI. Also notably, their CEO, Lip Tan, does serve as the chairman of Salvanova currently. Moreover, his venture firm, Walt International, did lead the $56 million Series A round back in 2018. You have exposure to this company, of course, already.
Yeah, I think that's the key piece. That's what I was going to add if you didn't get there, is the ties to the leadership of Intel and sort of the familiarity, and then also kind of filling gaps. Intel's trying to subtly shift towards offense. They've been on defense for it seems like half a decade now. Perhaps we're starting to see a move towards offense as the stock is stabilized and starting to move off of what has been multi-year lows not that long ago. So nice move for Intel over
General. So we've talked a lot about this earnings in particular, sort of the nuance within retail and how names that are more exposed to value-oriented consumers have done a little bit better. Well, I think Dollar General not only is that, but it serves kind of a unique subset of the American population, which is a little bit more rural, it's a little bit more staples-oriented, but whatever they're doing seems to be working.
I mean, you talk about a story of the year, and I know that Dollar General isn't frequently thought of a big top of mind, especially in the broader world of retail, but we're seeing a string of good news really kicked off by a stronger than expected earnings season for a lot of these discount names. I mean, so many of the standouts have been Dollar General, Dollar Tree, TJX, Ross Stores, companies that do serve this very important need for lower or just more affordability, frankly, for middle America, which is, I mean, Dollar General has little exposure to most Americans. I think it's fascinating for that very reason. But we did see JP Morgan upgrade shares to overweight from neutral. The price target it was priced to 166 from 128. They do see upside to the company's now 2 to 3% same-store sales growth outlook for fiscal 2026. Given its exposure to the employed low-income consumer as well as the higher level of middle-income consumers that are now trading down. Walmart mentioned the very same, and that's a huge part of these companies' recent growth. But following a meeting with management, JP Morgan says that Dollar General is now back on offense. Words we actually were just using for Intel, but seeing favorability for price as well. I mean, this name continues to be a really standout performer. We're up now 76% on the year and 22% for the month of December.
Yeah, I believe this is a street high price target as well. So you're seeing a lot of optimism from Matthew Boss, what a name, out of JP Morgan into the new year. For a stock that's done really nicely too. So this isn't a turnaround story necessarily. This is a continued success story. But really nice words from the team at JP Morgan as we round that final turn of the year. We'll see if Dollar General can continue its outperformance into 2026. And then finally, Caesar. So this was another Goldman adjustment, kind of full-on, 2026 outlook within lodging and gaming. You could have taken your pick in terms of the names they looked at, but I like the framing, the haves and the have-nots. Isn't just us as people, it's apparently gaming companies too.
It's true. And so Caesars, unfortunately, you're down 27% on the year so far, but actually seeing some favorability so far, just up 3.5% in the month of December. But Goldman today did downgrade Caesars to neutral from buy. Price target was also cut modestly to $24 a share from $25, basically in line with where we are currently trading. But they did give adjusted ratings in the gaming and lodging group as part of their broader 2026 outlook. They do expect now a mixed 26 for gaming and lodging with another year of the, to quote you, Alex, and quote this note, have and have nots, but they find it too early to call an inflection and take a positive view, frankly, on gaming. In lodging, they expect that U.S. RevPAR growth will accelerate from this year with some help from the World Cup as well as digital stimulus. So as part of this note, we did see Wyndham Hotels was also downgraded, but then they actually upgraded names like Marriott to buy from neutral, Hilton also to buy from neutral, and Las Vegas Sands has also gotten an upgrade to buy from neutral. So there wasn't just all negativity in this note. There were some haves and the have-nots, that's very clearly stated.
Yeah, Wynn reiterated as a buy with a price target adjustment higher. So it does seem when it comes to the gaming sector, they're going for the higher end. And then when it goes to some of the other areas within lodging, kind of looking at scale. You think Hilton, you think Marriott as two names that got upgraded, I should say, is just scale. That's what I think of when I think of those two names. So going to be an interesting 2026 as these are some of the themes that I think many analysts and
to get through, as we did mention on the top of the show. We'll leave it there, though. Coming up next, we'll dive into some more analyst calls today on Adobe as well as KLA Corp. So we'll be charting and trading those names up next.
Stay connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are.
What's up, Carl Nation? It's your number one broker with the best full-service wealth management skills in the biz.
Actually, I've seen something from Schwab.
Uh-oh. Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab is a team of specialists in taxes, insurance, and estate planning, all with low fees.
We're experiencing technical
Schwab, a modern approach to wealth management.
Whether you're a bull or a bear, you'll want to catch the latest market action on Morning Movers with me, Diane King Hall, live from the floor of the New York Stock Exchange, only on Schwab Network.
Believe me, when it comes to investing, you'll love Carl's Way. Take a left here, please. But there's Carl's Way is the best way.
Is it? At Schwab, how I choose to invest is up to me.
Exactly. I can invest and trade on my own.
Yes, and I let them manage some investments for me, too.
Let's move on, shall we? No can do.
I'll get out here.
Where are you going?
Schwab. Schwab, a modern approach to wealth management.
Stay connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are. Morning Movers brings traders the biggest headlines to start the day, from volatile overnight swings to the earliest analyst calls. Get your watch list ready. 8 a.m. Eastern. Morning Movers only on Schwab Network.
teal linear regression line, that comes in your 362. That's about what we topped out yesterday, last session. So that was another level to the upside to watch out for. Finally, volume picks up once again here, around 385.
Okay, again, of course, we did see, again, some strength to end last week, obviously a bit lower today by about 1.6%. So with all of this in mind now, I think if you're trading Adobe here for sample purposes, Alex, walk us through your thinking.
Yeah, I mean, the trend is, I think, pretty straightforward. This is a stock that's struggled, and even with the recent earnings jump, even with the recent increase in momentum, it still has yet to break that downtrend. So going with that neutral to bearish call vertical, we're just coming into the end of the year, so it's a January 2nd expiration, short call credit spread, elongated Z risk profile. Basically, with this strategy, as we talk about all the time, particularly on the put side, you just select a short strike, you provide risk definition, and it stays below, in the case of the call vertical, that short strike, you select your credit. In this case, it's the 365, 370, so it needs to stay below 365 by the end of the year. If you do, you would collect that $100 and keep that. 366 the break even, 400 is the max loss. So 4-1 risk reward, the higher probability of success side, but most importantly, it is risk defined. So if the stock does make a breakout or a rally, you don't have unlimited risk. You know what that risk is going to.
Yeah, and I think there's good ways to summarize, obviously being mindful of risk, but, hoping for at least some continuation of the recent trend we've seen in Adobe. But now our next name today, KLA Corp, which is also seeing a more, not pessimistic, but maybe more cautious tone. Today they are actually up by 3.5%. So KLA Corp credit seeing a pretty nice session to kick off this week.
Yes, the broader picture perhaps you could say is more of a triangular shape. We have our low points that we connect here with our high points here give us this shape of two trend lines converging toward each other here. So now we are near the upper boundary there. If we were to keep moving higher, 1284.47 was our intraday high, but our high close was just recently last week here. So a bit of a disparity between the closing high and the intraday high there. Typically the closing high in regards to being more important, so that would be the mark to watch out for. In terms of our recent lows, 1185 is where we bottomed out here. You can also look here at another relative low near 1072. So a couple notable horizontal areas to consider. When we include our moving averages here, our yellow 21-day EMA lines up pretty closely with those recent relative lows that we discussed. 1195 is where that particular indicator comes in. If you were to look at our orange 63-day EMA, just a little bit below, pretty close to the trend line, the upward sloping trend line here, that comes in at about 1130. So a bit more food for thought here as we attempt to find some support areas. When we look at our RSI study, our longer downward sloping trend line in red has been broken as price pushed above the 50 midline. However, our green trend line that was much shorter lived has now been broken as well. So price, kind of stabilized near a supportive level, and we did not break through the 50 midline on the RSI, but still we haven't really managed to claw our way back above that trend line at this point. Finally, when we look at our volume profile study, we can see some very clear, very distinct volume nodes here. First, we have this one here near about 1070. We have another one here centered around 1130. And finally, the one that's closest to where we are now is right around 1200 or so. So these are some notable potential congestion points to be on the lookout for if price does start to retreat. Meanwhile, our +1 channel, our standard deviation channel to the upside, a bit of a stretch here, 1347 is where it comes in at this point in time. Remember though, this is just a snapshot of right now. It'll be a moving target if price keeps going upward in the future here. Just an idea of where to start thinking about potential resistance.
Yeah, and a name that is, again, making a pretty nice move today outside of some of the weakness we've seen in the overall tech industry. So a name to keep on your radar here. The trend's been pretty promising. All that being said, though, now as we get through trading daily core for sample purposes again, Alex, a different story today, especially based on price performance. You think the global, obviously, that Adobe particularly operates in, but what specifically for example?
Yeah. Same strategy, but flipped over, so the neutral bullish version. So short put vertical spread here, that's for a credit. One thing you should note though, KLAC only has monthly options available and only has $10 and anchoring the trade to that level in that January week of expiration, the January 6th, 8th of 2026. $10 wide spread is as again the minimum with the review for this particular stock. If you collect 330, that would be pretty close to a third of what the strategy we talked about as a rough guideline for these strategies and the pricing them out. And if you did that, you could collect 330 as a max profit, max loss would be 670, and that break even 1196.70. So very similar strategy to Adobe, it's just neutral bullish as opposed to Adobe's neutral bearish.
Yeah, leading into more of what we're seeing from today's price activity, we are obviously making a nice pop to the upside. But we'll leave it there for Chartmaster today. Coming up next, time to discuss another winner of the session, and that is Tesla, which got a positive note from Wedbush's Dan Ives. Shares are up almost 4% now on the session.
For instant reactions, earnings breakdowns, and hot takes that teach you about stocks and markets, follow me on X at Penny Penelides and connect with me, Nicole Penelides, on LinkedIn, Facebook, and Instagram.
Trading Schwab is powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Putting your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Live from Chicago, this is Trading 360. I'm Marley Caden. We track macro forces, market trends, and company news that shape investor decisions, all with expert analysis and actionable context. From inflation data to sector rotations, earnings to policy, it's a comprehensive view of the market every trading day. Trading 360, in-depth market coverage, straight from Chicago. Weekdays at 11 a.m. Eastern on Schwab Network. Stay connected to what moves markets. Download the Schwab Network app and get live coverage wherever you are. Hey, Dad, I have a question for you.
Sure.
When did Granddad first start investing?
Granddad had an account with Schwab before there were branches in the area. He really started with nothing. Worked hard, and after he passed away, the torch has been passed to me. And my advisor, Jennifer, she was with me with the journey, helping with the estate distribution. The two grandchildren planning for their college educations. Someday it'll be their turn.
Welcome back to Next Gen Investing. It's now time for FOMO. We are talking one of our, really our best performing Next 7 name of the day, which is Tesla, almost now 3.7%. Say almost 4%, not quite though. As we are seeing some analyst favorability trickle into its name today. So Marley Caden is of course doing it here in studio, host of the Schwab Network. So break down all of the various thoughts, because what I can gauge based on what Dan Ives, of course, concept, this robotaxi and autonomous driving functionality is a big driver of growth for them and a high margin network business for Tesla. So to potentially change what that looks like to get the human component out of the driver's seat or the passenger seat, that raises them up to another level of safety in terms of the regulation. That makes them a level 4 in terms of their autonomous driving. That would be a huge deal.
No doubt, and I guess I should start. It is Tesla, so this stock has like a million things going on at once. Is there anything else that you have that we should be aware of? Because the other thing that's caught my eye here is this SpaceX news, and I start to wonder, we so many see an investment in Tesla is an investment in the mind of Elon Musk, and it's not about the valuation of the car company or robotaxi, but like exposure to what he's working on. If SpaceX is suddenly an option too, does that get some of that demand elsewhere?
It's a very interesting thing, and I think there's a catalyst mix here today. That's what we'll call it. I think this autonomous driving thing is a big deal, this robotaxi without the safety driver, because this has been a big headline, and one of the things really holding that portion of the business back in terms of being a major competitor in that space. We are also hearing about SpaceX having a potential IPO in 2026. Elon Musk has pretty much all but confirmed that that is in sight, at least for something that they're hoping to do. And you raise a good point, Alex. Does that divert attention away? I think there's a flip argument to be made that it also brings some attention back on Elon Musk and shows how very focused he is on his core businesses. And we were talking about Tesla on Trading 360 today, and the big conversation was about how critical Elon Musk's focus is to the success of any of his companies or products. If he seems focused, they seem to be successful, whether or not the numbers are actually matching was the argument that was made. There's also the Cybercab, the production-ready Cybercab hit a showroom floor in San Jose. They showed the upgrades, they made some improvements. This is that self-driving. It seems to be near production-ready. It does not have a steering wheel, which was a big question mark. It's an autonomous two-seater. The photos are kind of fascinating. It looks like a commercial car to me, but they're saying that they hope that it hits the production line in Q2 of 26. So this is potentially really coming, and I think Tesla has teased a lot of vehicles, but when you start to actually see them become a part of reality and actually physically have a vehicle to fix your eyes on, that is another driver today. There's also some headlines about director compensation that's driving a move to the upside today. So several catalysts, but I would say that the big ones really are around, this potential bullish move in autonomy. But I say that with a caveat because Morgan Stanley downgraded Tesla from overweight to equal weight and said that their high expectations around AI innovation have brought the stock closer to fair value. Now they did raise their price target to $425, but that's about $50 below what we're currently trading.
Yeah, and I think that's like it's been somewhat brushed over because the optimism really from Dan Ives has been so much more of the frontline story today. But I do think there's still some skepticism when it comes to the timelines and the ability to deliver on a lot of the economy focus. I mean, there's a lot riding on Tesla next year, especially that it's every year. What we do know is delivery on a yearly basis, we is expected to contract for the second straight year, which is not a theme that you want to see continue. So all that being said, as we now get through trading Tesla, again, for financial purposes, a lot of conviction on those highly foreign names, but today is definitely seeing a nice bit of upside and positive commentary going forward.
Yeah, I mean, I was just looking at the chart. If what I'm looking at is accurate, this may be, if we were to close here, the second highest close ever for Tesla. Now, it did have a day where it peaked up to 488.54, but that day it ultimately turned around and closed like sub 440. It does look like the day before that, though, it closed around 479.86. So, I mean, we're in striking distance here of an all-time high close, if not even an all-time high intraday if the market were to firm up alongside Tesla. That said, critical
opportunities don't stop when the market day ends. So neither do we. Schwab gives you round-the-clock access to over 1,100 of the most popular stocks and ETFs, plus a wide variety of futures markets. Along with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade daily with Schwab.
Schwab Network delivers real-time market insights, live from the NYSE, NASDAQ, CBOE, and beyond. From earnings to economic data, we cover what matters as it happens. Streaming 24/7, anytime, anywhere, free on SchwabNetwork.com. Morning movers, be the first to find out what's shaping early market action. Tech, Options Corner, Futures Focus, technical analysis. Morning movers covers it all. Grab your coffee and tune in every trading day at 8 a.m. Eastern, only on Schwab Network. Stay connected to the markets with Schwab Network.
Tune in 24 hours a day, 7 days a week on SchwabNetwork.com
And on all your favorite streaming services. Schwab Network, available anytime, anywhere, on any device for free. Stay connected to what moves markets. Download the Schwab Network app and get live coverage wherever you are.
I'm Nicole Pavlidis, live at the New York Stock Exchange, and this is the Watch List. Your midday view into the trends driving the markets with a sharp focus on technology, innovation, and companies leading the next wave of growth. Big movers, real-time interviews, and insight from analysts, founders, and market voices you trust. The Watch List, 2 p.m. Eastern, only on Schwab Network.
Welcome back to Next Gen Investing. It's now time to discuss the analyst conviction here on Micron ahead of their earnings event Wednesday after the closing bell. Joining us now is Dan King Hawley, host of Morning Movers, for some insights on this call for Wedbush today, which I will say is pretty optimistic, almost considering its price target raised to $300 a share.
It is. They're growing more bullish on Micron ahead of its earnings, and they're essentially seeing this result being raised for Micron. They're raising their price target, as you mentioned, to $300 a share. That's more than 35% higher than what their previous price target was. Their previous price target was $220 on that one. So they have more conviction around this because they're expecting Micron to benefit from bigger than expected increases in memory pricing. So they're expecting DRAM prices to rise at least 30% in the current quarter. NAND prices, they're expecting that to climb at least 20%. So these again are on the at least side, 20 to 30%. They do point out that gains could vary by manufacturer, especially depending on product mix and contract timing. But they point out that Micron's guidance only is looking for high single to low double-digit increases, and they think that's understated, especially when you look across industry pricing. So they think that their Q2 results could meaningfully outperform where expectations land. The one caveat I want to point out, this is Jay Woods from Freedom Capital Markets, so his note on Micron is looking at the technical aspect of it. One, obviously, the stock's had a huge run year to date. One of the things that he pointed out is that shares have traded lower off the back of the last 4 quarters and 5 of the last 6 quarters. So, that's something that he pointed out that it could be a case of seeing shares rally into the event, and then sell off on the news. So, which we've seen that before, right, where investors sell the news. So shares are gaining some ground today, though those gains have been tempered throughout today's session, guys.
Yeah, and I will say that at least was looking, this has been one of the stories of the year, but at
more participants on the platform means more revenue for them. So they're a really well-positioned company to dominate in AI. You talked about Dan Ives earlier, my colleague, in his Tesla call. We have a fund that, the Dan Ives AI Revolution Fund. Roblox is in it because Dan sees Tesla and Roblox as beneficiaries of the AI boom. So yes, they're very, very well positioned for that. We just need the CFO to get a little bit more aggressive and say we can, in fact, expand margins, and I think it's about to start to happen.
Michael, you mentioned consolidation, you mentioned the sandbox style, the Roblox, the Minecraft, and then also kind of that free-to-play microtransactions that we've seen take over the last maybe decade in games. What's the next big thing that we're not talking about?
Oh boy, yeah, we're right in the midst, in my new job, of raising money for a fund that is trying to do AI-generated games with 5-person studios. And the guy who runs this, Owen Mahoney, he started this when he was CEO at Nexon. They funded a studio called Embark, and Embark has now made 2 games that have been successes. Won the finals, and then most recent Arc Raiders. They ended up beefing up those studios to about 75 people each, but they literally spent $75 million to make those games, and those games combined are generating roughly $1 billion a year. So Owen's trying to do the same thing with us. We're raising a fund for him. The next thing is a Y Combinator form of game development. Let people have ideas, let them execute their ideas, and then put a panel of really let people have ideas, let them execute their ideas, and then put a panel of really smart, sophisticated game people like Owen on top to figure out what to greenlight and fund, and we're going to have hit after hit after hit. That's the future. Smaller studios, more nimble, and funding fun as opposed to funding franchises that have IP associated with it.
Okay, and I think a great breakdown of some of the trends we're seeing in the space. As you mentioned, it's a different world than when you first started really covering these names. There's a lot more to cover at the time, but really great insight as we work to close off this year and head into 2026 very rapidly. Appreciate it, Michael Packer, Managing Director of Strategic Planning at Redbush Securities. But now to shift gears into, it's great to see some pressure today that's in the broader crypto world. We focus here on Cypher mining. I think talking to Sam Bottas, fourth host of the Schwab Network. So we're seeing some, of course, price to Bitcoin. We're also seeing some analyst news. Sam, walk us through what's driving some of the pressure today, though, in Cypher mining. Yeah, the Cypher mining under a significant amount of pressure, as you say, Jenny. It is down double digits right now, with 13% lower, and so we are seeing a bit of a sell-off here. You could say the least in this stock, but it's being felt across the whole industry right now. If you take a look really at the Bitcoin exposed space, you've got Iron, which is another Bitcoin miner, Australian company, down over 10%. You've got Clean Fund, also down in double digits, almost 15%. In fact, that is feeling the most pronounced losses across the space. You've already also got some of the Bitcoin treasury companies, also Strategy down 8%, and Coin down at 5.5%. So this is really being felt, as I say, across the space. We do see, obviously, cryptocurrencies, the prices across Bitcoin, Ether, Solana, really all getting hammered today. We're seeing Bitcoin is back to levels of 85,000 and change. Now, the reason why we are seeing shares down so significantly, obviously, is because tied very closely to the price of Bitcoin, so that weakness does tend to knock some of that sentiment lower. Markets have been relatively speculative, I should say, cautious around speculative type trade as well. There is said to be a strong correlation here with tech stocks. Obviously, we've been seeing some of the rotation out, the high-flying names into other parts of the market. There's certainly been a trend that might be closely linked to what we're seeing as far as a bit of a pullback here. Not to mention, there's also talk of crypto sort of being related to, the whole popular carry trade to BOJ, of course, expected to hike rates later this weekend. So there has been some speculation around the potential for an unwind of those positions, which are tied up to basically trade some of those more speculative names like Bitcoin and also technology stocks. So all stuff to keep an eye on. Also seeing some other reports that are related to crackdown on mining over in China. Obviously, this is something that we don't typically see, but there has been still a lot of mining going on in China, despite the fact that it's obviously banned. The fundamentals
did look good in this company, but it is off significantly today, very much off the highs that we've seen. Look at early November, for instance, still up though, 220% here today, guys.
Sam, when you look at a company like this, fundamentals aside, I don't want to oversimplify it, but in many ways, is this just a higher beta extension of Bitcoin itself, the same way that some of the altcoins or Ethereum, the correlation is so strong. If you're not bullish on Bitcoin, are you even keying in this stock?
Interesting question, Alex, because while it's not a good time to be exposed to Bitcoin if you're a company, obviously because the prices have been volatile, it is a good time to be adaptable and to prove to the market that you're able to see the writing on the wall when it comes to having been exposed just to Bitcoin. So we're seeing a lot of the companies like this one, for instance, that is not relying on a big chunk of its revenue or its sales or its exposure coming just from cryptocurrency and Bitcoin. In fact, it has managed to adapt. So it's also got this announcement of partnerships with AWS, 15-year deals to provide data center space there. It's also got this leasing agreement with Fluidstack as well, 10-year high performance computing lease agreement. So these companies that are able to be adaptable are very much benefiting from that. But yes, we do tend to see this correlation between that pullback in Bitcoin prices. But yes, we are obviously seeing this one down double digits, and we do see that strong correlation, as I mentioned. But just to look across the fundamentals, still, there was a beat across the board, but I think it was really about the analysis that it is managing to diversify some of its business just away from Bitcoin that had helped it in the past.
Yeah, I do think any time you hear diversification is typically a good thing. Obviously, it depends on the performance of the broader asset class. But appreciate it, Sam Bottoms, host of the Schwab Network, for that breakdown. That'll do it for Alex and myself for Next Gen Investing for this Monday. We have the watch list coming up next.
Let's dive in.
So we ended pretty flat with the Dow Jones on the line to the downside. There wasn't much movement, very much in the index on the day. The S&P 500 was also pretty range bound. We just ended the session about 0.2% lower at 68.16 there for the Nasdaq. The tech heavy board, of course, under pressure because of the pullback that we saw in that particular sector. As we mentioned, with some of those bigger names like Broadcom down about 0.5%. That took up to 25.07 there, down around 129 points or so. And then we saw the Russell 2000 sheet about 20 points. That took us down about 0.8%, 25.30 there on the small cap trade. So all in all, some down arrows across the board today. A little bit set up in this positioning ahead. What is going to be a pretty big week as far as the backlog of economic data that we've been getting. Sectors as far as what we saw there as we had in the picture a little bit earlier. Told a bit of a different story to what we did see at a headline level. Of course, we saw technology under pressure to the tune of 1%. Top services dip below the line. Just in those final minutes there, the discretionary held up next to things like Tesla, 9/10 of the highest, Staples, 2/10, financials. Also held their head above water too. So that's obviously been a good day across some of those sectors. And if we look at the boards, utilities was very much an outperformer on the day as well. That managed to hold on to overall 1% gain there for that sector. Real estate also high, industrials higher as well. But interestingly, materials just slip below the line in that final hour too. And energy had been lower on the day, tracking those crude prices. So mixed performance, but I mean things still are working as far as some of the rotation, as Alex had mentioned too, into a sort of more value-orientated trade here. We very much have seen that movement out of technology into other parts, other corners of the market in recent sessions. So we saw that very much continuing today. That momentum is building as far as that trend. That is going to be catalysts are going to be those data prints that we get. So let's bring Marley back to the conversation. And Alex, I just wanted to sort of get your thoughts on the day and sort of pick up where you left off there.
Yeah, when I look at this, all things considered, a couple of the things that I thought we could tie this in, guys, is kind of setting the stage now that we are at that kind of final full trading week of the year, starting to think about year end. I sent the team a S&P 500 chart that looked at the last month of trading, but really what I'm more concerned with is the right side of this particular chart. So no real technical damage was done. I think the buying took place where you kind of would expect it to intraday today, as it did on Friday, right around that 1 month moving average represented by that purple line. But that area that is highlighted to the right portion of the screen there is what options are suggesting as a one standard deviation range throughout the end of the year based off the S&P 500's December 31st end of the year expiration, which has about a 2.5% range up or down, so 5% high to low in terms of where we be. If we round here, we're basically talking around 7,000 to the upside to around 66.50 to the downside. So, you know, implied volatility, absence of surprise, oftentimes even overstates what will actually happen. That's typically, especially if you kind of see options as an insurance contract, which is not perfect description, but it can be kind of a layman's way to understand them. Typically those premiums over time in the insurance world are meant to collect enough to offset any type of outlay, and then you're kind of buying that protection or peace of mind. It's similar but different in the options world, and surprise can happen at any time. But that being said, you have an idea based off of this, what is a realistic end of the year for the S&P 500, and as we get close to that, this box will shrink and shrink and shrink until we get towards that closing bell, basically to close down the year. Also, another chart I sent the team is a DSPX chart, guys, and what this looks at is the dispersion amongst the names within the S&P 500. Basically, looking at the average volatility of the average name in the index, which right now sits at about 32.5, compared to where the VIX for the headline, which is close to about 16.5, and it measures that relationship. And as we see this come down from the peak about a month and a half, 2 months ago, what it tells me is the average stock is performing much more like the index now, or we're starting to actually see that 490 move a little bit more in a pack, even though we were talking about that rotation. It's been a rotation out of mega cap tech into the other 490. And so this to me illustrates that, also illustrates that we're getting through another earnings season, which can add that idiosyncratic individual stock equity volatility that's different from the headline. All that being said,
theme to, or I guess their projections that they subscribe to. And ultimately, the data will prove someone right, someone wrong, or everyone right in some way. And as we get that picture, we're basically filling in the past, and we're starting to see the path we're taking. So, yeah, it's delayed. This data is always a little bit delayed as it is, just because we're always looking back in time with hard data. But it'll be nice to see that caught up. It's the most important data points that we get, especially given where we are in terms of this Fed easing cycle. It's no longer really an inflation conversation. It's a labor market conversation alongside potential productivity gains. So the fact that you're going to get some of those answers from this data, combine it with some soft data that we'll get this week, S&P Global's PMIs we'll get tomorrow. We'll also get CPI, I believe, later on in the week. And then, of course, the University of Michigan consumer sentiment at the end of the week is truly more of that soft data. We start to patch the story together, and the bifurcation, the soft data continue to send off the alarms that things that are falling apart. The hard data just doesn't seem to confirm that. So at some point, one would think that you'd see some convergence, but we've been saying that for a couple of years now.
Yeah, and Alex, away from, of course, the jobs, just to obviously keep us on our toes, we're going to be getting Jobs Friday on Tuesday, and then all those different months of data to obviously pass over as well. We're going to be getting some key earnings, which really sort of bookends the season, bookends the year here, and some really important names to this whole AI trade, to the consumption picture as well. As we touched on earlier, Micron is going to be one of those, Nike, FedEx, which is always a really good pulse check on the entire economy. I'm just wondering how you're looking at some of those names.
Yeah, I mean, Micron far and away, I think, from a market impact standpoint, is the most important, and I don't think it's relatively close. From an economy and sort of projection of how is the consumer hanging in there, what's the holiday season potentially looking like, how stretched is the consumer, it's hard to discount Nike, it's hard to discount FedEx, and I will even throw in there some of these home builders. It's hard to discount Lennar and KB Homes, and even something like Carnival or ConAgra's we'll get throughout the week. Now, not all of them are going to carry the same weight as a FedEx in terms of the visibility that they have into the consumer, or a Nike, even in its struggles, has been far and away one of the most important consumer brands throughout all of this. It does paint the picture of whether or not things are becoming more and more strained. And so because we've had that delayed data, in many ways, I'll see this in Bloomberg analysts like Anna Wong will look to earnings calls and call-outs of concern to kind of patch together whether or not inflation is the concern or if layoffs are the concern. And some of that Bloomberg research is suggesting that it isn't inflation anymore. It is more labor market. And so as we get more of these earnings calls and transcripts and releases, we again get more and more information, in some ways faster than some of this macro data, at least for now, until the government catches up and gets things back on schedule.
Well, Alex, thanks for taking the time to be with us this afternoon to break down all the market action we saw today and also preview a little bit of what we'll be getting tomorrow. That's Alex Poppy, our senior equity contributor here on Schwab Network.
Hey, investors, you know the market moves. Schwab is here to help you move with it. So, whether you're buying, selling, holding, or planning, whether you're ETFing or 401k, saving, spending, or even retiring, you can count on Schwab for market insights, live support, powerful trading platforms, and 400 branches. All at your service, all so you can invest your way. Sounds nice, right?
I'm Nicole Pedalides, live at the New York Stock Exchange, and this is the Watch List. Your midday view into the trends driving the markets with a sharp focus on technology, innovation, and companies leading the next wave of growth. Big movers, real-time interviews, and insight from analysts, founders, and market voices you trust. The Watch List, 2 p.m. Eastern, only on
upside from that line. Haven't really done so just yet. But once we do start getting a little bit higher, the 212 level really stands out. This was a repeated low point that we saw here pretty consistently. That was also the low point before we had our gap down. That was the start of our more severe decline here. We also have a matching ceiling right about here near 226. Pretty far away, not tested as many times, but that would be another upside area to be on the lookout for if things do start to improve. So if we were to look at our moving averages that we follow, everything's kind of clustered together right here between 198 to 205 or so, 204. Sideways moving averages that are grouped together suggest either directionless trading because it's range bound or because things have been chopping around in a way that the moving averages can't really find a direction. Kind of a mix of these two situations here coming in. But regardless, price is starting to move above all three of them at this point. But we haven't really seen a strong breakout, especially today. We're kind of just rather listless trading. Notice as well that RSI was rejected at our longer term trend line here. Green trend line broken above the 50 midline, but not making a strong breakout like you might hope if you were bullish. Finally, volume profile, we can see that our volume nodes that we have to the upside, our point of control comes in right there near about 215 or so, our thick red line. That would be the potential congestion area to be on the lookout for to the upside. Notice as well things really start to drop off here when we get below our moving averages and below that 200 level once again.
And right now trading at 204.90, and on the year so far in the last 12 months, Boeing shares up about 20%. Your next pick here is ServiceNow. Now they are under quite a bit of pressure today. They have their stock split that's happening. They're down about almost 11% so far this morning. Walk us through ServiceNow.
First off, ServiceNow is an amazing company. It's a company that I want to own for the long term. So this is a little bit of a trade, and if it winds up being this way, I don't mind owning it for the long term. So it's down on the news that they may be buying a cybersecurity company for about $7 billion. And I love these types of speculative events when they happen in the marketplace here. When we see some news come out, the stock drops for one reason or another. In this case, the street is obviously not liking this potential transaction. I love it. So I am selling a put spread here. I'm just selling a simple put spread going out to next week. I'm selling the 780, 770 put spread, $10 wide. I'm going to collect about $5, maybe even get a little bit more than that right now because the stock dropped a little bit further. At worst case, I own NOW at 765 at the end of next week if this thing goes down lower. If not, it's a pretty hefty premium that I'm collecting here.
All right, Rick, so as we take a look at ServiceNow, we've got obviously some big gaps up here in this April area around tariff day and the recovery there. Now we're seeing a downward sloping channel. Walk us through some of the technical observations you're making.
Right, so the trading question, if you're looking for price to stay above this general area here, that's the same level, once again, that I had highlighted because we had another gap right here. That was the high point before we had our gap up on earnings. And it also, you could group it together with our worst close that we saw from back here near 721. That gives you this supportive zone to consider. It's a pretty big zone there at this point, but that would be some areas of interest to the downside. But for now, 776.63 is where that gap came in that I mentioned earlier, our dark green line there. So that would be a point that the bulls would be probably pretty interested in holding on to. If we were to keep moving to the upside, another gap here, 857.91, was where things kind of ended here for our small uptrend. That's where we had our gap form here. So now you could also say we have a downward sloping trend line. You could put it across the lows and extrapolate that to give some idea where you might find further support. Certainly not a guarantee it's going to work out, but one tool you can use to try to project potential support here. Now, when we look at our moving averages in this case here, we were seeing them clustered together in this phase, but now you can see that they're starting to diverge a little bit farther apart from each other. Prices below all three. So look for price if you had a more bullish outlook to start crossing back above those and starting to drag the trajectory of the slope of those lines from negative to positive once more. One thing as well, even though we did break through our trend line, our green trend line, we are not in the oversold area just yet. minus one standard deviation channel, one standard deviation below our teal linear regression line there. That's about where we stabilized so far today. So even more emphasis on that level near 776, 777, excuse me, as a potential support area.
Yeah, and service now year to date trading down about 27%, of course more than 10% coming off of that news of the potential acquisition driving them down today. Now, since your last pick here, we're talking about a company everybody knows because most of us use it on a near daily basis, at least if you live in a major city. We're talking about Uber here. Scott, are you bullish or bearish on Uber?
I'm moderately bullish. I'm moderately bullish. And the stock just dropped below its 200-day moving average, which has been support in the past. So moderately bullish here. Option applied volatility, just like in Boeing, is really inexpensive. It is very, very cheap. So I am buying some time. I'm buying a diagonal call spread. So I am selling next week's expiration 85 strike call. I'm going to go out to just regular January expiration and buy an 82.5 strike call. So moderately bullish diagonal call spread, buying me some time. I can pay just over $2 for that. And I'm just looking for a bit of a recovery in Uber here. I know it dipped below that 200, but I think it's going to grab it pretty quickly and then bounce up from there.
All right, Rick, so if we look at the technicals for Uber, and Uber also entering this robo-taxi space now in Dubai, so another potential driver for them in terms of growth possibilities. But I do see some crossing lines here, so walk us through the technicals on that, 'cause this is not something we've seen on the charts so far today.
Right, recent deal with Lucid to supply those autonomous driving vehicles here. But 82, our green line, that's about we bottomed out twice recently here. If you were to backtrack, this was once again an important area because we had this high point here. So we've tested this level many times since then. We've held on so far. If we were to move lower, the 77 level, our lighter green line here, that was around when we topped out repeatedly here and then retested it after the breakout to the upside. So again, a bit of a wider span between these 2 points here, but those are what sticks out in terms of horizontal levels to consider.
I'm Kevin Green, and I track options flow via identifying who's buying, who's selling, and how it's going to impact markets. Watch live on Schwab Network at schwabnetwork.com.
Trading with Schwab is powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals, you can spend less time searching and more time building. Trade brilliantly with Schwab.
You're watching The Wrap. I'm Jenny Ford here in our Chicago studios. Let's keep things rolling with a look at what's driving today's action. Let's go inside out on this day. Joining us now is James Janowski. Thanks so much for joining us, head of the Emerging Tech Consumer Choice Center. So what do you make of all of this sort of soap opera and drama that's been playing out in the media world?
Yeah, thank you for having me. I think that it's a fascinating development watching the battle unfold over the last week now between Netflix and now Paramount looking to go and acquire Warner Brother Films and the broader company in the case of Paramount. This is a company in Netflix that is looking to go and continue to grow opportunity. We've seen it go and do this in live sports and gaming over the last several years and certainly improve on its ad tech platform. And on the content creation side, Netflix has always been doing this, but really if they were to get access into some of the IP that Warner Brothers does have, I think that opens up a whole new avenue of opportunity for them. And that's why they were looking to acquire the company. Paramount saw an opportunity here to go and I think consolidate further and offer to buy the whole enchilada, if you will, and get all of Warner Brothers plus CNN and everything else. A concern that was certainly shared by the president in any sale. He wanted to see CNN go down. So very fascinating battle that we're seeing unfold here.
You know, on the Friday that we heard that Netflix could be sort of front running here, or at least in the lead, this bidding war and sort of managed to get across the line, it was sort of, you felt like you were hard pressed to kind of find someone out there in the market who actually liked the sound of this, because you had the market selling off. I mean, Netflix shares were down. You had Hollywood sort of coming out with these statements that they were worried about what it would mean for their industry. And then you also had the Trump administration who had come out, and I believe the line that morning was something to the effect of, there's some speculation coming up at the White House, skepticism, I should say, getting my S words mixed up, but skepticism coming out of the White House as well. But it sounds like there could be some opportunity here as far as what you're saying.
Yeah, absolutely. I mean, at the end of the day, like, the concerns that are there potentially on an antitrust level could be resolved through a myriad of remedies that are out there. That's something that we have yet to go and see play out. Obviously, first things first, we have to go and see which bid ultimately wins out here between the two titans kind of clashing of Netflix and Paramount. And then once we get past that, then it gets into the regulatory scrutiny of whether or not you can satisfy the concerns from the Department of Justice domestically. And really, I don't think that they're my primary concern, at least when it comes to the regulatory scrutiny. I think that you also do have to consider international regulators, certainly from like the EU, for example, that might also go and have a hand in what this outcome might look like here. So that's what I'm also keeping an eye on.
It's interesting because they haven't been going down without a fight. That's Paramount. And CEO David Olson was here at the New York Stock Exchange about a week ago, sort of laying out his case for why, this is a superior offer here. I mean, talking about $17.6 billion in cash to shareholders, saying it's bad for Hollywood, bad for consumers, and particularly when you combine the two, big streamers here, you could potentially protect the movie business. I mean, there was a lot of reasons, and I mean, it's detailed in the letter that he sent also. How do you see this actually playing out now? I mean, what do you think the outcome of this battle is going to look like?
Yeah, it'll be a fascinating one to go and watch unfold. It's not going to go and have any resolution for at least the next 12 to 18 months, and then after the deal gets consummated, we'll still go. And this is a multi-year kind of thing I think that we're going to see play out. So lots of ebbs and flows that we're going to see kind of play out in this conversation. But at the end of the day, I'm not necessarily as concerned about the threat to consumers, if you will, that Mr. Elson was highlighting. I think that really there's an opportunity and an inflection point in the entertainment industry that Netflix is trying to kind of capitalize on, and I think that at the end of the day, that's what I'm most excited about. I do think that producers and actors and consumers alike will benefit
still be profitable on this one. So I looked at a cash and pure put. I went out to the January 2nd weekly cycle, so just about 18 days to expiration. And this is one of those strategies you can pick a strike or pick a level, and you think the stock's going to remain above and continue to do this over and over on a weekly or monthly basis. Here, this cash and pure put. We're going out to that January 2nd weekly option. We're going to sell the out of the money 93 strike put. You're going to collect roughly a credit of about $2.10. Now, if the stock stays above 93 over the next 2.5 weeks, you just get to keep that $210 per put that you sold on this. Now, it does take your break even to the downside just below the 91 level, $90.90 to collect a 210 credit. That would be, if the stock falls below 93, that would be where we would be buying the actual shares at a discount of over 3.5% below the current share price. So you've got that cushion to the downside. It is capital intensive because if the stock does fall and you stay short that put, you're going to have to buy the shares if it's below 93 at expiration over the next 18 days. But at the same time, if you put a $90 or 90-cent bid in on the shares, you might not ever get filled on Netflix if it doesn't fall. This way, this type of strategy allows you to actually still profit if the stock stabilizes, goes higher, or even goes a little bit lower, remains above that break even of $90.90.
Okay, Netflix shares under pressure. It's a shoot of about 1% right now, trading at 94 and change. Thanks so much for the example trade for us for today's Off Winder. Really appreciate your time.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you an active trader? Our active trading webcasts are designed to help you develop a deeper understanding of technical analysis, options, futures, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Absolutely. For us, really, this all comes down to what Apple can do to drive unit sales of the iPhone. And we do not think that the firm is extremely far behind in AI today, actually, and we do think they will be able to catch up. But all that matters, really, when you look at the financials, is how will that impact new sales of iPhones. And what we were expecting when the iPhone 16 first launched last year was that it required more compute power, more memory, and so the advancing AI vision from Apple is going to drive new phone purchases. That hasn't happened yet, and so even if they do rectify this AI strategy next year, we're not sure that that's going to have a commensurate impact on those iPhone sales, and so that is what leads to our more tepid view, as you said.
And then I was also thinking that I understand what you're saying. At the same time, I think we've got a bit of a surprise lately on the interest in China about the Apple iPhone. We've been seeing some good news on the China story. Is that a tailwind, Angelo?
I mean, I think so. I mean, when I think about China here, clearly it's been a negative story for Apple over the last 2+ years or so. I mean, clearly, when you look at Tim Cook and the guidance that he did provide for the December quarter, he was very optimistic about the potential here for China. But actually, when you look at the numbers, you're potentially looking at double-digit growth in China in the December quarter. But more importantly, again, what we do like is the fact that when you throw greater AI capabilities in there alongside, let's call it a foldable device. Again, if that rolls out late next year, I think those were two missing links that Apple really didn't have, at their disposal with the China consumer, and two things the China consumer really likes. So when you start thinking about the China story going into calendar 27, I think there really is a nice story to be had in China. Not to mention, you've got very easy comparisons when you start looking at the performance in China over the last 2 years. So I think it all kind of sets up for a very nice story going into the next year.
Yeah, you talked about services growing 12 to 14% in 2026. Also, the Pro and Pro Max phones coming, the foldable phone, not necessarily the less expensive model. We may not see that. William, you talk about this stock, though, being maybe overvalued. You're watching what when it comes to Apple? I mean, is there going to be a point that you go back in, or probably not? I mean, does it need to pull back here? Where do you think it's, what stock points are you watching?
Well, so our fair value estimate is $240 a share today. So you're right, we are looking for a little bit of a pullback, but we actually do think that 2026 is set up really well, and it's just about how well that year is being priced into the stock. And we're seeing really strong momentum for the iPhone 17 family in China, as we were just talking about, but also in the Western world. But we see this a little bit more as the result of pent-up refresh demand, not necessarily anything idiosyncratic that's been successful with this specific model. Now, it remains to be seen if there is a killer AI strategy that emerges next year, and if that requires new hardware to build and for consumers to buy. I think that's the bull case for Apple stock today, but right now we just don't see that spurring enough of those hardware device sales, and those are really what move the financials for Apple.
Right, understood. And what other names, Angelo, do you like? I know you have this one with a 310 target. You're big on Apple. Angelo, what else is on your list these days? Your buys, your best buys?
Yeah, and we've had quite a run here on the tech side, right? I mean, you're talking about almost 60% run off the April lows. So the fact that we're actually seeing some digestion here is something I actually like to see. But that said, I mean, I think you can look at some of these out-of-favor names within semis. I mean, the name that I pointed out to, a name like NXP Semiconductors is a name that I do like a lot, especially if you start getting kind of the
like that, we think it's set up well for a cyclical recovery in the witness this.
Yeah, and also, when you look at what you call some of the winners, you mentioned Ostemi and some of the other great names there, Angelo, is there anything you're staying away from, particularly in the back step, that maybe you think is overvalued, or anything else that you're a little wary of these days?
Well, we actually wrote a piece of the mag a couple of weeks ago, and one thing that we did highlight was we do think there's this kind of changing AI narrative as you go into 2026. And what we essentially mean by that is there are going to be a lot more hiccups and a lot more choppiness along the way next year, and that's because of us just moving from an environment where everything was based on bookings and kind of signing a big deal with OpenAI to one where it's actually going to be about building those AI data centers. And names that we would avoid are kind of the more leverage type of names. Oracle was a name that we did downgrade a couple of weeks ago, so that would be at the top of the list. Holy, also a name that has underperformed, but those are still names that we'll be staying away from.
Right, understood. And the final thought here, William?
We just think that there's a lot of opportunity in the AI trade, and we think some of those infrastructure stocks that sold off, like a Broadcom, like a Marvell, are where we're placing our bets today. And someone like an Apple, we're a little bit more tempered in our view on, because it remains to be seen how it affects those actual hardware sales.
Yeah, it's really great to see you both, William Kerwin and Angelo Zeno. Thank you so much, and we'll get a lot more on earnings this week, more on economic data, and tomorrow jobs, and the late eco report. So thank you guys so much. It was a good chat about Apple there and more. And thank you, friends, for being with me here on the watch list. Real-time access, data-driven analysis from U.S. equities to global macro matters. Schwab Network connects the dots. Watch live, subscribe free at schwabnetwork.com.
Opportunities don't stop when the market day ends. So neither do we. Schwab gives you round-the-clock access to over 1,100 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
I'm Tom.
And I'm Jenny Moore. This is Next Gen Investing, where we track the trends shaping tomorrow's market.
So tech and energy, crypto, consumers focus on what's driving investor sentiment right now.
Clear analysis and forward-looking market coverage every trading day.
This is a make-or-break level for the stock. Not disintermediate short to near-term capitalism.
Next Gen Investing, 1 p.m. Eastern.
Only on Schwab Network.
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Morning Movers brings traders the biggest headlines to start the day, from volatile overnight swings to the earliest analyst calls. Get your watch list ready. 8 a.m. Eastern. Morning Movers only on Schwab Network. Stay connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are.
the economy looks like it's still going to be resilient this year. But the mania is going to unfold very slowly, and we think the AI infrastructure theme will be very gradually but surely de-rated next year. And that's going to allow an opportunity for investors to broaden into other parts of the economy that will benefit from or other parts of the stock market to benefit from a resilient economy.
And what do you think is the clearest signal right now that we move past this speculative excess, for lack of a better word, and into what could be a more disciplined market regime?
Well, first of all, several of the key leaders like NVIDIA and Microsoft are not going up, even though a business like NVIDIA dramatically increased its fundamental outlook, so that's an important data point. And then, of course, the reaction to Oracle is very intriguing because investors are beginning to realize that this spending cycle could be opening. And as the market shifts towards funding this with more debt and less cash, that is a real constraint. And not all businesses will be able to spend at this pace. And I think you're seeing this theme emerge in the stock action.
So if this is a maturity phase, does this mean that we're going to see lower returns overall, or is this just now a different or new playbook for generating alpha?
I think it's a new playbook. And our investment lives have been dominated by this outperformance of a small group of mega cap stocks. And increasingly, it's looking like those businesses are changing their color. They're becoming more capital intensive, less cash flow generative, and historically, that is a problem for equity investors. So I think there's a very good argument to say, even if AI unfolds according to the optimists, the stock prices will no longer win like they've won in the last 50 years. And that implies investors need to shift their attention elsewhere.
So if investors are shifting, and as you mentioned, you think AI moving into this infrastructure space, that's going to be the focus, where do you think investors are underestimating any of this infrastructure play? Is it the length or how expensive the build out really is?
Well, unfortunately, the answer is very obvious. We still have no mass market product to fund any of this. What the companies have is not defensible. There's no moat around it. And therefore, the ROI is very much unknown. If we take the hyperscaler infrastructure spending that has happened and is planned, it implies $600 billion of amortization expense just by these hyperscalers. That's larger than what those companies earn today. So we have to go back to the fundamental question: how will this be used, and how profitable will it be? And it's not that these technology is not transformative, but the key qualities of it is generic and it's non-proprietary. And historically, to scale a commercial opportunity, you start with something that's complex and proprietary, and that's not what we're seeing in the core technology.
So when we see this shift into infrastructure, who pays that bill first? Is it the hyperscalers? Are governments paying? Is it enterprises?
So far it's the hyperscalers, and these hyperscalers are the most profitable cash generative corporate entities on the planet. And this is why the step up in spending this year was possible and why it could happen so fast, because the cash is just in the bank. Going forward, it's going to have to be financed, either equity financed or debt financed. And that's just a harder constraint to keep all of this spending going forward.
And the other big theme that we talked about for most of the year in AI, and whether you want to include the word bubble in that conversation, is all the geopolitical risks that we've been seeing this year. And we have geopolitics matter so much more than I think we've ever seen, especially in the last couple months here. How should investors be thinking about them as it relates to their investments, particularly in the international space, because we have seen outperformance there?
So that's a great question, because everyone is very exposed to these mega caps and this AI narrative. And it's a source of anxiety because we've never seen such a small group of stocks dominate global portfolios. So the I go abroad, internationally, for example. I think that's very hard. I think that the geopolitical world that we're now in, which has become a patient containment of China, implies that globalization is closing, not opening, and that makes it very hard for the non-U.S. economies to work well. The hard reality is that it's the U.S. economy that's doing well. It's the U.S. economy that is reflating. There are possible winners from that abroad because reflation benefits cyclical value opportunities. But the point is that even abroad, these opportunities are led by American reflation. If a problem there emerged, the rest of the world's economies are far too precarious to be a genuine source of diversification. So I think if anything really happens to the U.S. market, and the mega caps in particular, there will be no hiding, even internationally.
Michael, we appreciate you joining us in the studio today. Really interesting insight there. We really appreciate your insight on that one. That is Michael Grant from Calamos. Thanks again for joining us here in our Chicago headquarters.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you. With unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Welcome to Schwab Network, where real-time market coverage is expert strategy.
From the opening bell to the closing bell, we've got you covered.
Inside the minds of pro traders.
The point is that they're getting a higher rate of change in sales based on their guidance, not the same rate of change in ETFs.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
The show built for action. Break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way you're going in earnings.
So that would be a further downside area to watch.
On insight, actionable data, educated, and trusted financial tools. Streaming live and online.
Schwab Network, streaming 24/7, any stream, anywhere, free. SchwabNetwork.com.
2025 kept investors on their toes. Now, get ready for the road ahead. Join Schwab panel of experts on December 11th for 2026 Market Outlook. Your guide to the forces shaping stocks, global markets, inflation, rates, and more. Hear from experts on where the markets may be headed, spot opportunities, and see what could drive your portfolio next year. Tune in on December 11th at 7 p.m. Eastern on Schwab Network.
This is Fast Market, built for traders who want more than just headlines.
We walk you through trade ideas, the structure, risk management, and a focus on execution.
From options to earnings to volatility plays. You're hearing decades of trading experience in every sector.
With real-time insight across products and sectors, we deliver what active traders need to stay ahead. Fast Market weekdays at noon Eastern, live on Schwab Network at SchwabNetwork.com.
Welcome back to the Wrap. I'm Jenny Warren. It's time now to spotlight the biggest stories and takeaways across the market. Let's welcome to the team from Charles Schwab, Director of Fixed Income Research and Strategy, Schwab.
Yeah, there is a flurry of central bank meetings. It's likely to highlight the divergence at central banks elsewhere. The Bank of England is likely to cut, but they might be close to the end of the easing cycle. The ECB is likely done cutting. The Bank of Japan is likely to hike rates. And so the Fed might be an outlier in terms of the large-scale central banks continuing to cut rates next year. So that could keep downward pressure on the dollar and boost international stock returns. In terms of the PMIs, we get the preliminary December PMIs later this week, and it could show growth remaining resilient, particularly the Eurozone. The Eurozone composite PMI rose to the highest level in 2.5 years in November. So credit growth in Europe is also rebounding, and we could see a rebound in economic growth in Europe next year.
And Kurt, just everything in mind with regards to what Michelle just laid out there, with, where all these global central banks are up to with regards to their rate cycle. I mean, you've got BOJ that's hiking, you've got now talk at least of some speculation in the market that the ECB could potentially even have a rate hike on cards next year as well. I'm just wondering how you're looking at sort of global fixed income in that context, particularly when you look at the bond market here.
Yeah, so if you look at the global fixed income market, obviously 2025 is a pretty good year for most fixed income returns, but that especially applies to international as well as EM. A large part of that was because of the decline in the dollar. So if you look at total returns, it can be a combination of the income you receive, the price you receive, and then also on the international front, changes in the currency. So given that there was some downside on the dollar this year, that really was a positive for 2025 fixed income returns on the international front. Now, I would not be too surprised if we continue to see a positive returns for international bonds going forward, given that there is potentially more downside on the dollar. So we can think that it can be an area to focus to pay attention to in 2026. Overall, Sam, we do have a positive view on what's happening in the fixed income markets next year. I don't necessarily think that it'll be as good as what we saw this year.
Alright, so I'll be right back.